My Swiss timing tells me it's 9:10, so we should start. Good morning. In the name of all the senior editors of GAR, I would like to welcome you to this year's Ray Ball Journal of Accounting Research Conference. I'm very pleased to see Ray in the audience, and I'm very much looking forward to this conference. As you know, we have a theme for the year, AI and large language models in accounting research. And we have received a lot of submissions. So when we made our selections, we tried to pick papers that we think tackle interesting, relevant questions that hopefully move the literature forward, but also offer ample room for discussion here at the conference. So over the next 2 days, we're going to hear and talk about how AI and LLM affects the daily life of accountants, how it influences the reporting function of management, how it helps investors in their decision-making, how it is used for financial analysis. We also will talk about the pitfalls, the potential pitfalls, like the well-known looking ahead bias, and hopefully gain some insights there. So the purpose here is to move the literature forward. And as you could see, many of those papers have a decisively descriptive flavor, which I think is also a function of where we are with regard to this research early on. It evolves incredibly fast. So we simply want to get an idea of what is going on. And I hope, or we hope, that these papers help us in doing that, help us to provide new insights and hopefully push the literature forward. Now, before we start, I would like to acknowledge a few things and people. So I would like to start with acknowledging the support of the Jacosian Accounting Research Center for the journal for this conference, which is very helpful. And I also would like to single out one person who is not in the room probably at the moment. So you all know Lisa Heiberger. You have received many emails from her, but she really is the person that keeps the journal up and running on a daily life, and she has put a lot of effort into organizing this conference. So I'm sure she is doing something outside, but I wanted to acknowledge her in this point. Now, I also want to briefly talk about a few editorial changes at the journals. At the journal. As you may have heard, Christian Leutz will be stepping down from his role as a senior editor at JAR this coming June. Now, Christian has been a senior editor for many years. He started his tenure in 2011, and since then has overseen and shepherded through the process many projects and many manuscripts. So if ever you had the chance of being on the other end, I'm sure you have seen how much effort and guidance he puts into helping you, guiding your paper and your study through the project, through the process. I also want to point out his incredible role in pushing the journal forward. So he was one of the drivers for many institutional changes at the journal. Just to name a few, I can think of the governance structure that we now have in place at JAR. And if you compare that to what was in place in 2011, it's a completely different beast in terms of how we deal with the papers, how we try to ensure that each of you gets a fair shot. And that's certainly something that Christian has contributed to. Another thing I want to point out is the data policy. I know many of you probably complain about the data policy because it's another burden, it's another cost. But we see this also as one way as keeping pace with what's going on in other areas. And we see this as one way to improve our research, improve our responsibility as researchers, and push for more transparency. So I hope you as authors also can see it and embrace it from that perspective. And overall, we hope that this will improve the quality of our papers and hopefully also the impact of our papers. Another thing I want to mention that was brought into the process during Christian's tenure was the introduction of the registered reports technique. in accounting research, which is, again, something we have not seen before. So these are just a few. But in that sense, I think in the name of the editors, the associate editors, the reviewers, and hopefully also the authors, I'd like to thank Christian for his that said, I also want to welcome a new senior editor. Now, where's Anna? Anna Costello has started her term as a senior editor at JAR this January. She has been an associate editor at the journal for many, many years. So she brings a lot of experience to the table, and several of you already have her as her senior editor. So I'm looking forward to having her on board, the new experiences she brings to the journal, and I'm also looking forward to seeing her help us shape the future of the journal. Welcome. Now, without further ado, we want to turn to the purpose of this conference, discuss research. Quick reminder on the format, so it's workshop style, 1 hour and 15 minutes. The presenter will moderate the room. So unless there is something I feel I have to push the discussion forward as moderator, I will not say anything. And we also will have a 5-minute uninterrupted introduction so that each presenter can lay out the land in terms of the paper research that they're going to present. With that, I would like to welcome Jung Ho, who is going to present his research with Loic.
Thank you. Can you hear me? Okay, good morning, everyone. So thank you for giving us this opportunity to present our paper at the Rabel JAR conference. As being introduced, my name is Jung Ho Choi. This is a joint work with Loic at MIT. The title of the paper is Human plus AI in Accounting, Early Evidence from the Field. We are so excited to share this research with you today and also get your feedback on it. As the theme of this conference indicates, generative AI already shows some potential for accounting through its capability of processing and generating a large amount of data, including text. In this paper, we take an input-focused approach, and we are asking a question: what would be the effect of generative AI in accounting work? As a sub-question, we are really interested in how generative AI affects the nature of accounting work, such as labor productivity and time allocation. Also, we are asking what is the implication of those potential changes in work practices for accounting outcomes, such as financial reporting quality. Lastly, we also ask how accountants right now interact with generative AI tools to really influence those outcomes. This study surveyed hundreds of accountants to first glean some insight from them, because right now adoption easy verbing, maybe good time also get some feedback from the practitioners who are already using those tools, and then try to triangulate those insights with a stylized model for empirical prediction, specifically in the setting that we are working with, this AI-assisted platform. So why do we think actually generative AI can affect accounting work? Because it's a little bit related to labor, we bring some labor economic theory as well as accounting theory. Two key components we are interested in here of generative AI for work, and also building on the recent paper, Generative AI at Work, PJ paper, is machine learning and large language model. I mean, as the name indicates, machine learns complex tasks, but importantly, without being explicitly programmed. This is very different from previously. If you think about how we do some of the work through the computer, we have to codify everything very precisely to conduct some of the tasks. However, right now, machine learning technique really allow us to do some, even not coded initially, but still the machine learning tool can do some of the work. Also, large language model, given that a lot of accounting data are text, really open another door. The combination of these two key features of generative AI really allowed generative AI to conduct not only codified or rule-based tasks, but also unstructured, maybe context-based tasks that we are actually dealing with here as a accounting task. When we think about the interaction between human plus AI, we actually go to the task-based approach. In other words, in the previous actually technological innovation, such as computer, people talk about accountant as white-collar job, and then the demand for white-collar job, such as accountant, was increased in 1990 or early 2000. However, right now discussion is going to the direction where generative AI might be different, such a way that intelligence demanding tasks might be affected. But when you think about this relationship, it's not that we are just completely replacing or completely augmenting the occupation. It's more at the task level. Some replacing, some augmentation, and some recreation. So that this interaction is what we are interested in this paper. We are taking a multi-method approach to answer this question. One of the reasons at the beginning, as we discussed, the technology is just evolving. Maybe we don't have enough archival data, like the 10 years of the data. So how we can actually still glean some insight? The first approach we are taking is survey. We first want to actually go to the practitioner, how we actually think about and how we are using right now this technology. However, we are not stopped there. We're also using economic theory, try to structure what that means in terms of empirical prediction, specifically in the context of the setting we are interested in, early stage of accounting processes. Finally, based on the gleaned predictions, we are using this platform field data as well as frame field experiment to understand some of the questions we imposed at the beginning. Lastly, we are using this frame field experiment. One of the reasons is that many of the people in the room probably studied fraud or error or restatement. Identifying even what is error or fraud is very difficult, challenging in the real data. And here we even want to say this is AI error, not the human error. So the one way we approach it is you simulate it through the frame field experiment, some AI error, so that behind the scene we know this is an error or noise, and then see how accountant is responding to it. So this combination of the methodology hopefully give us some comprehensive picture, but at the same time, as Lucy initially mentioned, it could be very descriptive. And so that maybe in the future, we can add from here to how we can actually then design some corporate governance compensation structure based on this understanding of how right now human and AI interacting. That being said, I think actually I spent a little more than 5 years, 5 minutes. Oh my God. 5 years actually. How can I do that? Okay. Any question actually you have, actually please ask me. And I could. Yeah. Phil?
I'm not sure if you got to this yet. It didn't seem like 5 years to me. So if you get to some outcomes, like say labor productivity or something, so I'm wondering about the following issue, which I don't think does apply that much in your study, but I just want to give you a sense of it. So like way long time ago, let's say people were looking at different ways of giving people incentive compensation. And they claim, oh, I've done this study and this method, seems to work on certain outcomes. But the thing is, like, corporate be checking a lot of stuff at the same time. So then you might not be so sure that it was really this one thing that was. So is that a problem here or not a problem? Like, is it the case that when there's this change toward the use of Gen AI, does it tend to be the case that, either the client firms or the supplier is, they're changing other things at the same time?
This is actually a great point, actually, Phil. If I understand correctly, that even in our setting or in general, maybe some of the firms right now adapting this generative AI that we are going to use, in this case, also on the slide actually indicating 79 firms, they might actually optimally not only applying this generative AI tool in their accounting function, they might also change other things to actually make sure that this is optimal overall their structure. So in that sense, probably we are limited when we actually only look at that analysis, how we can tie everything to the generative AI. Maybe there's a combination of this package that we are actually introducing to the company might actually changing different things. Again, go back to Phil, your point, the labor productivity or financial reporting quality. In that sense, therefore, we want to a little bit look at the same problem from different angle. In other words, if we are only look at that table, then I actually go back to Phil, your point is that we might not be really disentangle that issue. And actually in the literature, there is also additional discussion where we might not see immediate reaction in terms of labor productivity, because initially there's an installation cost or there is a transition cost that might actually preventing. That is why other the approach where survey or also the later some of the field data and transaction level analysis a little bit give us the sense of maybe this specific transaction level reaction might not be fully coming from the other things, more actually how they are interacting with the screen, and then there actually we can also glean more isolated picture. But in the end, when we actually put together all things, we might actually have some better idea about that, but piece by piece, we actually definitely have some limitation. Thank you.
Do the clients know that the firm is using AI?
Very good question. Yes, actually, clients know firms using AI because these clients actually come to this platform company in order to actually work with a platform company because they know that this actually tool might be helpful.
And any sense on what type of clients are kind of coming to these firms or to the firm? Like, do things change after the mix of clients?
That's actually a great question. In general, right now, the composition of the client, later we are going to talk about some majority of the client is a IT company. So Chris, actually go back to your point, maybe a few slides later, I can actually answer this question. Long story short, I think those IT company startup, they might be more willing to adapting this kind of technology, not only their own businesses, but also it looks like in their accounting functionality, because they have maybe less concern about some of the negative effects that they might actually experience. In that sense, if you actually wait a few slides, I can really point out what might be the negative concern, and then how therefore some other industries maybe slightly hesitate because they never experienced this in, and also therefore they have more negative view about this technology. Actually, cool. Yeah.
Super interesting, Jung Ho. Can you help me a little bit think about productivity in your setting? And given that you show that the billable hours are going up,
yeah,
and that clients know that there is AI now being introduced, is it that the accountants are now starting to innovate or improve products, or how can I think about productivity?
That's actually a great point. So the one thing we have to be careful is that, as actually Felix you are mentioning, is that there is not only the bundled product, maybe they are adapting, but also there's a sequence where a dynamic actually response that initially they might actually try to improve some of their productivity in one angle, but how we can also see that at the same time can be used in other actually settings. So related to that, actually, one of the innovations where I list actually relative to the prior paper, No and Zhang, actually Nature paper in 2023, or even actually QJ paper recently 2025, what we actually tried to do in the survey is that many of the prior studies actually look at exactly only that activity, so that they cannot really see how that save time can be used in other activities. When we do 277 account survey, we actually also asking how they actually use their overall time. And then there, Felix, we can actually go a little bit to your question that how they're actually using that same time to the different activities. Thank you. Like, I'll go to
building on Chris's question, now, given that we're working with this partner firm and they try to build a business case using this technology, and the customers seem to be keen on applying AI as well. Now, in your findings, or the partner firm also probably will use the AI edge in its marketing. So they will sell it with certain advantages and so on. Now, in your findings, did you find anything that is unexpected, or do you pretty much confirm what the firm is marketing its product for?
That's actually a great point. Maybe if you allow me, I can actually go to the two slides and then exactly go back to actually Chris and then your point with actually the evidence. And yes, actually one of the findings that we are having right now related to the French field experiment we are doing, the client firm didn't know the magnitude of that, even didn't know that it really existing in their platform in that salient way. And then actually after we talk about that issue, they actually noticed that. So let's actually move to the two slides and then actually talk about this with the specific term. So First, as I discussed with you, we actually asked, what do they think about, like accountant, this adapting generative AI, and then what's the potential impact they view. So the first thing first, we actually asked, are you actually using generative AI in their workflow? And again, 277 through the survey of vendor, and they are the accountant in the US. And then in terms of what accountant, we actually asked, are you actually, in terms of like overall, people think about accountant or auditor or on that code, the SOC 13, but just in general, how they think about the accountant. And for them, slightly less than half of the survey participants say that they use generative AI frequently in their workflow, but there is a huge variation. Top 10% use generative AI numerous times a day for their work. On the other hand, the bottom 10% never use generative AI, and this is the variation later we use to really see how this usage is associated with their work allocation, and go back to later Felix question. And then we also ask where they use this kind of generative AI, and two work-related, directly work-related tasks are data entry and also financial analysis. On the other hand, all of us are also using right now generative AI for writing purposes. For example, ChatGPT, they also use business communication and administrative work, and they use the ChatGPT or generative AI for that purposes. Now go back to actually Chris and then Luci's point. I might actually just start from the bottom because that actually we discussed a lot. When we ask what are the potential concerns that these accountants have when they use to these technologies. So this is an expectation or perception. And three key top concerns they mentioned is AI error, data security, and job security. So those show up very importantly. Now go to actually Chris' point is first, some of the company right now adapting this technology, they might have actually less concern about it. Maybe it's because of their understanding, or that can be also because of their belief. By the way, we actually tested how much this concern is related to their adoption or usage decision. As you can imagine, negatively correlated, meaning that go to actually Chris' point again, the belief about the startup company might be really affecting also their the adoption decision. Now, in terms of the AI error, I can actually more discussing later, but just like a glimpse of it is when you actually use ChatGPT, probably some of you already experienced, when you type exactly the same prompt in the ChatGPT, sometimes they give you slightly different answer. That is what I mean by here AI error, where I have to actually use the term. Please let us know what is the better term. We are thinking about either AI error, AI noise, or AI white noise. But overall, what we actually mean is that actually the client firm didn't fully grasp the existence of this issue, how we found it. We wanted to do the frame field experiment, so we created this like a 50 different account, and then we injected exactly the same information. By the way, this is why in the archival data, this kind of error detection is a little bit challenging, because let's say you're finding slightly two different answers because of the two companies. You don't know it's because of the history is slightly different somewhere. Therefore, this is suggested differently. But in this case, we know the suggestion exactly, and then we actually finding the different the answer or suggestion. That's the error, and then quite for us other things as well. But surprise and also platform company didn't actually grasp, and then this is actually a good way. We also informed that this might be what they want to focus on in the future. Yeah, Anna, thanks for waiting, by the way.
Yeah, so related to these points, I think for me, what's missing in your paper is a good discussion of the demand side of things. So the demand for accounting services. And it seems like you are assuming it's constant. And if that's the case, then what you would see, you have an increase in efficiency. And so you have some displacement of, accountants that are, not using Gen AI. So it seems like that would be interesting to show, or at least have a discussion of, because the alternative would be, this is now just a differentiated product. And so you have some client firms matching with the accountants that are using Gen AI, and some that are matching with the firms that are not. So that seems like an important broader discussion of how Gen AI will impact the demand for accounting services.
I completely with you, Anna. So if I actually try to rephrasing also based on my understanding what you're actually pointing out, So right now, the discussion about labor consequence of generative AI is so difficult because of actually two reasons. So when we think about generative AI and then the labor outcome, if we only focus on this substitutability or complementarity or recreation, that is usually under the assumption, as Anna mentioned, let's say demand is constant, let's think about what did actually happen. Even that question is quite difficult in the sense that actually David Otter is actually the prominent researcher in this area. His talk next week at Stanford, title is called "Does Generative AI Augment or Replace Labor?" Answer is yes. So you see, actually, it's a very difficult question that how we can answer that. Now, at least in this paper, we a little bit try to answer that question, at least at the task level, how this each task might be a little bit more replaceable, a little bit more augmentable, or a little bit more recreatable. Now go back to Anna's point. On the top of that, now we have to think about how demand is moving under that condition. And also matching. Thank you, Anna. I will more think about the demand, but there is also matching issue. So we are going to discuss a little bit about the private firm, and at least based on our discussion about this, the platform company, and through that actually the client firm. One thing a little bit different from maybe public setting is a little bit also related to Anna's point is that for the public firm, if I think about the audit, public firm are not going to, just I have to carefully say that, twice auditing just because the price is low. Probably there's a limited number of like audit client and then maybe 4,000, 5,000. In this case, some of the client that they actually right now are getting is smaller company. They might not really want to have this very periodic reporting, but now this technology is somewhat helping them to do that, so that there's some possibility that demand is increasing because of that feature. But in terms of the matching, Anna will actually a little bit further think about whether actually exactly the match with this firm, maybe already a little bit belief might be affecting, but other factors might be affecting such a way that some of the magnitude that we are reporting should be very carefully interpreted. Okay.
It's not just the demand that's changing. I can also see how task supply would have a major impact on this combination of task supply and what tasks you do that will affect here what is going to happen. It's like Felix was pointing out that the billable hours go up, and you say that they're sort of find more time to do other stuff, client interactions, right? But that really only works if you have sort of quite a portfolio of tasks where, you know, imagine you had somebody who had sort of a more narrow task set. Then if you all of a sudden get to do more, then all I'm going to do as the management is just give that person more. And then that person will have higher output, but you're not going to have shifting to other tasks, right? So it depends a lot on what jobs we're talking about. And that's sort of partly also why Otter says it depends. Like it's really a function of what jobs we're talking about. And so in that sense, we're going to get very specific results that depend on what jobs we're talking about, what the task setup is, what the portfolios they do, and how the responses on the supply side are in terms of what we're going to see. And I think it'd be useful to talk a little bit about that also in the paper, how some of this may be specific to the type of tasks that we're looking at.
That's a great point, actually, Christian. So one way actually we can think about it is so far, so much actually we are a little bit accustomed to the client that we are dealing with. Just make sure that some of the this platform company and also platform company right now licensing this technology to some accounting firm, they're still very small and mid-sized company. So that usually one accountant, instead of there's a team of the accountants serving, let's say audit firm, if you think about serving the GM or large actually public company, there's a team of accountant really kind of try to allocate their the task differently, and then their team is actually really serving the client. Right now, some of the accounting firm that we are dealing with is more like a one accountant serving multiple client, so that accountant really designated to at least when you think about the one client, that client can think about one accountant in the accounting firm is actually working. Now, Christian's point is that maybe in our paper, still we can a little bit discussing as an organizational perspective, how we can also think about this supply side issue. Because yes, actually currently our discussion is much more thinking about the one accountant actually doing multiple tasks at the same time. But let's say there is actually division of the labor where one accountant only doing, let's say, data entry. What is actually implication? We'll discuss a little bit further about that. Thanks for waiting.
Yeah, no problem.
So it occurs to me that most of the panel C outcomes are long-term outcomes, right? Which I think is what makes your experiment,
That's
and
right,
that's really cool. But going back to this labor supply point, I mean, it could also be that, you know, the tasks for like a staff entry level accountant get replaced by Gen AI, but imperfectly. And I lay off all my staff accountants, replace them with Gen AI. The outcomes get slightly worse, but they're so much cheaper that, you know, the manager's happy with it. So it seems like just talking to this company and talking a little bit more about like what are their long-term plans as a team, what tasks Gen AI is capable of, what they're going to do on the labor side.
Yeah, that's actually a good point, actually, Stefan. So one of the things actually we try to do a little bit is that when I actually talk about the AI error, or I also actually have to admit that let's say if we have the long history of the data, and then somehow actually there is a possibility that also we can identify AI error because we have a lot of data, we might be able to really finding very similar transaction. Still, one is actually more generated error by the AI or not. So that's actually some limitation. In that sense, some of the paper right now in the field also like Stefan also looking at like a more long term and then related to AI, we might be able to speak more about as well, like not us actually, our researchers is about the job security or data security, as actually we discussed right now in this short term, maybe what we can speak about might be quite limited in the sense that this labor decision also quite dynamic, quite long term, so that that's why our focus, by the way, will go to this three component, automation of the routine task, faster completion of the work and deadline, and AI error. By the way, I didn't actually mention a lot about the benefit. So the top three benefits, actually the first two, as well as improved accuracy. So it was actually quite interesting. They say, you know, AI can improve the accuracy. At the same time, they concern that AI can generate another error. So when we actually go to stylized model, we can a little bit discuss about that point as well.
Building on this discussion, I think there's, given the breadth of your question, I see at least two ways where you could go. Like one is of course saying, look, I give you a little bit of early evidence of what people say, and I use that to motivate what's special about accounting, because we have these other papers that build macro models of how this is going to work. And so what you could bring in is motivated by some anecdotal evidence, what's special about the tasks of accounting, and then modify their models to give a broader sense for what we can expect in the long run with all the supply and demand aspects. And you're of course well positioned to do this, given that you do general equilibrium work in other works. But it seems a bit further away from much of the other evidence that you have here. And so the other avenue is then to be a bit more explicit on, yes, it's motivated by a broad question, but it's quite narrow in the sense that this is now early evidence that where we're just looking at those few that also selected to do this now, especially this company. It's a small part of the market. So all these GE effects will not really be binding there yet. And then your more micro model focused on that one account may be fine. And so in that sense, I think that fits better to your paper. It would necessitate a little bit of a clearer kind of narrowing of your motivation early on to exactly that point, so that we know, okay, then all of this evidence makes sense, and it's not suggesting that all is good, because we're neglecting many of the GE effects and the effects on those that didn't select to do this, etc. And I think that's a little bit of a writing or pitch point that you can use there to just tighten that even more.
Thank you actually that point. I might actually use one slide that I prepared to kind of resonating that point, and then actually move on to the next slide. So here I want to make sure that it's a little bit related to all your point actually got, so Matthias actually mentioned, also Christian as well, that what we actually hear, although say actually a content later as we go into especially the field data, we are probably much more focusing on these first two of the tasks they are doing. Therefore, that is why actually we have to a little bit improve our writing in such a way that in the end, more evidence we are having is this earlier accounting cycle, and therefore the implication we can actually give to the literature also much more focused on that, and also a little bit building on like Anna's point is that even the demand side, now we are really talking about this like 79 or small or mid-sized actually company, so that if the also demand is coming from the different group of the company, also the generalizability is limited, so that we'll actually make sure that what we actually right now speaking about is really this in terms of the content, really engaging in the first two activity, as well as also the target company who are actually right now trying to buy this service. Go back to also Chris' point, are the one actually mid-size and then small size. They also think that there is just some benefit because of, let's say, actually they already use this technology for other purposes. With that being said, now I want to go back to. Okay, so now how actually generative AI is changing a little bit of our work practices. I can go back to thank you actually Felix waiting quite a while. And we want to actually think about first labor productivity and more importantly later how the time is reallocated because that's the part prior literature a little bit less actually documented and that's the one so we can document a little bit better. So first, this is a little bit discussed already that we use the usage of AI in accounting, the one actually you saw in the previous slide, and that is the independent variable. Dependent variable is some proxy of labor productivity, total client, weekly client. That is total client is like how many client a accountant has, and also weekly client is in that specific week how many client the accountant really serve. And also the billable and non-billable hour is the weekly 40 hours relative to or actually how many hours they use. That is actually numerator, and then the denominator is actually whether there is a billable hour or non-billable hour. So in that sense, what you're actually finding is that weekly client is increasing as they use this generative AI tools and as well as the billable hour, but we didn't find the total client increasing yet. So this is a little bit the story where really developing, go back to also Phil's point a little bit that when they try to fully innovating their whole operational process, maybe they might take time. So that what they try to do right now is that for the existing client, using some of the saved time from, let's say, data entry, and then communicating with them a little bit more, also providing a little more services that will be shown in the next slide. But before going there, John?
Thank you so much. So I think I got the main message. I think it's convincing to me. Adopting AI is beneficial. I think a lot of industry professionals agree with that. They always ask me two more questions. When AI will fail? Like they always worry about, I think the consensus right now is they want to adopt AI, but they're concerned about which task they should use AI, which task they should still remain human. I guess what I'm trying to say is you're using the usage of general AI here. Can you break down to task level? Like a usage of AI in task 1, task B. Some of companies, they want to use AI to identify clients.
Yeah.
They have a team to identify clients. And some companies, like you said, using AI to do the data entry, data verification. So what I'm saying is, can you identify some scenario AI do not work using your survey? Like right now, I see most of the cases they use domain knowledge AI will work as beneficial to the company, but some industry professionals, they're very interested when AI will not work. By using at the task level variation, maybe that's helpful to show some evidence. So another question I always get from professionals is they're wondering what's the marketing value of AI. Like sometimes I feel like I don't know if I read their mindset. They want to do some cosmetic AI adoption. They really not invest in AI substantially, but they want to hire some hardcore computer science people in their team and to signal to your clients, okay, we're trying to adopt AI. But functionally, I just feel sometimes they don't really do some substantial adoption of AI. But what's the value of doing that kind of cosmetic AI adoption? Maybe you can help with that answer as well. I guess there's a lot of interesting stuff you can provide evidence for.
That's actually a great question. I actually go to the next slide and then also pointing out, like Sean, we might actually have some additional analysis to answer your question. Currently, a limited answer, but next slide can we use a little bit discussing your point. So in the next slide, we also take a look at now giving the 8 different tasks they might be able to do, how they're allocating their time, and that time allocation, how that is associated with the usage of generative AI. So one way to look at this table is that the dependent variable is the proportion of their time using each of these actually tasks, and the independent variable is the same as before. Now in the red box, especially the left, the negative number 8% and also 5% means that there's a reduction in their time to spending the data entry, also financial reporting, about like a 10 or slightly more than 10% combined. And then when you look at the right, actually two red box is positive, then they're reallocating that time to either the business communication or advice service. This is exactly go back to our discussion with Felix, that they actually reallocating their time to make actually more valuable activities, as well as also another way to look at it. By the way, this is a little bit related to maybe John's point, is that when we look at also these two tests, by the way, based on our interview or our conversation, and also I actually talked to the data scientist at one of the big four company. He's actually also working with many different teams in the big four. One thing actually he continues to hear is that Sean Carr's actually point, this data breach is so concerning that they really don't want to give everything to generative AI, so that they always want to bring the human in the loop. That means that therefore we also see this kind of allocation change where they are actually spending less time for the data entry. Maybe it's because generative AI helping them to actually collecting or immediately feeding and then analyzing the data. But at the same time, they're spending more time to the quality assurance. In other words, this concern is really real. By the way, if you're actually using any of the text software, and TextDome is one of the software recently, about 3 months ago, they get the data leakage issue. And then this is really real, so that the company, what they actually try to do, at least in this setting or survey, is that they always want to human in the loop just before anything actually really approved, so that this leak is somewhat actually controlled by the human. Jack?
When I sort of look at your results and I think about the tasks that people are being asked to do, one of the things that sort of jumps in my mind is that just people are happier with what they're being asked to do, that sort of employee satisfaction would go up a lot. That basically, if you think about sort of data entry, that's a terrible job. If you think about sort of managing data entry and understanding when the automation is going to work, when the automation is not going to work, that's a much more interesting and engaging job. And, I think that could be one of the themes. You didn't really ask about it in your survey. I think that could be something that's very important in terms of the rollout of generative AI, that you're just sort of making jobs a lot more interesting. And that can drive all sorts of things because you're activating people's brains and you're sort of getting them to think about these more complex issues. I mean, and that's something that I've, encountered in my own experience, sort of having people read things versus having people, optimize ChatGPT in combination with manual coding. Just the satisfaction with the job and the engagement of the individual goes up dramatically. And I think that, could help interpret some of these sort of supply, trends that Christian's talking about. So just
This is actually a great point, actually, Jack. And also, this is actually good to discuss, because I actually completely with you. And also, just like bringing the one contrast, actually, this year's MIT, the John Market candidate wrote a paper about generative AI affecting the material scientists. They actually finding the opposite, where actually the job satisfaction is decreasing as they adapting generative AI. Exactly, however, consistent with your point. What generative AI is taking out from that material scientist is idea development. Think about what they're doing is actually two jobs. One is thinking about what synthesis they want to do to two different material. And then right now, generative AI is suggesting, oh, these are the possible, almost like someone is suggesting to you that, oh, this is a hypothesis. Oh, by the way, what you have to do is to run all this regression and then figuring out actually this analysis. And then material scientists right now, generative AI is taking that first part, but still what they have to do is to go to the lab and making sure that mixing it, and then something is wrong, they have to figure out why is it wrong. So that they actually see the job satisfaction decreasing, as you mentioned. I'm also with you that probably accountant much more job satisfaction is increasing because what the job is taken by the generative AI might be much more routine, so that they might be more happier. So yeah, I'm actually with you. And then there's a contradiction.
So you talk a lot about substitution and augmentation, right? That seems to be a discussion that people use often. But when you look at those results, I struggle to interpret augmentation. So like say data entry, you can say that's a substitution.
Yeah.
But do you consider business combination or advisor service augmentation, or just you free up time that now you can do that task? Like are you doing something you couldn't do before, or you could have done, it's just that there was no time. So which result here, if any, do you consider evidence of augmentation?
That's a great point. So Rodrigo, right now in this actual slide, I might be not able to really articulate actually your question, I'll actually go to exactly the technology that they are using. And there actually, I wanted to go back to Rodrigo's question. So if you actually a little bit wait, then I'll actually explain this technology because that's the one actually I also want to really introduce. By the way, at this point, I really actually go back to all your point actually. And also, Matthias said, now we are really limiting to the very early stage of the accounting cycle that is actually bookkeeping or journaling or closing the book. Just in case, again, from this moment all the way to the future, any of the analysis is about that, very limited, and still we want to glean some insight, but they're limited, but then actually we can go really deeper and then uncover the what's going on inside and then go back to also Rodrigue's point as well. Also, what technology we are really talk about. Moment. So the in terms of like this platform that we are actually working with, one of the actually first thing they do is that they actually immediately automatically get to the bank feed, and then from that bank feed they can get the date and the vendor information or description of this transaction as well as amount. But then they immediately give the suggested category by AI. By the way, the next slide I can actually more elaborate. And then also this confidence score. In other words, how much AI is confident into this suggestion. Go back to now, actually, Rodrigo's point. Before, actually, yes, in terms of the time allocation, we couldn't really say much. But here we can say a little bit. Later, we are actually really testing it. That is, this confidence score. In other words, each transaction, let's say they are less confident. AI saying that, let's say, usually confidence score on average, we see more like 90, 95, or 1. But let's say one of the transactions that we are going to show you, this one is actually only 80%, and market was 365. I don't know actually what that vendor is, but exactly because of that reason, now the AI only suggesting some category, and then it says it's only 80%. What now actually human is doing, and also later we are finding, is that they really target those transactions. When AI is suggesting something, but AI also says that they are less reliable, less actually certain about that suggestion, that's where actually augmentation really happening. And then yes, here actually we can speak a little bit more about that. And also so far, probably you might actually think that LLM, we are saying, generative AI, we are saying, but where is actually generation part really here playing a role? Actually, this is actually one place where actually generation part is working. In other words, and also it's very interactive. What I mean by that is they're not only suggesting AI, this is a category. By the way, this is already happened maybe many years ago, how actually bank tried to using the Logi model to classify something. But LLM is helping is that this is actually the summary of the description. And in that summary, they actually try to convey that, oh, because of this reason, even the rationale that why AI is suggesting, specifically in this case, OP supply might be the right, the other expense might be the right categorization for that. So that now this interactive piece is really possible because it is generative AI. Because if you go back to the past where only the logistic regression is possible, we don't know why actually that, or someone didn't really explain to us that how that categorization is actually really coming there. So that's actually how this interactive part or augmentation is happening. And also like just like go back to I also like go to the Luci's point. Like in terms of the benefit, what did I actually somewhat less expected, or how I can think about this actually in the context of, let's say, how we can train the junior accountant, given that they actually more actually right now move to the review of like existing transaction. It looks like prior paper also finding that sometimes this kind of LLM software still helping the junior. And one reason you can think about here is that at least LLM try to explain why they're doing certain tasks, so that even though junior might not done this exact job before, they can still lead it. Almost like you actually look at how seniors are doing it, and then try to learn at least from observation, so that that piece also might be a little bit embedded in the function. Right?
Just to clarify here, because I'm struggling to understand this. What is the transaction? What would the human have done before, and what are they doing now? Can you?
Oh, yeah. Thank you. So the let me like in the past, what actually human did do is that they actually give the feed from the bank. Let's say bank statement, they get it, and then date, and then vendor, and also the amount is there. And then from there, they try to classify how this transaction can be journal entry, let's say cash outflow, as well as travel expense or cash outflow. This can be office supply. So that's how previously human did or accountant did. Right now, the initial categorization is suggested by AI, and then what accountant tries to do is that only review those suggested category and then approve it.
Some of that, what you were suggesting, like I think that's what Numerical system used to do, right? So I'm not understanding the role of generative AI there, where the model basically is a word predictor, right? But what is the next word? So, I mean, in that transaction, in that example, I'm struggling to understand the role of generative AI. How is it, going back to Rodrigo's question, how is it augmenting what the task of the human would?
That's actually a great question. Nemi. So if I think about your question, if I only show this slide, I'm completely with you, Nemi. So what Nemi is actually asking is that if we only see this slide, something is recommended from the Oracle system, and then like there's nothing actually really LLM generating something. But my understanding, I actually at least talked to the SAP engineer who actually worked at the SAP and then developing this kind of technology. Before, they didn't have this kind of explanation. In other words, they don't really explain each transaction, why they came up with this transaction outcome.
So I get that, but what is the relevance of that explanation for the journal entry? Because the journal entry is a sort of a mechanical, like a data entry job, right? So what is the relevance of this text to augment the data entry work?
So
it's telling me that that helps me decide what to do.
That's actually great. So my understanding is that in that case, what it is helpful is that not just human has to, so let's say the slightly different the workflow. The first one, the 365 market and suggested by other expense. And that's it. I don't know how to react it. Either I have to have an answer for it. In other words, like what actually what additional or correct category I have to go, but I still don't know what information I can more use to go to that direction. But what LLM tries to give us is that summarizing that vendor information that existing in the internet, and then give us explaining to those accountants so that accountant quickly get that information, but not only getting it, actually explanation, human language, someone is explaining to the accountant, that is actually interactive part and then help part, where actually we can use generative AI more better work. And also, let's say, I don't know actually whether they already provided, because I didn't see the Oracle's actually functionality, but without also confidence score or how actually AI is certain about their suggestion, maybe accountants try to actually read all the different categories and then they have to make their own judgment, where which one is more less informative or more informative, and then which one therefore they have to more time to correcting that transaction. On the other hand, the provided this confidence score help the human to allocating their time more efficiently, especially going into the risky transaction, at least suggested by generative AI.
Yeah, no, this has to do with sort of studying markets in transition. So, the Dunning-Kruger law. So the more you know something well, the less likely you are to overestimate your ability in that particular domain. So one reason you could be seeing AI being used, but for lower level tasks, is that humans are still not confident about AI's capability beyond those lower level tasks, right? So AI will expand, but right now it's being used for these tasks because that's where the accountants are actually confident that AI will do its job, which kind of suggests to me that looking at financial reporting quality, the highest likelihood result is that there is no effect. Because if AI was bad at doing its job as humans are using it, then AI would not be used, right? So one way of thinking about this is accountants don't suffer from the Dunning-Kruger bias. They actually know what they don't know, right? So
yeah,
that sort of puts a different interpretation on some of your tests. For example, if financial reporting quality worsening is not a cost or a problem with the AI technology, it's a problem with the humans who are using AI technology. That's something worth keeping in mind. And it also tells you that other than the desirability of this job, which I agree with, other factors are also at play, which is the extent to which humans are comfortable with the use of AI.
Yeah.
Not, in some cases versus others.
This is actually a point. I can actually a little bit move to this one related to, we actually built some of the model, but sake of the time, actually, I already discussed with the Nemi and also Rodrigo about what is actually really AI is helping and then how we can think about augmentation. One of the things is that this competence score really helping us to allocating our effort to the actually more risky transaction, and there we can correct it. And then that's the one benefit. And also, like go back to Scada's point, let's say we can also somewhat know what we don't know, and then there actually we can delegate some of the tasks to the AI, and then get the benefit of it, maybe in terms of the augmentation as well as some of the replacement. Let's say we have some confidence in how actually AI probably can do it, because let's actually delegate that. So related to that, actually two pieces. By the way, a lot of the numerics instead of actually go there. Some of the inequality we actually derive from this like a stylized model actually pretty much actually tied to some discussion we already have with actually Nemeth and Rodrigo. That's the middle piece, faster completion of work or deadline. In other words, we can actually a little bit use AI's help. And by the way, in that sense, this parameter P, I just like to mention as a the term, this is actually human expertise, that when actually AI is still suggesting this is a risky transaction, still human's ability is very important to actually really correcting that transaction. That is why still this is an augmentation, such that AI helping, but still human is using their ability. Now, another interesting piece is that the signal improvement, in other words, when I also discussed with the Nemi that what actually AI is helping is that already probably human came up with this some of the categorization initially, but now AI first give this suggestion, and then human try to review it and correct it. And in terms of that suggestion, now you can see that Q is more related to AI accuracy, so that if the AI or even the Q and P, the human believe that AI is not better than us, but still probably giving the similar quality of the suggestion without me actually using any of my cognitive effort, then we can also delegate that piece. And that's why actually this first term is more related to there. But in that sense, however, this inequality quite simple, pointing out a few subtleties that actually we discussed earlier. What is replacement and what is augmentation? In a sense that this P is human accuracy, but where human expertise is show up in two times in completely different a sign, positive and negative. In a sense that replacement, where already human is able to do it, but go back to Scada's point, they're comfortable enough that probably AI also can do exactly the same job, but without my help. And in that case, therefore, replacing human's expertise is P. But at the same time, exactly that P, human expertise, can be even augmented such a way that AI helping us to go, which is the transaction we can go there, and then we are using human's expertise to do that. So under that condition, let's actually think about what is then actually this kind of work changes, where collaboration between the human and AI can change financial reporting quality. In order to test that, we actually go to these 79 companies, and they are adapted, go back to our earlier discussion with Chris, in different point in time, to this platform, as well as also platform's internal content. Probably they are switching from the previous accountant who provided this financial reporting service to them to this new platform, and then this staggered implementation is the setting. We try to study this. Right?
Yeah, this is just a small thing about the model. When I read the paper, I didn't really see the value of the model so much. I'm just not sure you need it. I guess it's more of a comment than a question. I didn't see what the sort of unexpected insights that came from the analytical.
Thank you. Yeah. So we actually try to relate it to a little bit Nemeth and then Rodrigo's actually question that when we're actually moving from the overall accountant actually setting to this specific setting where we're actually using this platform, then we will try to lay out that platform setting with actually some mathematics to really strengthening what we actually really talk about, and then some of the empirical prediction. That being said, also we actually keep thinking whether this is actually necessary to in the main body of the paper or other section. And one thing I still want to mention is that currently what we actually try to make the argument might be still somewhat intuitive, and also we can actually understand that. But after establishing this of the relationship, none of you might already thinking that direction. What is the good compensation structure under this setting, or what is actually corporate governance structure under this setting. Maybe this actually inequality, although right now simple, can be added those incentives to further the insight we might actually glean to. So that's actually also we are thinking about, but that being said, at current version has some limitation.
More of like clarification about the model. Is it the case that in your model, AI is kind of a model that's providing additional signal about in terms of probability that the transaction is classified? Kind of like the confidence score.
Yeah.
Are you saying that's, you know, the difference between generative AI versus, let's say, some other software that helps human beings is this kind of, you know, this confidence score in the sense that like past, they, you know, the system just suggests whether or not, you know, this transaction should be classified as this or that, but now it can give a confidence score, so it just helps, you know, just sort of provide a more detailed information, something like that.
Yeah, detailed information, and also one more thing actually related to generative AI is communication. So that not only actually information is provided, it's communicated through the human language, actually more helping the human engaging in with actually that information and then take on action.
That part doesn't seem to be in your model.
Yeah, it's not. Yeah, exactly.
That's the point. You know, if you really want to do some sort of model, maybe you should add this. This is also like characteristic of generative AI, differentiates that. Let's just say some other additional.
Thank you. Actually, so in other words, like maybe what generative AI, as I discussed, the key part is more related to the communication, and then how we can actually bring that part into the model might be actually making model more useful and more tied to the generative AI, not just actually more information. Thank you. So this is actually a setting, as I mentioned, Tarka company, the adapting as we discussed earlier, and then in that actually we are using kind of well-known DID setting, and then we are using also financial reporting quality proxies, accuracy and timeliness, and we are using also 79 companies monthly data from 2023, 2024. So we choose accuracy and timeliness. First of all, timeliness probably somewhat makes sense given that they spend less time to certain tasks. They might be able to finish earlier, so that we actually count number of days they use to close the book. And in that sense, the second column, as you can see, about a week they can actually reduce as they start to use generative AI into their closing the book. And before using that, they actually took about 2 or 3 weeks, so that this is about 20% improvement in terms of the timing.
So I have a clarifying question about partner firm in terms of thinking about how to interpret the results along these lines of these broader market dynamics for the accounting services. So because the partner firm has these 2 lines of business, right? Like the in-house accounting that uses the platform and licensing this technology to other accounting companies, do you have a sense of, you know, how much of the business is what you guys are studying in-house versus the licensing? And on the licensing side, do you have a sense of whether those accountants externally use the platform similarly to how the in-house accountants use? Like maybe it's a bit more of just like a bolt-on when it's being licensed, or maybe like how the technology affects the accountant task automation or the overall demand of accounting services from their clients. Maybe that's different. I'm just trying to think about, you know, how to think about these different parts of the company's business, and then the part that you guys study versus the other part, which may be a bigger part of the business model.
That's actually a great point. I think one of the things right now happening is that they actually try to partner more with this actually accounting company. For that actually sense, we are actually hearing a little bit, go back to Sean's point, this actually data breach or a little bit different way to interpret legacy system. What I mean by that actually go to June's actually point. Those internal accountant right now supporting these clients, 79, they actually only working with this platform company, and they actually started using this platform for all their work. But let's think about, let's say, other accounting company, about 100 or 200 accountant, they had their previous legacy system. And what they try to do is they transition from the legacy system to this system. So one of the things they actually, one of the company, I actually know that accounting company about like more than 100 accountant, almost 6 months, they still actually experimenting it with only 2 or 3 clients. Basically, the reason is that how legacy system can be easily translated without any risk of the data breach. So yes, it is actually rare, and in that sense, therefore, some of the finding that we have can be viewed as because these companies, small company or the internal accountant didn't have any legacy system, so that they can actually quickly transition to this new system. Almost what you know before about the old knowledge might even preventing for you to adapting the new knowledge quickly. So that might actually happen for that actual new business style. We don't actually include that into our analysis, but yeah, also one conjecture can be the magnitude might be smaller or maybe taking longer time to go to the full capacity because of that reason, as you mentioned.
So these output tests, they are very interesting. And I was wondering whether you could run some of them holding constant the allocation of time across tasks at these firms. Because I believe that would somehow allow you to get at augmentation, which in general is very difficult to show. But you have very cool data, so you might be in a position to actually show that there can be augmentation when holding constant the allocation of time across tasks, which would be sort of controlling for substitution that's going on. Maybe that's a chance that you just augment these tests, because it seems that you have at a firm level the measures how overall time is allocated across different tasks.
Yeah, for weekly we actually have that, and also we actually have their clicking behavior, so that yes, actually we can do some of the analysis. Thank you. Yeah. Lucy?
Just building on June, do you have any concerns about selection bias, both in the survey and the empirical analysis? Because in a way, by construction, those internal accountants use the system, they probably are more prone in terms of using this technology.
That's actually a great point. The answer is probably yes, and then yes, in a sense that right now the sample that we are using are the one who selected to use it actually technology, so that there could be some the more positive magnitude that we are observing that might not be really generalizable for other sample where they actually right now not adapting because they actually view that the magnitude might be actually smaller for their actually adaptation. So that being said, at least actually we try to actually triangulate this. Later, we actually do some frame field experiment. There we can actually randomizing these things. But at the same time, we also try to glean on right now a few papers also coming out in other occupation. And in terms of the magnitude, what they are seeing in terms of the productivity, Noi Zhang paper and also the Eric Bryn-Jobson's paper, the productivity improvement is roughly between 15 to 30%. So those are the numbers that also other studies actually right now documenting, so that we also try to use not only our setting per se, because our setting has some limitation, each table by table, we also try to actually look at other paper. By the way, our paper yet actually really bring that estimate into the paper, but in the future iterations, we might actually bring them so that at least readers can quickly see how we can compare in our paper.
Just on this point, one thing that I've missed throughout the paper is a better connecting with the literature and some of the other results in a positive way. I'm not worried about contribution. I mean, this is, I think, fantastic how you put all these things together. It's more about letting people better understand and put the literature and some of the other results. So, bringing out some the Danielle Lee and Raymond paper has a very different result than yours when it comes to sort of the expertise. And I think it'd be useful to understand what is different about your setting. What are some of the specifics of the tasks relative to what they did in their call center paper, which then lead maybe to different results. And I think that's really important, that we don't get this high level message, AI does this and that, but it's more like in this setting with these type of tasks, these are the type of results we're getting. I think it contextualizes it in a much better way. And there's not going to be a general result here that generalizes to all settings. So it'd be better to put the setting in context.
Thank you, actually, Christian. Yes, right now our writing probably a little bit should be improved. Exactly the dimension, as you mentioned, connecting with other paper and specifically pointing out some of the differences. As you mentioned, the other paper looking at the call center, they more see the unexperienced worker getting more benefit. In our case, actually more experience. This is a little bit go back to maybe our discussion with the Nemit and then Rodrigo, where this augmentation, in other words, still when you see the confidence score, it is the human's ability to correcting to the right account might still actually make this experience still matter in this context. Thank you.
I had a question about the unique accounts. It seems like a lazy way to respond to a transaction that you're not quite sure where it is. Well, I'll just create another account. And so I was wondering about that. A lot of the bookkeeping function, yeah, it's tedious, like Zach was saying, but it also allows people to highlight things that are not right and then have a conversation within the organization. Do you get any sense that this is tamping down on those type of conversations because now the system is telling me, oh yeah, this is a unique transaction. I should just create a new account or put it in this other bucket.
That's actually a good point. I think yes, that possibility might be there. Actually, I really want to point out, Jim, what you actually say with actually test like a few slides, so that I might actually go there the test and then actually pointing out, Jim, what you actually conjecturing is also true as well. In other words, first here we will want to see actually this additional account and then the possibility based on building on the prior literature, for example, Chen et al. In terms of financial statement disaggregation, how much that is beneficial. But on the other hand, as Jim, someone actually just creating the new account that is completely unrelated to exactly the nature, then that might be actually misleading. And then let's see how that might be also related to the AI error.
I was just gonna ask the confidence. Where does that come from?
Okay, so that's a good question. Let's actually see. So how actually within task, actually we can think about confidence score and then how actually that is used. So go back to actually Bradford, your question. So they actually try to first using the LLM suggested, but at the same time that has a lot of issue there. So they're actually refining through their own algorithm. For example, they actually also see their own the knowledge graph where they have the long history of the payee's transaction, and then this payee exactly the same the vendor, and then they also have the history where it is usually suggested almost the same account. Then they also adjusting, even though let's say initially suggested 0.9, they want to a little bit bump up based on that. So in the paper, we actually see those type of pattern. Just a second. Where what I just described is the first row where actually it is more matched. They also increasing their confidence score. So it is not just coming from the LLM. They also triangulate with other methodology and then coming up with actually this score. So that.
I actually had my questions around that as well. I just want like, they check that. Like, do you have any like? Did they do a random sample where they check to see if the confidence score is actually matching the accuracy? Because I know that you see that they're more likely to change the category if the confidence score is low, but also are the accountants themselves ever going and checking it when the confidence score is high, or are they just kind of leaving it and assuming it's right? And I'm just wondering if that is a good decision.
That's actually a great question. Lorraine, actually, this is related to the last actually test we are going to do. So currently, our understanding and the communication is that exactly that possibility is existing. In other words, look at the full story. Initially, what actually we discussed with the company is that the old screen where rationale and the vendor information, accountant really go through that actually in detail to really understanding whether this account is right or wrong. And then many of the accountant that actually we discussed is that they realize that AI is doing pretty good job. So that at some point they actually start to ignoring it. Okay, if the confidence score is higher, I actually check already 100 the account by myself. It's really good. But therefore, right now, at least their system is not the accountant level, but the company overall. At the end of the month, sampling a few and then checking the accuracy is still there. But just make sure that this is actually recent conversation I had with the engineer, but it looks like that might be not comprehensive enough that they actually quickly catching up it. And also just the more elaboration, as I mentioned, initially, even each accountant really tried to checking it. Probably they want to form their own trust into the this system, but it looks like they now have quite trust and then try to accept it. But now the company's worry is that, as you mentioned, when it is really accurate, they say it, but slightly there's an error, could be a problem. Sure.
So I just want you, going back to earlier comments, examining the AI adoption in different contexts. I was wondering how many contexts do you have? So you have the task. You already have task. You have different tasks. You can examine which task AI work, which task AI cannot work. That's one variation of context. And you also have the type of technology, right? So you can see which technology which help, which type doesn't help. So these are the great contexts. Actually, you can see when AI work, when AI doesn't. I was wondering, do you have like individual level characteristics? Like when you do the survey, like do I report my skills, my education? You have that. You can see the employee level context. Like, AI does not working for everyone. I feel like sometimes people just adopt AI naturally. Sometimes it takes time. So I guess, do you have the third measure, like employee level characteristics? and to help with the context of the AI adoption? Oh,
Yes, actually, we collected some of the demographics, like Sean, and then also this question with the Lorien. I actually want to answer that question with actually some side or research. So before going there, just one thing I can, this way, come back to the main.
Last 5 minutes.
Thank you. So the first, actually, just like in terms of the result, we already discussed with Demick and Rodrigo, when confidence score, the left-hand side or independent variable is lower, there, this dependent variable, whether a accountant try to intervene and then changing or override AI suggestion, that likelihood is much larger. So that really they're targeting and then using this information, and that is actually one of the example of augmentation. Now let's actually go to the AI error, and then this is a little bit go back to now actually Sean and Lorien's point. So what do I mean by the AI error, and what did we do? So as I discussed, like creating or actually identifying AI error is actually quite different, so that we simulated by ourselves. First, the setting is that we recruited about 24 accountant who are actually working as an accountant. We did the pre-screening, and then we brought to the our platform and then do this actual test. They all have this experience of doing this bookkeeping, so that they already know how to do it, but with and without this AI assistant. And then later we did a post survey to get their demographic. We didn't do that analysis yet, but one of the questions exactly related to Lorien and John, your point, we actually asked how much they, before this test, trust AI in general. So that we're actually thinking that probably if they're trusting more than they should, then go back to Lorien's point, maybe they really miss some of the error they should have actually catch. We didn't do the analysis yet, but we actually collected, so that maybe next iteration, we can do some analysis and then see what's going on. For that, and what is actually AI error we are talking about? So this is actually one of the examples. And by the way, we might have to say not the error, maybe white noise, that is American airline Wi-Fi. So you can imagine that can be travel costs, that can be telecommunication costs. Either way, it is reasonable. But what I'm actually meaning here, this can be still influencing the decision, is that in this case, we know that we provided exactly the same information. So statistical sense, as you can imagine, it's an error, or you can imagine this is a noise that doesn't have any information either way, but still this variation generated randomly by a AI suggestion. In this context, what we find is that this majority, minority, this diagonal cell have a lot of number, meaning that when, for example, transportation cost is suggested by the AI, and they don't know what is the alternative, where this actually telecommunication cost, accountant only see AI is suggesting this transportation cost. The accountant is more willing to accept that suggestion. Almost go back to Lorien's point. Let's say they're trusting a lot about the AI. Initially, maybe they checked everything, but at some point, okay, this is actually quite trustworthy. Why don't I accepting everything? Now that's the behavior we are actually looking at here. And then in that sense, therefore, when transportation is suggested by the AI, it is accepted by the human. And also if the telecommunication cost is suggested by the AI, now human is accepting telecommunication cost. This is actually a smaller piece, but if you're actually expanding from here, how this error can be asymmetry or symmetry, we can actually think about many implications to even accounting scholar. We didn't go that deeper yet. We first want to show even this phenomenon, what we discussed, Sean, and the Lorien existing. And again, one actual variation we can do is that later, since as Sean's comment, we collected trust in AI in these 24 people, we can actually do this cross-section analysis, whether those probably less trusting, they are the one moving away from this diagonal, and those actually really trusting are the one really staying in this diagonal. So we actually didn't do it, but that might be the interesting analysis we can do. So now conclusion. So in this paper, it is much more descriptive, but still we try to understand what would be the impact of generative AI in accounting work. And there are many ways we can think about, but first we gleaned some of the practical insight from the accountant, and three things we focused on: automation of the routine job, and augmentation, human plus AI in accounting, and lastly also AI error. Through multiple the methodology, we try to at least show some existence of it, and hopefully for the future research, how then existence of this accounting work changes due to generative AI can be also implemented into optimal, let's say, corporate governance structure or optimal incentive structure. Thank you for your time, and thank you for all the comments.
Now have a half an hour break.
How do I get that? But me, the advantage would be that so after I write down the notes, I feel like a transcriber, right? But it has to be with the AI. Hours you have to assign. Yeah. I'm ready. The big six are very hard. I wait right. It wasn't that much. It was like $800 US. Yeah. Yeah.
I'm not expecting maybe later like a better
kind of how it goes, right? I was thinking that.
I mean, I feel like I right now. Yes.
Last week I gave them like 10 minutes. How do you stop?
I was never like. Yeah.
Yeah, well.
But unfortunately,
100%. Again, if I did it without.
I'm pretty, these are my bags.
Okay. Yeah, I was saying that. Like,
I hope I feel like.
Because and they also can get shit done, honestly. You start in September and you apply for jobs next week. Right? If that ever gets created.
My name is still gonna be.
I really hope you get. Days not so much. I think it's actually January. Right. I think it's great, so. For you guys. We like it.
You don't have to.
Coming in with something. So that was the problem. But also that we have some disagreements with the expert in AI, right? I was saying AI. But I hope. I think, yeah, I think that's there, right?
Oh, yeah.
You only have 5 years. He has. But I need, you don't want to.
If I now.
One of them funny, the other. And it's just that.
Hello? Sorry, I got it wrong, huh? Hello? It cannot be even louder?
Yeah, I can turn you up.
Yeah, because my sound is usually low. Like, it's difficult for me to speak very loud.
How you like that?
Hello? Yeah, yeah.
That's fine.
Oh, another thing is that, can I, so if I,
I was, are you guys back to talking about?
Yeah, every school is. I think what the school will be very different days, because we are a very large town. If the I think that's usually clear because I mean, you can and then radical well, one because we did we have not recovered yet. So yeah, I mean, I think they're trying to very reduce
Which one?
hiring. You can hire. You can hire. Left. That was too late when she left. So that opening position.
Oh, yeah, I am.
My wife.
I don't have. I left now.
Anything that has a weird name.
I don't have middle name.
That's not really. And now they would have to go down and the joke like.
My dad gave
I've never been there, yeah. Her husband. Nicole, when people run out of baby, you all. Fortunately for you, there are no big. I would say an article. So I think that we're gonna start writing. All my play money, like my first 3 weeks, I had some money, I saw my apartment. Not doing anything. I feel like you need to have a little bit more time.
Oh my God, like,
Yeah.
by the way, thank you. Because my friends have always said that, and even she likes to do it looks like at some point. And then like, no, that you see how recently the audience is responding, you're responding, which is responding. Okay, naturally. I might say it's still higher. Thank you. Yeah, but like it's always like a, if there's a choice, like at first it's into it. I would feel like engaging is sort of. I mean, and I was a PhD and I thought that like a look test might be good, but as the kid goes through the Java market, well, full number of tests is not good in general. Maybe like a bad 2 months like a Korean, and I almost brought it for life into. So like a cool way to start. You might be like. So what happens is that the company. There's a alumni network. So that's so that like we want to our conference life and that we just the Europe the better in the future, they can now check with the data about firm right now. And then it's going to and also one thing to add is that the either for that's actually the best way to give of a company's perspective, if someone is doing that, they are not able to deny it, or what we really want is to subject to this what people do for that, but somehow the randomness one is actually let's say later adapting were not that. You check the design version but it could be something where the objective test, maybe they are both saying that, but somehow we can inject it both exactly about they're really not here. So they're very similar, but the premise is that they are
What's your idea? Okay.
Minus.
Mine's one exactly.
Again,
No, dude, you're not doing this. You're out of your.
Yeah, I'm doing a new project.
paper, nice. So right now, they're.
Okay, did I tell you?
And also, we do it again. It's like, I think that I really, there's something like, I don't know. We're just doing the island. And then taking it out, like
Right now, we have it like.
revenue, and also some of the major vendor I can guess. Feel they want to really keep it, but I think then.
That might be useful. But we're like, in a timely manner.
Then I agree. One year or kind of average, then I walking around.
This is already slide 10.
Yeah, exactly. Then I reply back. Probably much more. On the other hand, actually, it's a very high, meaning they already do. Not really.
Glad you got in, you know? Other noise.
Or a dark space today that. Because there's a.
I would tell them that out.
Probably at the end of the year.
I give me up, yeah. No, no worries. Hi, Matt.
Like the new.
And then, however, here we then hopefully. I oppose it.
No, I really, I'm like, oh, I don't know. We're just spending the same thing as you did.
Change.
Complain about it. I think it's funny. Very, very.
I don't think like actually give a rating. Only had go there at the meeting and I was down and like getting back in. Almost like a research project. Because I literally.
The dog yet?
And I know. I'm like, no, so no.
Let me go.
Yeah.
I have so many figures.
All good, yeah.
Like, no.
These are awesome.
Wrap it up.
What you can.
The job
Yeah, I like it. Yeah, we didn't really like. Then actually it's a really related to like the dynamic operating of your crop, and then there's like. If you have certain things that.
Exactly. Have to look at it.
Maybe that's my. No, I mean, no, I mean, it kind of depends on how. Like most of the time, you got like one eye over here. I would say. Like how there is something. Download data.
Sorry, I don't wanna think that, like. My dollar, you did. I laid up the bridge, we have, like.
Yeah, I think like. It's so hard. I mean, they kind of like my wife and my wife, I mean, thing is like you kind of. I think figure out, but she's like. Yeah, I don't know what I.
Wow. Oh, it's like I still. I was one person deciding. You've been to. Or it's like how it's like. Oh, yours. Oh, yeah, yeah. I typically like a year and you're very, very good. Sorry. Yeah, that's the whole thing. Yeah, which is yeah. Funny that actually has different. It's not a one. Yeah. It did like.
It was funny, I don't know if I keep saying, I talked about. Now I'm like, okay.
Meeting our next directive. You gotta go. Good luck, good luck.
Yeah.
Maybe you're next year.
Because they have hope, right? Right, I agree. Okay.
All right, good morning, everyone. We are going to proceed with our second session. Very, very nice to see all of you. And one observation I made during the first session is that whenever someone asks the question, Junho said, it's a great question. Okay, so you so far have been asking really good, really great questions. So please continue on the same trajectory. And with that, well, one quick announcement that lunch, of course, is after this session. It's on the 6th floor, and you can leave your things in this room. They're going to be safe. So yeah, with that, I'm very happy to introduce Shi Dong. He's in finance, and he's talking about democratization of trading. All right, so take it away.
Okay, thanks for the introduction and including our paper on the program. As Larry said, I'm from the finance side. It's great to come here to interact with accounting people on our joint understanding of AI in economics. This paper is a joint work with An Zhang and from Baruch College, Xiuming Martin from Washington University in St. Louis, and Cheng Zhou from Southwestern University of Finance and Economics. All of them are sitting in the audience. Okay, so my name is Shi Dong. So as Junho just presented a paper about how professional accountants prepare complex financial information. This paper is going to the other side. That's in some degree that we're talking about how ordinary investors use AI. Yeah, that's what this paper is about. The motivation of the paper comes from the fact that the rise of generative AI has ignited one of the most important debates in economics today. Will AI widen inequality or reduce it? Okay, given the claimed unprecedented power of AI, claimed by AI advocates, this debate has attracted attention of economists, policymakers, and leading technology and business leaders around the world. That we're tackling this question from the financial market side, how AI impact financial market trading. We study how generative AI might be reshaping the information gap between two representative groups of traders. First, short sellers. According to academic evidence, they are arguably the most sophisticated, privileged investors out there in the spectrum of all traders in the financial market. The rich. Okay. The second group of traders are the ordinary retail investors. We call it the pool. And our main findings suggest that there was a paradigm shift around the time when the AI became democratized. So, which is the deployment of ChatGPT, wide deployment of ChatGPT in 2023. Okay. We find that before AI like ChatGPT is widely accessible, short sellers has been already trading on some signals that is very similar to the sentiment that AI could generate nowadays by analyzing complex financial information such as conference calls. Okay. This sentiment can predict returns significantly. There's no reversal after that, suggesting that this are true fundamental, suggested this information are true fundamental information, and retail investors appear to have nothing, have no information about that. They do not react to that information. But after democratization, there's a shift. Retail investors trading becomes significantly aligned with this AI sentiment, and short sellers withdraw from trading on this signal, suggesting that this information become no longer a major informational advantage of this elite group of traders. And we show that information processing cost is behind this trading pattern change. Okay, and collectively, our paper suggests that generative AI reduce information gap between short sellers and retail investors. And we contribute to the literature by understanding AI as evolving technology. They have the potential to reduce inequality. To conclude my summary and build up the tension of our paper, I would like to put out 3 quotes from leading business and tech leaders in the world that are close or at the center of this AI revolution. First, Sam Altman from OpenAI. He says, I think AI very naturally will raise the floor in a big way. I hope AI can reduce inequality. And more than that, I hope it can dramatically lift up the floor in the world. Here, the floor in our paper is retail investors. And he also implies there's a ceiling. Who is the ceiling? The richest people in the world, hedge funds, short sellers. And market forces won't naturally produce AI products and services that help the poorest. That's the view of Bill Gates from Microsoft, the co-founder. And Eric Schmidt, from former CEO from Google, when he was asked to give in the view of the effect of AI, he basically says the rich get richer. Okay, that's my summary. Yeah.
Yeah, so interesting paper. I struggle with the hypothesis of a narrative of a democratization, because it seems like, whatever LLMs or Gen AI can do for a retail investor, that same technology can do vastly more for Goldman Sachs or for any institutional investor. And they're going to be able to put so many more resources behind these technologies. So, I mean, I think this is a narrative on democratization of markets in general. It's being pushed by fintechs, Robinhood, because they have an interest in getting retail investors to feel confident in trading. I really just struggle on its surface to see how that's possible. And even if you were able to find, like, in your setting, a signal that it seems that retail investors are picking up on more, that doesn't necessarily indicate democratization. I think most models would tell you, well, if some signal becomes sort of public, like the ChatGPT might be doing, then the more informed investors will just research other signals, and potentially the large language models help them extract even more valuable signals elsewhere in the sort of market for information. So I think I'd just be a little bit careful with the pitch, and especially with the conclusion, in light of sort of these broad economic forces.
Yeah, thanks for the question. I think you're right. Like, it's not about all the information. Here, I agree with you. We should be careful about what kind of information that has been democratized due to AI. I would say it's kind of related to the flaw argument here by some elements. Like the information we're talking about is kind of most straightforward sentiment information that the retail investor can understand. And Goldman Sachs can have the technology to process information in other ways. And in information economics, people study different kind of information. They have different implications. Like there's a different complexity or hierarchy. So they have different impacts in the financial market. But our finding probably can only speak to the fact that maybe the introduction of AI will make the low-hanging fruit. That is probably the simplest information that retail investor can understand, may become more democratized to those average traders. And then it's possible those kind of sophisticated investors move on to other types of information that retail investors still could not understand. But for the low-hanging fruit part, this kind of information probably become more democratized, and retail investor can use that. That's a
I don't know about this word democratize. I don't know what you mean by it. But if the floor raises, sure. But if the ceiling raises even more, then you're not leveling the playing field, right? The gap is actually getting bigger. And I think that's the construct you're trying to speak to in the paper. So I think you just got to be really careful.
Yeah, we're careful about the language of that.
By the way, there was exactly the same discussion about XBRL a couple of years ago. And you guys probably need to tie into that literature. The same discussion.
Yeah. Just building on this, I mean, you said like there's new information that comes out. It's low hanging fruit now that retail investors can process, but that information, the extent it's in price, which presumably institutional investors can get into price faster, then what is the value of retail investors processing that information again? If that information is already in price. If I buy the stock after the information is in price, what's the point of me processing that information? So again, I think it's related to the same point about democratization. I mean, the extent the prices incorporate information that is public, like I don't see the.
Yeah. So we don't observe evidence that the information is already fully priced in because, as I mentioned earlier, so this information that AI generated can predict a return in the future. So to that extent, it seems the information is not fully priced in, and so it's still useful for investors. Yeah.
So one suggestion I have for you is to sort of enunciate democratization of what exactly. So the way I was reading your paper, I got a very different picture where ChatGPT equalizes access to AI, right? It's not like AI equalizes access to information. It's more that ChatGPT being in the public domain equalizes access to AI. And I was curious to hear your thoughts about positioning your paper that way.
Yeah, in our new version, we're just trying to say this is the technology, not the information.
So then your front end is a little far reaching, if that's what you're saying, right? And I mean, I think even this more limited question is interesting, but if you want to talk about, does AI promote equality or inequality? That's a little different from this ChatGPT promote AI amongst retail investors, right? Which is, I think, descriptive of most of your evidence, that particular inference.
Okay. Yeah.
So kind of going back to Ed's point, even very broadly, I struggle with why is inequality the right construct? Like, let's imagine you make $800,000 in the market, I make $400,000. Inequality is really high. We could move to a world where we both make $300,000. Inequality is gone, but we're both worse off. Like, why is the gap what we're interested in as opposed to maybe the floor, right? Why is it the difference? Why inequality very broadly?
So we're now speaking to whether both worse off or get better off. We're saying
maybe you should be.
We only have limited evidence. Like if we talk about the average, like the aggregate worse off or better off. One way to think about that is whether after this introduction of AI, price become more efficient, information becomes lowered. Information asymmetry become lowered. This is like benefiting all.
So that's different than inequality, right?
So here the inequality in our context is just between the rich, the most sophisticated investor and the ordinary ones. Yeah, but we will think about whether we can go even further on that dimension.
So this goes back to Ed's point and Stephen's point a little bit of kind of like you look at trading on a very specific signal. And I was wondering, like the Boehmer papers look at kind of predictive ability of overall retail order flow on like a month-by-month basis. Do you have some sense on like whether retail investors in general is more predictive or less predictive, and similarly like short sellers, which gets to the point of kind of like, all right, you have these, it's like Citadel, all of these quant hedge funds are also investing.
Yeah.
Maybe all their predictive capacity, that just goes up in general. Like, I think that feels like it's kind of interesting to know just in general. And then I guess the other question that I had is that if retail investors are becoming more sophisticated and it's the Citadels of the world and kind of the major market makers of these algorithmic trading funds, you're investing in AI, are they now pricing this in such a way where it's like they're recognizing that retail investors are more informed and the order flow is more informed, and so they price it efficiently? I think these kind of get to some of the points on kind of the aggregate or overall impact on this in the marketplace, because it is kind of hard to believe that short sellers don't benefit from this at all in any sense, because they're investing tremendous resources as well.
Yeah, we're not saying short seller is not benefiting from that, but going back first in the beginning part of your comment, so Boomer et al. Shows that retail investor can predict short-term return without no reversal. In other studies, there are some kind of debate on whether retail investors are kind of smart or dumb. The measure we have is like just the aggregate measure of the retail trading. So on that part, we cannot say much, but in our study, we at least say that the retail trading becomes smarter in this particularly piece of information that easy for the general trader, retail traders to understand. And short sellers could move on to other kind of information, which is kind of implying that maybe in the past they couldn't, they may not have time, or they may not have the need to study those information. But now, since this low-hanging fruit kind of information is already used by retail more after the AI democratization, they spend more time to study other information. That could also benefit for the general financial market, but we don't go there because we don't have the data to address it.
Well, and just to follow, I think you do have, if you're using this Boomer measure, I think if like kind of retail investors are becoming less poor, you would expect their trades to be more informative on average, right?
In general.
In general, and I mean, this is kind of a natural thing to look at maybe towards the back of the paper, because it at least tells you like, does this actually make a big impact on their portfolios, or are they better off in this kind of very isolated?
Okay, I see your point. Yeah, that's a very good catch. Yeah, we can do that. Yeah, sure.
So we have a discussion here. That the technology benefits both institutional investors and the retail investors, right? So you are assuming they benefit more of the retail investors, less to the institutional investors. Is that unique about GPT? Is the only GPT benefit more about retail and less about institutional? Or all technology you are assuming is all benefits retail? So I guess my point is, if you replace the paper GPT with some other technology like XBRL or Google Bird, or Hugging Face, if you replace with other technology breakthrough, you see the same results, or you see different things. I think we go back to the discussion that is this unique about technology that benefits more retail, less about institutional, or it's about, I don't know, just.
Yeah, that's a very good question. Actually, when you think about that, actually I think the answer to that is that the technology is unique. Here we use GPT as a proxy of the generative AI that has been introduced after 2023, but widely deployed to the general public. Here, our evidence suggests that it's kind of different from other kind of technology that happened in the past, like even you talk about machine learning models, the accounting format, all those kind of things. So when those kind of technology make available, one obstacle for those kind of technology to be used by retail investors is that they don't have the resource and ability to use those things. For example, even accounting format become better, like the XP, like this kind of thing can only help short sellers to process the information faster. They would benefit more, and retail investors cannot use, if they don't have the tools to analyze this information, even the information have a better format, they wouldn't necessarily benefit from that. But the generative AI kind of get around that in a certain way, in the sense that retail investors now, they don't need to understand financial knowledge, technical, they don't need to have very high technical literacy. They just need to use human natural language to type the financial information into a chat box to gain some insight. So we argue this kind of is like a distillation. So that kind of is the unique part of this technology. Not every technology is going to bridge the gap. This technology might have some potential in that sense, and also it's cheap. It has low cost. Here the cost is general. Like if you talk about machine learning, thin bird, those kind of things you just mentioned, we probably need go to the University of Chicago to spend 5 years to understand how bird works. But for generative AI, we already have natural language to understand what is coming out of from that the answers of generative AI. So that's kind of what we understand from our evidence that suggests that this technology might be different. Yeah.
So it's unique about GPT.
Yeah. Or GPT-like AI. Yeah. Yeah. Susie.
Follow up on Eddie's point on short sellers. So you find this result that after Gen AI, short sellers start to trade less on this AI sentiment signal, and the interpretation given the paper is that it's because of a reduced information advantage. But I think if that's true, you should see increases in pricing efficiency, but you do not see that. So an alternative interpretation is that we know the short sellers don't like the stocks that are heavily invested by retail investors because it's really hard to predict their behavior, and sometimes it results in increased volatility or rational price swings. So it's not maybe it's not that they think there's less information advantage, but more that they're just moving away from stocks that are increasingly more held by retail investors. And I think teasing that out would be important because I think it will affect your conclusion about this reducing the gap between retail investors and sellers, right? Because if it's just the short sellers moving away from certain type of investment, I don't think you can really conclude that there's definitely a
Yeah, we definitely can think about some tasks to tease that out. But one thing I want to mention is that although the return predictability does not significantly decrease, we do observe the magnitude decrease because our sample is so short. It's like I'm going to talk about the detail later on, but it's 2022, 2023, and with the beginning of 2023 as the shock. So there's only 1 year of data. Statistical power is limited. Maybe as time goes by, we will see more things going on. Yeah. Yeah. Yeah.
I think a lot of the confusion stems from us not understanding exactly what democratization must mean some shared benefit between what the short sellers were getting and what the retail traders are now getting, but it's not clear what the benefit is here. What's the evidence that there was previously some benefit by the short sellers that's now being shared by the retail investors? That seems like that has to manifest in returns. What in your mind would be evidence of a democratization, of what evidence would substantiate a democratization of the trading benefits of this technology?
Okay, yeah. So before GPT deployment, wide deployment, short sellers trade on this kind of signals which we don't know. They make money out of it. They can predict return.
You don't know if it provides a benefit, right? We don't.
Here the benefit is like the signal can predict future return. So we infer that means they make money out of it, out of the trading. So their trading is ahead of the price movement. Yeah.
But if it persists as a predictive signal of returns, why do they stop trading on it? If they were making money on it before and it still predicts future returns, why did they stop trading on it?
As I mentioned to Susie's question, like it reduced a little bit. So like if you're working in the hedge fund industry, they have a high requirement on the Sharpe ratio of your trading strategy. So if this trading advantage becomes less obvious, then it's harder for those short sellers to justify to put so much of their resource or energy on that. They could move on to something better. So it's kind of they're not completely withdrawn from trading this. They just rely on this less.
Okay, so where's the democratization? What's
So-
the evidence that it becomes?
So the trading benefit, which is the alpha, which is used to be concentrated within a very selective group of traders, which is short sellers. Now retail investors can get the benefit of that too.
And that's going to show up in returns.
Yes.
I'm trying to wrap my head around this with a model. So how close or far from what you have in mind is this? And I just think of a Grossman-Stiglitz world where the release of ChatGPT is a negative shock to see the cost of becoming informed. Is that close to the story? Is that far from the story? Is that exactly what we have in mind here?
So it may not. It's related to that story, but we are not probably getting there yet because this is like only 2 years of data. So it's evolving. So short sellers, the traditionally the most informed reduce the reliance on the signal. That's what we can only observe. And then the retail people they are using the signal to a certain degree so that the price efficiency change is small, or at least statistically small. So how it is going to evolve, like the Grossman-Stiglitz world, we're not sure yet. Yes.
So, I mean, I'm puzzled about this too, and I think there's a couple of things that don't seem to add up. So first, I think one way to think about what you call democratization might be what we traditionally have thought about, like as information asymmetry between different players and the level playing field among players. So I would say that's something you guys should think about. And actually, if you'd asked me if I wanted to sort of pursue the question that you had, is I probably would have looked in liquidity first before I would have looked in return. Because I think that sort of ties in with what Ed's question was at the very beginning. But the thing that don't add up is sort of like the same question that Mark just asked about, or Susie, like why do the sophisticated guys seem to pull back here, and then the unsophisticated guys or the retail guys are still getting return, or they're getting a return and getting a signal, and why? I could sort of see that they're pulling back if somehow there wasn't signal anymore, or if this was traded out of the market, like I don't know, we were discussing earlier, but that doesn't seem to be happening here. So I don't quite understand sort of how this adds up, like why the sophisticated guys go back and the others trade, and then there's nothing happening to the profitability of the strategy. It seems sort of odd.
Okay. Yeah. So that's why we cannot have a very definite clear evidence to answer that by the withdrawal. So that we only have a conjecture. That is because the trading signal becomes less profitable. So we don't have a statistical inference, but only the magnitude is lowered.
You could at least, I mean, I think it would be useful to look into liquidity and sort of get a sense for what's happening here, because that would speak directly to some of
Yeah, we do have a test on beta spread. That one is narrowed. Beta spread is narrowed. So
yeah, I mean, we're going to come to that later, but yeah.
Yeah, right.
I do have a question, but Charlie has been.
Okay. Yeah.
Just following up on this, one explanation seems to have been provided by Ed earlier, which is that the presence of ChatGPT creates even better signals than this one. And so now they prefer to exploit that. And so it seems like the pattern of empirical evidence could be consistent with less democratization. Right?
For that better signal, it could be. We cannot speak to that, but that's why I agree we should be careful about our language. There are kind of there's a hierarchy of information using when ChatGPT comes to the market. This kind of AI sentiment information becomes available to retail investors, and then short sellers move on to some other information that they still can generate money, like a very strong alpha. That's possible. So on that part, maybe they still have the advantage. So how that plays out, we cannot speak to that. We're only speaking to this part of things. Yeah.
But
yeah.
That's fine. So
yeah.
Are you familiar with Subpenny for your thoughts?
Subpenny?
The Harvard paper where they show the Bomer map.
You mean that measure? Okay, yeah.
That's not cited. I probably cite it. But also, I happen to know working with a short seller that at least if you're trading in JPM's dark pool, the vast majority of their trades, even when those are in fact conditioned on information, show up as retail, according to not only the Bomer measure, but also the Subpenny fund. So
you mean
some case that short sellers are pursuing better X, and they're getting that better X via banks and things like that. And so what you're classifying as retail is actually.
Yeah, that's the limitation of this. Your point is the limitation of this measure. Yeah. We cannot know for sure whether this the algorithm picked up something that are not retail. So that's kind of the limitation. Yeah, agree.
That's been waiting.
Yeah, Beth.
I want to understand how you think about the nature of this information processing, because
the prompt that you use suggests that you think they're like literally saying, ChatGPT, tell me the sentiment of this conference call, process it. And I think it's possible, but I also see like in the surveys, at least in the US, they mostly ask what's happening with the market. Like they do focus predominantly on the market. So do you care if they're processing the conference call, or if really what this is doing is just making them more aware of what market movements are happening and they're really just going along with market movements more? So how do you see the nature of the information processing, and can you actually say anything to that?
So our paper cannot speak to how exactly they use ChatGPT, but we have some conjectures. One is that they obvious way of what they do is exactly they do what we did in our paper, that is put into the transcript to analyze the general sentiment. That's one possible way. The other way is that because the ChatGPT becomes more generally available to all people around the world, there are some training platforms, like in your papers, it's also like that. It's like people use that tool to generate some signal for retail investors. Like and on social media, I also observe this kind of phenomenon. Like there are some people, they're not short sellers, they're just like maybe influencers. They use ChatGPT to generate some signals to sell to retail investors at a lower cost. And those influencers don't have very high technical literacy, and they probably won't be able to use like very fancy machine learning models before. But once you have ChatGPT, they could use ChatGPT to generate some signal as an intermediary. They send the signals to retail investors. That's also a likely outcome, because our trading measure is kind of an aggregate measure. It's the total share of trading. So if you think about total share of trading of underlying stock, then if you are the bigger retail, you are going to be represented more in that trading measure. So those retail investors could process information by just using ChatGPT, or they could buy some signals from other people. But we do not differentiate that in the paper. But it's a good question. It's probably worthwhile for another paper.
It just to follow up on the discussion of the returns pattern, because it's quite peculiar. So it looks like it's quite steadily going up as you're increasing the horizons, and it doesn't really vary with your after. If anything, slightly it gets lower if you look at the magnitudes at the very end, but that's it. So then it doesn't really seem to be about immediate information processing, because there the speed should be substantially faster, even without this type of AI. So then it seems like we're capturing something which could be look ahead bias, but I think you argue that there is the cutoff. Then the other part is it could be capturing, of course, something that is related to risk factors. So you call it an alpha because you're saying you're controlling for everything else, but I think what these models are reasonably good at is looking at common factors and extracting these things. And with that, we're very close to risk factors to begin with, especially one important risk factor that we don't control so well within the standard risk factor models that we have is earnings risk and the like. And as soon as you have earnings growth risk in, and that's what your model captures, then it makes sense that this kind of tapers goes on and on and on as you expand the horizon. But then it's not clear that this is anything related to immediate information revelation. It's more we're capturing a certain factor. And then it could be, of course, that if they all understand the factor quicker, that should be priced in more efficiently or whatsoever, but we don't really see that from that pattern. So how do you think about that long and always increasing pattern of the earnings, of the returns going up?
Okay, yeah. In our current sample, which we kind of addressed, like try to avoid as much as possible the look ahead bias kind of concerns. So it's kind of we have very short sample. In this sample, the returnability actually stops at kind of shorter than 6 months. So it's kind of like a 3 to 4 months. The returnability in different tests it suggests different result, but on average, 3 to 4 months, this returnability becomes no longer statistically significant. So it could. So we're arguing this is probably still information, but we all know that in finance, if we have an anomaly, there's always could be some kind of risk explanation. Current literature cannot differentiate these two things. In our context, we probably cannot completely differentiate between risk or mispricing. Here, the mispricing is a little bit long-term, not too long, because it's like 4 months. So there could be some limits to arbitrage to short sellers. All those things is possible. It's like we cannot completely differentiate between risk limits to arbitrage and information. But yeah.
If it's particularly really about that information release, it could be also that you can try to use the sentiment from the last quarter and see if that just before the new quarter and you're announcing there that it's still predicting things and gives you similar coefficients, because most likely there's some kind of
shock.
There's still some covariance over this and some persistence, and that would pretty much point to this being more a risk factor explanation than information. Right now, by you starting at the information release time, you're kind of saying it could be the information aspect, but if you just look before and use the old, or if you use, for example, even the sentiment at the time of the release afterwards, but showed before, there couldn't be that information release aspect of it. So it must be that you're just capturing something that is related more broadly to the risk factor underlying. So you can shift this around a bit to as a placebo, and if you see a lot before it, it points more to the risk factor explanation.
Yeah. Not in the paper, we do have a test like this to get the shock part of the AI sentiment. That's the part that is useful to drive return. So that's kind of a little bit more supportive of the mispricing kind of argument. Also, the fact that if it's a risk, it's also probably a little bit harder to explain why short sellers withdraw now. So that's another piece of evidence.
If we step back and talk about democratization, maybe I understand maybe it's another paper, right? But what comes to my mind is about market participation, because an average household has not enough exposure to the stock market, and then maybe ChatGPT lowers the threshold for an average household to kind of get into the market in the first place. How do you think of this aspect on extensive margin of market participation, then on the intensive margin, retail versus short sellers, how much like disparity or in returns they get?
Yeah, that's a good angle. Actually, we only look at the trading in response to the AI sentiment. There's no way to tell whether the retail participate more in the underlying stock. But it could be actually a great paper which just say whether there's the AI shock will on average increase the participation level, like in the sense that it's retail holding of the stock going up in general, regardless of whether it's good news or bad news. That's kind of like probably a separate talk, but we should think about that. Yeah.
It's actually related to this point, because every time when I think about leveling the playing field, the SEC objective function is actually always about participation, the efficiency versus the equity, the trade-off, the discussion. So I always thought it's actually about the encouraging more retail investors to participate in the capital market. So from the very beginning, I thought your paper would pursue this angle actually.
Oh, okay. Yeah. Yeah, we will definitely think about that, whether we can include this this kind of discussion in our current paper.
Will you test this? How would you think that?
Huh?
Will you test this for the participation?
The participation would be like somewhat like the retail holding of the stock, whether it increase. But because we are using a normal holding, so we will think about that. So whether it's technically possible to test that, it's a question.
Yeah, so I'm still struggling to interpret all the collective set of results that you have together. But one other thing that I'm hoping you can speak to is it's not just that prior to ChatGPT, retail investors, their trading was unrelated to the signal, but if I'm reading what you're saying correctly, it was negatively related to the signal.
In some tests, only in some tests. But some other tests has no result, because so this is an empirical study, so it's kind of there's no a clear conclusion that whether they are trading against or they are just don't trade with respect to that signal.
And so
I will show you later on. Yeah.
If it is negatively related I mean, at least what you say in your paper, maybe in some tests, like that is kind of puzzle to me because it's not just that they don't understand the signal. It seems like they systematically make the wrong decision over and over again, which is a puzzle, right? And maybe then really what you're picking up with the signal is some sort of risk factor, because when you see additional risk, maybe people pull back their trading. At least that would fit more with the patterns that you're showing rather than.
So for the risk part, then the short sellers should have the same behavior. Right? It's like
I think this goes a little bit to what Bradford was saying, right? But the measure that you have for retail investors also has significant measurement error, and it could actually be picking up not retail investors but institutional investor trades. So if you put the comments together, then like it's.
But these two groups of traders behave differently. Right? So short sellers, they are trading on the signal before the GPT deployment. They're trading in the right direction. So even if retail investor picking up some short sellers, then this short seller is different from the short seller we are looking at. Because this short sellers that are hidden in the retail measure, they are actually trading in some tests, they're trading in the wrong direction. Not like the average short seller who are trading in the right direction.
Do you see the difficulty? I think collectively everyone's making sense of all the results together.
Yeah, I see your point, the return part, yeah.
So here's maybe one solution to try to resolve the inconsistencies. If you could offer another AI sentiment measure. Right now, I like that you're using a very vanilla ChatGPT 3.5, like with a simple prompt that, it's proxying for someone just pasting it into the web proxy or into the web UI.
Yeah.
But could you try to create another AI sentiment measure that's a little bit more sophisticated with some fine tuning or something? And then you could maybe show that there is a shift going on where the more sophisticated people are using a slightly more sophisticated measure of sentiment that couldn't just be constructed by pasting something into 3.5. And then it'll also help you because it'll show you where the sophisticated people are shifting. Hopefully the retail result doesn't move with this more sophisticated measure. So it'll solve these measurement errors that Bradford was worried about. So I think just getting more variation with a new measure of AI sentiment that's more sophisticated could hopefully resolve like the inconsistencies we're feeling.
Okay, yeah, we'll think about that. Yeah, Richard?
Something I was also thinking about, right? Because the rollout of ChatGPT is actually quite fast, right? And that there's a lot of different models filter out at different times. It's like March 2023, GPT-4 comes out, but only for people who are paying, which are going to be your short sellers, right? And so they actually have a better model than both what you use in the paper and what was actually available at the time. And that was available at the time is 4,000 word context, GPT 3.5 model, right? And that's what probably the retail traders are using. But the short sellers, they have a 32,000 context model already, right? They can do all sorts of things with it, but also it performs a lot better in general just on most tasks, right? And so they have a better model. The retail traders have a worse model, and you can maybe even use that to tease out perhaps some of these differences, right? Maybe just the worst models what is shifted to the retail, while there's better signals that are coming out of these better models that you kind of need to get access to, right?
Okay. Yeah. So the short sellers in our mind is like more like the sophisticated, really professional traders in a hedge fund. They probably the investment is much more than just $20 for the GPT, the paid version of GPT model. I was like giving a talk at some hedge fund conference. They're saying they're investing like billions of dollars in their infrastructure. There's no way academic can compete with them even on the same strategy. So we're talking about that kind of scale. So, but your comment is actually still valid. We can probably see probably a little bit difference. There's some models that are harder, better, and some models are simpler. That maybe we can look into that. The one issue of that is that the better model are introduced later. All of them have those kind of later cutoff, knowledge cutoff. So the look at the bias become.
At the time you did the study, though, right? There actually was a GPT-4 model that you could have used back when you ran this 3.5.
Yeah, we will check that.
That model's deprecated. You can't do it.
Okay.
Right? Yeah. Also, the 3.5 model didn't come out till November for public, right? 3.5 turbo. So that's another issue with study that your DID actually happens in November 2023 for the retail traders.
You mean the model itself?
The 16K context didn't come out to the end here.
Yeah, we use 16 contacts just as a kind of way of proxy for the retail activity. They could use other models like GPT-4, 4.0 or later models. So here we're just saying this 16K is kind of an average of the models that people use during this 1 year period. Some of them are free, completely free. Some of them are some of the retail investors pay $20. So that's kind of the average. Yeah, that's kind of our logic. Yeah.
So my question is not related to this, but so one of the important results in the retail trading literature is that retail investors trade too much. So I wonder, like, if your paper can speak to that result, that's the implementation of ChatGPT, alleviate the problem so that, retail investors on average better off trading. So comment on that.
Yeah, so that's kind of related to the earlier question, like Lisa and Lee's question about participation. That's kind of another measure, trading volume, like retail trading frequency on the stock, whether it's affected by GPT. That probably is a separate dimension of things. We could look at that, but maybe not necessarily in this paper, but we will think about it.
I think the question is different. So it's not about extensive margins. So conditional on trading, like some investors trade too much, so they're better off holding the market portfolio. So I think that's an important result in the literature. It seems that your paper can speak to that result. And if you can, then that will be another contribution.
But our measure is like an aggregate retail trading measure. So you want us to just want to understand your question clearly. So you want to condition on the some retail investors that trade more frequent?
Yeah, like frequent.
Yeah, but in our context, our measure probably cannot get into the heterogeneity within retail investors. Probably we need a better data. Yeah, right.
I didn't want to say this, but Zach told me I needed that guy. So I will just say briefly. In your prompt, when you say like there's a knowledge cutoff, like here's this knowledge cutoff, well, now that the models adhere to that date. And in fact, the Llama 2 paper even tried to PPO adherence to knowledge cutoff dates, and it worked, but only for the specific tried to teach it about. So if you like tried to teach it about when World War II ended, then it would adhere to that knowledge cutoff. But if you didn't teach it, Orange Man took over the White House, like so that's one thing. Like
yeah.
Mentioned the knowledge cutoff in the paper of it being September 2020, whatever. That is a knowledge cutoff for the pre-training.
Yeah.
I completely agree with you.
Yeah.
But after that, you just have a pre-trained model, not an instruction following model like you have to align it to follow instructions. That whole post-training process can take months. So the actual time at which that model stops being trained could be well after that knowledge.
You mean the GPT 3.5 model we are using?
Yes. So retrain the model. At that point, like if you ask it to follow an instruction, it won't. It will just complete sentences. So they go and sample from or to do an SFT model. Tuning on a nice curated data set, make it try to follow instruction. Then they start sampling, sample 4 examples from that SFT model. Then we give those to human evaluators. Human evaluators rank preferences over it. And then we train a reward model on that, which we then use the RL process to combine the model to produce stuff that follows instruction. That process takes months and months.
After September 2020. Okay.
Unless you're using DPO, direct preference optimization, but with 3.5 Turbo, they didn't do that policy optimization. So that would have taken months for them to do the sampling, training the reward models, updating the model.
Yeah.
Whether or not that is a problem, I don't know.
Yeah.
Within your very short period, and I know that like that does imbue like OpenAI was training models for presidential election, and then they aligned the model following some of that information about presidential election, even though it's not in the pre-training in the model.
Yeah, but when you mention in the model whether they include that information into 3.5, which they only put on the shelf like the API, or they use that information for later models. Yeah.
No. So you have humans in the loop that are training, right? So like, let's say it's right before the presidential happened, and you ask the human evaluator who won the election. They're going to say, oh, I don't know. The day after, we now sample from the model. The model says Trump won. The human evaluator rank things that say Trump won higher than Biden's in office. That makes
Okay, yeah.
So like the fact that we're using humans in the loop as we align the model after that knowledge cutoff date, we use real-time knowledge into, but like people all the time use this
So,
knowledge cutoff date as like a hard cut.
yeah.
Really.
Okay, the point taken. Actually, we are, so that's kind of the general problem of all the kind of all the studies that's going to use this kind of things. They cannot get freely.
Big llama, right?
Llama,
And those models, those weights have been committed to a repo. Have that date, you know for sure the model weight has not changed from that date. After the hard knowledge.
Okay, we'll think about that. Yeah.
Just to clarify, my name is Zach Kaplan, and I told Bradford to say all that.
Okay. Yeah. Right.
And may I suggest that you might want to think of framing the paper in a slightly different way? So I'd like to make 2 points that are related. First of all, democracy doesn't mean equality of outcomes. Okay? And I don't like the term democratization the way you're using it. So in a democracy, there'll always be people who try to find a competitive edge over others. Okay. So there'll always be inequality. So you get, a Bezos comes along and invents Amazon, right? He gets a huge break over the conventional retailers. Okay. And that's related to the second point, which is what an innovation like AI does is simply shift the context in which the inequalities occur. And so let me give you some background on that. So when I was a student, computers became available. Okay. And there were these investment houses that had rows and rows of clerks with pens and pencils doing calculations. Okay. And it was said, what will happen is that computing will take away their advantage and everything will be democratic in terms of investing. Well, all it did is it shifted it to another dimension. Okay. So the competitive advantage moved from processing information in a mechanical sense, okay, to processing it in a sort of an economic sense, okay, and developing information other people don't have, okay. Another episode was the internet. There were these commodity trading houses, and many of them in Hong Kong. There were some in my home country that knew a lot about the world, and so you knew about had sources who could tell you about the Russian beet harvest. You could actually trade on sugar, for example. Okay, and with the internet, you didn't need to have your representative in other countries. You could get all that information on the internet. Okay, and it was said, oh, okay, that will democratize this business. No, all it did is it shifted the competition to another dimension. Okay, and so yeah, maybe AI will wipe out short sellers as we know them. Okay, but it will just, there'll still be people who are trying to find a way to do better than. So I would suggest that you sort of don't use these general terms like democratization. And I think your paper shows that, yeah, AI would change the institutional structure of the stock market. It has to. Okay, but that doesn't mean it'll turn it into a democracy.
Okay, that's a good point. We'll think about that. Yeah, that's a fact. Thanks for the advice. Yeah.
So, a lot of this stuff, when you're trying to look at how retailer investors are using this information, you're looking at their trades in response to the information. But it seems like when you are talking about democratization, like, often when the SEC is talking about, I think they're talking about participation, like this concern that a lot of people in the US don't have wealth in the stock market, and that I think is their main concern. So it seems like then what you should be looking at is not their specific trades, but whether or not they have wealth in the stock market. You look at that, like look at retail investors' wealth in the stock market after these tools became available to them. That might be a little bit.
Yeah, that's kind of similar to what Liz and Lee mentioned, like the participation. We need to come up with a measure. And also, it's also possible that if they are trading right and they benefit from the return in the trading process, maybe their holding of the stock on average will increase too, but then that will be a longer term thing we may not be able to observe in a 2-year data.
I don't know that it needs to be tied to these specific signals. Like I wouldn't want retail investors trading on specific signals because I think they'll most likely lose money. I think that's kind of what Cisco said. I would just love to see them holding the S&P 500. And I like, yeah, I think that pushing it on those directions.
Yeah. Okay. Yeah. Sure.
So I understand when you answer to Frank, you said there's no difficulty to explore variation among retail investors, but can you explore the variation among institutional investors? So a lot of questions here is why the technology help institutional investor, help retail investor better than institutional? Can you divide the institutional into AI specific institutional versus less AI specific sophisticated institutional, and then to see the variation? And to see, so according to your story, you should see that the institutional investor using AI a lot before GPT, they should benefit less from the technology breakthrough. But a lot of institutional investors, they're actually not using AI. They're actually far behind the game using AI. So if you focus on that type of institutional investor, probably you will see some results similar to the retail investors, probably help the story you are trying to build here. And yeah, I don't want to oversight my paper. I just have a paper divide the AI institution versus non-AI institution, kind of using the regular lab data, using the how much AI talents they are hiring at the fund level, and you can split like AI equipped institutional investors and the non-AI investors.
Okay. Do you have high frequency level of data? Because our test is like really like the earnings call, which is a short term.
You mean at the classification of institutional investors?
The trading of the institution.
The trading, we normally using 13F or Abenozer. Abenozer is too long ago.
Yeah.
So
Abenozer is too long ago. They don't cover this period, and 13F is too low frequency, so it's kind of it's a.
But at least at a low frequency level, you can see the consistent result.
Yeah, we can check. We can.
Yeah. We need to once.
Okay. Okay, so given the interest of time, I just will briefly mention our kind of motivation. There's this debate on this whether AI will affect information equality on kind of between retail and sophisticated investors. There are two kind of arguments can be presented here. One is they could narrow information gap. Here, because obviously AI is a new technology that is claimed to be very powerful. Some evidence suggests that it performs 35% better than the best models before, like for example, the Finbert model in analyzed sentiment. And then also the uniqueness of this technology is that it is open usage with affordability in the sense that the cost is low. You only need to pay maybe $20 a month to use that, or you can use the free version. It's like you don't need to go to hedge fund to use this kind of technology. And then the last one is this technology. It's easy for people to use. It has minimal requirements for people to have tech literacy or domain-specific expertise. Like they don't need to understand how to estimate machine learning models. They can just use natural language to process information. Okay. And then there are some evidence that retail investors are using this AI and then try to reduce processing costs. I think the best has a paper on that. And then Acker et al. Paper, which will be presented later on in this conference, also has some complementary evidence of that. So that kind of all support that maybe retail investors will be benefited from this AI technology. But on the other hand, this technology, we argue, is going. There could be another argument that is they can increase inequality, because there are plenty of evidence suggesting that introducing a new technology can enlarge the inequality in the society. I think Sean was asking about whether every technology has the same effect. It's not. Okay. And then in the specific context of this information context and AI, there are some information mosaic theory says that if one piece of additional information becomes available, it can help inform the traders to trade better, and the information asymmetry could widen instead of become narrowed. Okay, And then short sellers, of course, being the most sophisticated market participants, as evidenced by academic studies, they could do something with this AI better than the average retail investor. So that's kind of the different side of the debate. In the interest of time, I'm not going to be able to, probably may not be able to cover all the results. I just want to talk about the general, the big result we have. First, we observed that before the arrival of ChatGPT, which we call democratization, we can work on the wording later on, as we was talking about. And then we find that retail investors did not react to the AI sentiment. The general evidence is that they react to the correctly. And then in contrast, short sellers align their trades with AI sentiment. The arrival of ChatGPT may change that. Retail trading begin to align with AI sentiment, but short sellers trade with AI sentiment decrease. So we offer evidence supporting or suggesting that AI lowering the information processing cost for retail investors for this specific information is behind our finding. And then this AI sentiment is indeed kind of consistent with the argument that they represent fundamental information, because we find that a positive predicted returns up to a few months, and then there's no return reversal. Of course, we don't find price efficiency significantly reduced, but the magnitude decreased a little bit, given the short sample we have. And then we use ChatGPT outage as exogenous shock to the AI usage to strengthen our causal inference in the sense that when ChatGPT outage happens, the trading alignment with AI becomes muted. Yes, Ed.
So I know these outages aren't unique to your paper, so take this as a maybe broader question. But these outages are like 20 minutes or an hour or something like that. And so why is it affecting 5-day responses?
So here, the outage, we just put together all the outage on the day of the earnings conference call, after the call, after the start of the call. So we use a continuous measure of the outage. The longer the outage, the more the effect it is. So it's kind of maybe on the day, people pay attention to the conference call. If they don't have ChatGPT, they cannot process the information. That has a long-lasting effect on the general market, because maybe after that day, they are moving on to other things. So that's kind of.
Sorry if I missed it, but like, what is the average for the 75th percentile of an outage in terms of minutes?
That's a good question. It's in our paper. I should know that, but so far I cannot understand. I cannot answer that.
I just think I'd like to have seen more in the paper around this, because these conference calls tend to happen like after hours or in the morning. If it's after hours, it wasn't even actually clear to me when you measure the outage. Is it on the day of the conference call or the next day of trading?
On the day of the conference, the trading day of the conference call, exactly after the start of the conference call.
Okay, but then do you just look at the trading during the window of the outage? I thought you looked for multiple days after.
We look at both. So for the longer term, we have the evidence, but we also look at within that trading day, after the call, whether retail trade alignment with that AI sentiment. We could also add the outage to see whether retail trading are affected by the outage within that day.
I was exactly wondering about that. You should find bigger, I mean, if this is the way it works, what Ed is asking, it should be true that your within day analyses are more effective than any of these longer term ones.
We find evidence on both. Yeah.
But you should compare magnitudes and see sort of where the effect is. It makes much more sense to be for the short rather than for the long.
Okay, yeah. Okay, and then, so we use the GPT 3.5 model, 16K model, just to pick, as I mentioned earlier, that's an average kind of the model that people use during this period after GPT becomes widely available. So some of the retail investors could use 3.5 free version. Some of them could pay $20 to use GPT-4, which is more advanced version. And then if you add up all of them together, they could be close to the GPT 3.5 16K model we are using, because GPT-4 can process a lot more information than much longer information than GPT 3.5, the free version. Okay. Our knowledge cutoff is September 2021. We use 2022 and 2023 as a sample period to mitigate the local bias concern. Okay, and then we design a prompting just to condition GPT to be a financial kind of expert, and then we start to ask GPT what is the sentiment of the conference call. Okay, we set the temperature of the GPT model to 0. So in the interest of time, I'll skip the prompt, the detailed prompts, and then we look at earnings conference call during this 2-year period. Retail trading is from TAQ, and then we use the Bomer algorithm to identify the retail trading. Short selling is from FINRA. Other measures are very standard. And then we also use a sentiment measure as a benchmark to rule out the possibilities that during this period, there's some general macro trend for people's trading reaction to textual sentiment in general. We use just the standard bag of words, Logan McDonald kind of measure. And then in order to show economic magnitude, we demean and rescale the measure so that we can interpret the magnitude of the regression as 1 unit change of the sentiment represents a full decile switch, meaning that from the bottom decile of sentiment to top decile of sentiment, corresponding to a nominated literature, people usually talk about decile 10 minus decile 1. Okay, so first I want to give you a little bit kind of idea of what is this AI sentiment, why it is different from the traditional kind of bag of words sentiment, which we call human dictionary sentiment. Here, I pick one example of when the AI sentiment and HD sentiment differ. Okay, HD here means human dictionary. So this company has a conference call which says something happened, there's a bad word, a negative word called snowing. Then HD sentiment will say this is a negative sentiment conference call. But AI sentiment will say the company later on in this conference call directly said, although macro trend is slowing, but this company is not affected by that, something like that. So AI will say this conference call is not as negative as the HD sentiment is saying. So here it's an example that AI sentiment do have some additional information by reading the context of this conference call. The other example of this is, so here the conference call has has many good positive words embedded in the call. So you keep talking about good things, but AI, after analyzing the sentiment, the conference call, they conclude that this conference call is negative news because the firm just want to use, the manager want to use a lot of positive words to cover up it's a negative quarter. Okay, so that's kind of the example give you idea that this AI sentiment represents some information that's related to firm fundamental. Okay. And then the trading measure we use is abnormal holding measure of retail, abnormal holding of retail and abnormal holding of short selling. We standardize both measures to make them comparable. And then our first result is going to focus on how trading changes around the deployment of ChatGPT around 2023. Okay. Here, the after dummy is a dummy that equals to 1 if ChatGPT becomes widely deployed after 2023. You can see that the interaction term is significantly positively significant, suggesting that the dependent variable is retail trading. Retail become much more strongly reacting to AI sentiment in a positive way. Okay. Before the democratization, retail trading do have a negative coefficient, which is only on the day of conference call. But after the day of the conference call, it's actually, there's no significant relation. That's going back to the earlier question maybe Limit has. So in this particular task, retail investors do not trade against AI sentiment, but they do not react to that in most of the columns. And then because of this significant change in retail trading, the overall effect of retail trading becomes different. The joint effect, which is the bottom column, and the AI sentiment now is being traded in the right way by retail investors following the democratization. Okay. But we do not observe retail trading as any kind of significant reaction to the human dictionary sentiment, suggesting that this is really about AI and the deployment GPT that are changing retail trading action. Yeah.
So I'll make this really quick because of time, but it seems like the more natural place to start kind of goes back to maybe my earlier point where it's basically like, is retail trading more predictive kind of as that first kind of table of like, are retail investors making better decisions? And this adds some evidence around kind of the signals they're actually using. But this is a little weird because it almost seems like the steps you're actually taking is like, okay, I show they're trading with more signals. On average, this signal is informative. But, you know, just because there's positive correlation, they're trading with a bunch of other signals as well, et cetera. So it seems like to actually make the conclusion that like retail investors are better off. And this actually is probably more in line with how the literature runs these regressions. It's basically like, is the order flow itself more predictive of kind of like what happens in day +1 returns or day +2? And maybe you kind of start there and then you build into this. But it just didn't strike me as like where I would start, for instance, if I were writing the paper. But of course, it's your paper, so.
Yeah, that's more about it generally whether AI help retail investors process all kind of information.
Yeah. And again, you have a shock here to take advantage of, but that's kind of actually how those Boehmer papers and even Ford Seller paper, it's like, is this order flow in aggregate predictive? And the real key question here is like, even from your results, I don't actually know based on kind of the tables, are retail investors like actually profiting more or making better decisions in the aggregate and or even in this narrow period. I just know they're trading more in line with this AI thing, but that leaves the question that got brought up. A lot of times it's like, all right, these short sellers are just leaving alpha on the table now. And why? Are they going to better to say, like, are they going to more sophisticated signals, et cetera? So it's just,
yeah. We'll think about it. There are pros and cons to that. It's like you're talking about, if you talk about general return predictability of the retail trading, that could be they're trading on all kinds of information. Here we narrow it down to just one specific information, which is
and I think that's actually how you write the paper too, because you're definitely making the implication like the poor get richer. But like, I actually don't know that from here. I just know the poor trade with this AI sentiment signal that like some people, particularly Bradford and especially Zach, obviously don't seem to like. So we're, you know, well, I don't know if that's actually true, but it's, you know, like, and you don't actually even need that if you kind of just look at order flow before and after the shock and you have a bunch of shocks to take advantage of. But
okay, yeah, we'll think about that. Okay, then for short selling, the pattern is very different. Before the AI democratization, short sellers is trading in the right direction with respect to the AI sentiment. So here, negative value because short selling is like trading in an unconventional way. They're shorting instead of buying. Okay, a negative coefficient basically actually means they're trading the right way. But after the democratization, short sellers actually, the interaction term tells you that short selling reduce the alignment with the reliance on this AI sentiment signal. But overall, short sellers still trade in the right direction of the AI sentiment significantly. The joint effect is still significant. So that's kind of the basic trading results. And then to narrow down our like kind of the effect of AI on the trading, we don't if the previous tables look at a very long horizon, there could be many things happening. So we are also using a very short-term window to rule out many other omitted variables in this process by looking at intraday, the trading of retail and the short sellers after the start of the conference call. Okay, here it's the trading activity, how they react to AI and HT.
Can I just ask a very stupid question? Are these transcripts available that people are supposed to input into ChatGPT immediately?
Depends on different firm. Some firm will just post online on their company website. Some of them will just post it after the conference call. So it's kind of it depends on different firm. But
wouldn't that be a cool test then, if there's variation on that? Right, then you would sort of, this should only be relevant for the ones that posted right away, because if it's not posted, how am I going to put it in the ChatGPT?
Yeah, we don't have that kind of data, but we can look into that. Yeah. Okay, and then, but our current evidence suggests that if our evidence already shows that actually retail trading becomes significantly aligned with AI sentiment after democratization of the ChatGPT model, only after conference call starts. Okay, so it's already some evidence. Okay, but before the conference call starts, and after the earnings announcement, there's no change in retail trading, both before and after the introduction of ChatGPT to the general public. Okay? So that's kind of alleviated a lot of the concern that this is due to something else. And then we want to say this trading pattern is related to AI helping reducing information processing cost for the complex information that we focus on, which is the conference call. We are using some tests to exploit firm heterogeneity in terms of operating uncertainty, quality of information environment, and disclosure readability. So the idea is that if ChatGPT is lowering information processing cost for the conference calls of some firms, the effect we have should be stronger for companies with higher operating uncertainty, lower quality of information environment, and some level of disclosure, the difficulty of read disclosure. Okay, our result generally suggests that ChatGPT helps retail trading to be more aligned with sentiment, AI sentiment. After democratization, retail trading become more aligned with AI sentiment for companies that are hard to process, company disclosures that are hard to process based on operating uncertainty proxies, or based on information environment proxies like analyst dispersion, analyst following. But when it comes to readability, our result is more mixed. We find that retail investor becomes more aligned with AI sentiment following the democratization, only on the conference calls that are from firms with median level Fox index. So then that may present some evidence suggesting that ChatGPT has some limit. Okay. And then, yeah. Okay. So I already talked about the return predictability. So let me just wrap up our paper to conclude. So what we find is that our evidence suggests that democratized AI, which is ChatGPT, seems to be able to decode sentiment accurately from all these conference calls, representing fundamental information. And before AI was widely deployed, informed traders seems to be already using this kind of insights, but retail investors did not. So there are some information asymmetry. But our evidence suggests that AI possibly narrows information gap between retail investors and short sellers in this particular piece of information. Okay, that's all. Thank you.
Okay, we have lunch break. Lunch is on the 6th floor, and please come back by 1:25. All right, you can leave your things here.
All right, welcome back from lunch. Before I give the microphone back to Regina to present the next speaker, I would like to do the fun part of the conference, which is recognizing our reviewers in general. So we are lucky to tap a deep pool of reviewers at JAR. And we are grateful to all of you for your work. And in particular, every year, the senior editors get together and try to select the reviewers that have been outstanding for the year. that's based not just on quantity, but mostly quality, and always that extra touch. They go above and beyond and do something for us consistently. So I'm very pleased to announce that we have 3 reviewers this year who won the Referee of the Year award. The first one is, I'll go alphabetical here, Matthias Ruhr. Did I pronounce this in a German way? Almost, though. Congratulations. Thank you, Matthias. And then I'm very pleased to recognize Susie No. Congratulations. Thank you, Susie. And last but not least, I won't clubber the name, Frank Joe. Congratulations, Frank. Thank you so much, everyone. We really, really appreciate your hard work, and I'll now pass it over to Regina.
I have an honor to present the next presenter. So Bradford will tell us a lot about numerical reasoning and look-ahead bias. Just being there at the end of the room, if you can speak up a little bit when you ask your questions, because it's very hard to hear at the end, and it's not very good. It's not very good quality on a YouTube. So as Valerie said before, keep up with your great questions, but just project a little bit so that everybody can hear them. And
thank you. I think I'm mic'd. So so the research question here that I'm interested in really stems from a lot of things that I think at this point we've all seen out in the news. Headlines like ChatGPT may be able to predict stock price movements. Perhaps ChatGPT can replace analysts or even doctors in diagnosing illnesses. And so when I see these headlines, I often, reflect back on my time, my tutelage under Wayne. I think about these people that are doing these tasks. They're highly incentivized. They're optimally incentivized. Not mentor for AI, but for these people, going out and doing their jobs as best as they possibly can. And they're highly educated folks. They're optimally incentivized. And so it makes me wonder, when we observe superhuman performance, how and why does this manifest? Is it true superhuman performance, or is it an artifact of modeling decisions and in reality just a mirage? And so, I think that this is important to talk about right now because the use of Gen AI in academic research, it's really exploded. People are using it as a surrogate for survey participants. They're using it for forecasting. They're using it sort of as an RA. And I think a cornerstone, particularly of our research, is that we tend to push on the mechanism. It's very rare in accounting research that we sort of just, look at something and say that's good enough without providing an explanation of why it happens in the world. And so I think right now is a good opportunity to just sort of pause and take a step back and try to understand why these models seem to perform as well as they do. Related to this, and close to my heart, for any of you who know me, I love to teach. It's one of my favorite things. And oftentimes when I'm in the classroom, either it's exec ed or it's students, and they're asking me, how can we use this technology? How should we use it in our business? And along those lines, I think in general, our research is kind of a harbinger of what new tech can do. And so I think it's important, given that this technology may disrupt individuals' lives, put them out of a job, that we provide the very highest quality evidence on what the tech can and cannot do. And so in this study, there's a lot of different things that I could potentially look at. I'm going to look at just 2 of them, numerical reasoning and look-ahead bias. I think these are 2 that are important to our field. The first one, the reason I think it's important is that we're accountants. If we think about finance and econ literature as well, it's quite often that we're asking the models to do something that's numerical in nature. So it's a good idea to just have sort of a benchmark in mind of what these models can do in that realm. And then for look-ahead bias, when I think about how I was trained to conduct research and things, we often spend a lot of time thinking about the research design, thinking about the constructs. And before we introduce anything into an econometric model, we try to make sure that there's no information in that construct that was not available to a decision maker at the time. And so the fact that LLMs are trained on very long time series of content, it begs the question of whether or not constructs that are derived from those models might have look-ahead bias or might have something from the future that wasn't available to the decision maker at the time. So before we dive into those two things, I think it's always important to walk a mile in whoever's shoes you're going to analyze. Let the AI overlords know that I said that. So, I think it's important to think about how AI sees the world. And so AI, pretty much all modern models, rely on something called a transformer architecture. The transformer architecture, it's basically like a UChicago undergrad, which is to say that it sees the world as a sequence of vectors. Nice, that hit better than other times. So it sees the world as a sequence of vectors. It's known as a sequence-to-sequence model, meaning that the output is also a sequence of vectors that's similar shape to what goes in. And most LLMs are also transformers, which means that the input, eventually anyways, is going to be a sequence of vectors. Unlike our UChicago undergrads, our MBAs tend to do things in natural language. So this is sort of the starting point. So if we think about, we want to do something with this in an LLM, first we start with our natural language, then we tokenize it. And so back in the day, hopefully this comes across okay on the slide, but back in the day, we used to just split text based on white space. And we'd have these tokens. Any individual chunk of text was a token. An issue with that is that if there's a new word that gets invented, then that's going to be out of vocabulary. We will have never seen it before. So instead, what we do today is we say that, well, pretty much everything that's out there in the world can be encoded in a file format called UTF-8. And that's a fixed set of characters. And so we start out with that fixed set of characters. It's a little over 1 million possible characters. And we start agglomerating things that occur frequently. Okay? So if we think about the first word here, Danish toy company. So Danish, one word, but we split it up into two different tokens, Dan and Ish. Because Dan, those 3 characters co-occur very frequently in the training data. So does Ish, right? It's a very common suffix. And so this is how the tokenization process works. When certain characters co-occur frequently, they get aggregated together and a dedicated token is created for that piece of text. Once we have this tokenization, each LLM has a big thing called an embedding matrix, which is basically just a matrix where one dimension is your vocabulary size. So if you have 100,000 possible tokens or agglomerations, you're going to have 100,000 vectors. Each of those vectors is associated with a token. And the specific values in that vector are learned. So when we do the training process, we learn to represent each token, and we learn the meaning of it. And we have to learn the meaning of it in a broad sense. So for instance, there's a token here for 45. We have to capture the essence of 45 in that representation, whether it be just a numerical number, whether it be a street address, all of those different things have to be embedded in this vector during the learning process. So let's go through an example of what we do here with these things. So we might start out in terms of training and generation with some natural language, maybe our net profit. We tokenize that. And just to be clear, I'm using like OpenAI's tokenizer, so I'm not hand tokenizing or anything, but this is literally what you get for OpenAI's stuff. We get the tokens, we look up these token representations. Those are the input to our transformer model. We get vectors on the output side, and then we take each of those vectors and we use them to predict the next thing in the sequence. So if we think about the first token here being hour, we're going to use this green vector to make a prediction that the next token should be net. Okay? So that's what we do. We keep on doing this in a sequence here. And then if we think about token 4, what might follow our net profit? This is the distribution. So this actually comes from Llama. But for instance, our net profit, the most likely thing that's going to follow that is 4. Okay, so maybe 4 2025 or something like that. Also likely is net profit margin, net profit increased. Interestingly, we're already starting to see some biases in the models. So increased, rose, grew. The first one that's negative, fell, is quite a ways down this list. So the LLM, we can already see if you prompt it with just our net profit, it's much more likely to think it's going to go up. Interesting. Now let's think about numerical reasoning, like I promised you all I would talk about. So we do the exact same thing. Now we have 2026 plus 5 equals 2031. So if we think about how we might do this as human beings, not that we're superior, we have 2031, or sorry, 2026, and we're going to add 5 to it. So we line up everything based on the least significant digits, and we start from the least significant digits. So we add these, we get 11, so we have to carry the 1. Already, I have to have something in memory. So just to do this computation, I'm carrying a number in my mind. Maybe I write it down into the output because it's helpful to hold it around. I add that to the 2, I get a 3, 0, 2. So that's how we as humans would do it. That's sort of the algorithm that at least I was taught, perhaps incorrectly, but that's what I was taught. If we think about how the LLM is going to do this, first it gets tokenized. And as it turns out, 202 occurs very frequently in the training data. So to the LLM, it doesn't see 2026. It sees 202 and then 6, and then a plus and a 5. So that's already something that's maybe a little bit goofy and different than how we do math. We get the representations. So again, this is going to be the representation of 202, whatever that is. For everything in the training data, it has to capture the essence of whatever 202 is whenever it appears. We get the output representation. We make a prediction. So we predict that 202 is going to be followed by a 6. This sort of brings us to the next thing that's kind of goofy. So if we think about what's going to follow the 6, we're making a prediction about the mathematical operator. I don't know, to me, it feels a little weird. The mathematical operator, it shouldn't be probabilistic, or there shouldn't be a difference in, the probability of subtraction versus division versus multiplication there. So, maybe that's totally fine. Maybe it's not a problem. Seems a little bit goofy. If we think about what this model is going to predict, following the equal sign here, so probability of the next token, 2026 plus 5 equals, well, we already did the math. We carried the 1 correctly. So we know that the next token we should predict is a 203 and then a 1. The model, it's a pretty simple math problem. It gets it right in the sense that the most likely thing is 203, but not far behind is a 7. If you had a child or a student or anything and they said, yeah, I think it's a 203, but almost just as likely I think it's a 7. Do you think that they have learned and internalized the algorithm for doing math? I don't think so. Now I'm cherry picking this example. Fair enough. The kind of cool thing about this, who here ever had like a Silicon Graphics Octane or Oxygen machine? Nobody? Sun Microsystems Ultra? No? What were you all doing in the 90s and early 2000s? And Doug already left. So last time I talked about my childhood, he accused my parents of doing child abuse, but I don't know. I don't quite follow. So, so those types of machines, they used an architecture called MIPS. Oops, I'm not doing this right. MIPS, or Spark, if you've heard of Spark. But these are what is known as big endian. And what that means is that you represent numbers like we've seen here. So the most significant digits come first. So we would represent 2026 exactly as that. As we've already seen, though, we kind of want to operate on the least significant digit first. And so x86, which is a lot of processors, it uses little. And what is little? You'd represent it as least significant digit first, so 6202. And turns out this is a lot more conducive, right, to the sort of math that we want to do. If you do that, if you flip the problems around, reverse the numbers, there's this paper in CS called reverse that number, exclamation point, the LLMs do way better at math. Because all of a sudden, You're not forcing them to try to figure out how to carry a 1 and how to put that in memory somewhere. So it can right away operate on the initial tokens that come after it. Yes, Lee.
Run that computation using Mathematica and I spit out whatever.
100%. That's what you've stolen the punchline of my paper. I'm just at this point, I'm just trying to think through, like, this is the mechanics, this is the machinery, and this is how it works. And there's a bunch of CS theorists that have basically looked at the transformer architecture and said, this part of the architecture is like this computational primitive. And if we build up these primitives into the architecture that is an LLM or a transformer, what types of problems can you solve? And any problem that requires a lot of serial computation, they can't solve. So to your point, we should use a tool. So I'm going to try to take a look at numerical reasoning in 2 different ways. Lee has already stole my punchline, but whatever. I won't hold it against you. So we're going to sample some numbers from the balance sheet, and I'm going to ask the LLM to basically aggregate them, to sum them up. And so if the number happens to come from the asset side, then I'm just going to say add this number. If it comes from the liability side, then I'm going to ask it to subtract it. And so here's an example. I'm randomly sampling, so I happen to sample 4 numbers from the asset side. See, I'm adding them all up, they're all pluses. And then I have a 5th number that happens to come from the liability side, so I'm going to ask the LLM to subtract it. If the model knows how to do this math, and it has the general, approach for doing this embedded in its parameters somehow, then when we shuffle numbers around and perhaps ask the model to sum some things up and then subtract a number and then sum up more, I wouldn't expect the performance to change drastically. So that's what I'm going to do. That's the shuffled case. Here are the results for 3.5 Turbo. I think we've already been talking about the model today, so I wanted people to know that I'm not like cherry picking a model, but this is one that has been used a good bit in the literature. And so what I see is that if we just ask it to sum up 2 numbers, it does a pretty good job, close to 100%. If we ask it to sum up more and more numbers, particularly as we approach kind of all of the core items from a CompuStat balance sheet, which is around 26.4 numbers, performance drops to basically 0. And interestingly, if we shuffle the numbers, performance degrades further. So, it's not what we would expect from a machine that has internalized the algorithm for adding things up. Yes. Mm-hmm.
So they created O3 specifically to deal with issues with doing math.
Or O1. No.
Yeah, O1 and then O3.
Any reasoning model.
A much better job at doing sequencing of, for example, differentiation, reasoning that is mathematical in nature. So do you view this as a response to what you're documenting here? And the next question is, does that mean, we saw a lot of papers saying AI democratizes? And so based on the results you're showing, it seems that it goes the other way, because unless you train your model to do these calculations right, which has a paywall for O3, but you might go back and say, I'm going to train it better so that it does DuPont analysis a little bit better. This will create more asymmetry. So I just want your thoughts about what the results mean for the other papers we see in the
So we'll talk more about O3 in a few minutes, and like how that performs. So if people aren't familiar with O3 or O3 mini or reasoning models, basically what happens with a reasoning model is you tell it to think. So these are not quite the same as in Harper, but whatever. So you prompt the model, you output a think token, and then the model starts thinking. So this is actually pretty interesting. If we look at this chart here, someone who is clever, which you all are, would say to me, but Bradford, it can do 2 numbers correctly, why doesn't it just do them two at a time, right? Like add up the first two numbers, take the result of that, add the next one, and so on and so on. So this is exactly what O3 has the ability to do. So it would do, x plus y equals z, and then it would say z dot dot dot, and keep adding the things up until eventually it gets to a end think token, and then it would say, okay, I'm going to spit out the correct final result. And so you get better performance, but you have to generate a bunch of tokens intermediate along the way. And we'll talk about whether or not that's helpful or not. In terms of the democratization, yeah, I mean, I think in many ways, you have to be pretty sophisticated to look through this. Like you have to first develop a benchmark. Like what is the task that I want to do? How well is this model doing on it? What are the different alternatives I could have? I think Tatiana, the way she phrased it is that it's very difficult because these models are trained to generate stuff that looks plausible. And so if stuff looks plausible, it makes it very hard to see through it, right? So I'm not convinced about the whole democratization thing. So for two numbers, this thing seems to be kind of okay. Nick. Mm-hmm. Yep. No, so there are people that are, kind of interested in doing this. One, like the CS theorists would say, look, you physically can't, you cannot solve calculations that require serial calculations without structured memory. That's basically their takeaway. And structured memory is basically a tape that you can write to. And this right here, being able to generate stuff before you arrive at the final answer, that's basically a tape that you can write to. And so this does help solve the serial calculation problem, but it's very costly. So I can talk about some pricing later, and we'll see it's probably not worth it relative to just using the things that put us on the moon. So, Christian.
It's like you have, some effect and then you have some outcome, and you want to basically understand exactly how did this outcome come about and what's the channel through which the outcome. But here it's not sort of understanding the mechanism in that sense. In a way, both of these things we're talking about, we're misapplying the models or using them in ways, and then you're basically, I think, very importantly, pointing out how there's maybe better ways to do it or what some of the concerns are when we use it. But to me, that's not about the mechanism of how you get certain results. It's sort of like basically correcting and improving the application of these models. Is that sort of a fair way?
I mean, I think it provides indirect evidence on mechanism. So, for instance, if you ask a model to do some math and it seems to get it right, there's stuff in the CS literature that has shown that the performance of mathematical calculations is a function of how frequently the numbers you're asking it to work with occur in the model's training data. And so to me, when you observe a big drop in performance at a sample from numbers that were in the training data to outside, it suggests that the mechanism for why we're observing outperformance or whatever is basically like overfitting or test set leakage. So it's indirect evidence, but yeah. Okay, so for two numbers, this is kind of okay. The confidence intervals for I think all of the models that I look at, which are 3.5 turbo, 4.0, 4.0 mini, 4, cover 100%. So maybe with two numbers, the models do well or well enough. So the next thing that I want to look at is basically, can you ask it to do a simple financial statement analysis like a DuPont analysis? So for anyone that's unfamiliar, this is a DuPont analysis. You basically decompose return on equity into profit margin. Hans is chuckling or smiling. Did I get it wrong? Hey, a very famous financial economist said that he had no idea what a DuPont analysis was. And I have been sworn to never utter his name about it. But so it decomposes return on equity into profit margin, turnover, and leverage. And so, each of these calculations, it involves, not just addition and or subtraction like I was doing before, but also some division, right? And so I'm going to give the model all the information it really needs to do these calculations. So that's a key thing I want you to remember is I'm literally telling the model, this is how you compute these things. I give it, standardized names. It's not like it has to figure out which construct maps to which. And then I give it the numbers. So the baseline is just a chain of thought where I provide only the relevant numbers to the model. And then in a follow-up, I'm going to provide the full financial statement. So it sort of has to hunt through the financial statements and then come up with the answer. So this is the results that I get for 3.5 Turbo. And effectively what I see is that just for the baseline method, profit margin alone, it does a decent job at, I guess, around 90%. Asset turnover and leverage, where it has to compute some averages for the denominator, doesn't do quite as well. And then the final ROE number, around 60%. So pretty poor. And when we ask it to have to hunt through the financial statements and look at a bunch of other stuff that may or may not be relevant, performance degrades even further. Just to put this in context, to Jeremy's point, maybe I should be using O3 Mini. Maybe I should be using a reasoning model.
Be expensive.
This is what OpenAI says, right? Like 4.0 Mini excels at math and reasoning, coding tasks. And this is how 4.0 Mini does. Like, we have some grade inflation here at UChicago, but I'd still fail this student. So I think it's important to sort of take a step and look at honestly, how are these models doing? Yes.
Kind of clarify, right? There's 4.0 Mini, is a kind of pretty bad model, and there's 0.4 Mini.
Yes.
So,
the only thing worse than their models is their naming scheme.
I think I believe what this is not now, but the reasoning models that Jeremy brought up, right? They are much better at this type of task.
Yeah.
Which would be kind of
In one slide. So LLMs, they're terrible math. Frankly, that's okay. Like, we got to the moon without an LLM. And the LLMs, they're actually really great at writing code. You can tell them how to use a calculator, and they will use a calculator just fine. And so, a solution to this potentially is to direct an LLM to use a tool. And I'm going to show you it using Python, but you should think very broadly about tools. So like, you can wrap Python around a quantum computer. So if you want an LLM to be able to use a quantum computer, that can be a tool. So I think that this would potentially be a very promising area of research. Like, anything can be a tool to these LLMs. I'm going to focus on a Python environment. So to Valeri's point, it'd be nice to see what a reasoning model can do. So let's look at that. Okay, so one of the worst performing tasks that I had was when we asked it, I called it balancing a balance sheet, but it's aggregating the financial numbers. So in the paper itself, I call it balancing a balance sheet. I apologize for that. Some people got very mad because it's not what it's actually doing, but so aggregating financial numbers. So it has to aggregate about 26 items. 4.0, when we ask, or 4.0 Mini, when we ask it to do this, basically can't do it, 0% accuracy. If you tell it, hey, by the way, you have a Python environment available to you, write Python code, I'll execute that code, I'll give you the result back. 100% accuracy, no problem. Ask O3 Mini to do this, doesn't get it right 100% of the time. It gets it right way better than 4.0 Mini, but not 100% of the time. And we're a business school, so we think about economic trade-offs. The average cost of doing this, so just 4.0 Mini, we get 0% accuracy, but it's dirt cheap. We add a Python environment to 4.0 Mini. It's now not just a single call to the LLM. The LLM has to generate some code. We run the code, and then we pass the result back to the LLM, and then it comes up with its final answer. So it's a little more expensive. O3 many, this is a log scale, 100 times more expensive than just giving the model a tool. So to Jeremy's point, like we can, like you want the Swiss Army knife that can do everything? Sure, you can use a reasoning model in that capacity, but it's going to cost you substantially. And O3 many is the cheap one. But not only that, I'm a product guy before going back to my PhD. So I often think about what is the user experience? Well, the latency, so how long you actually have to wait to get your solution back, it takes about twice as long for O3 many. So basically, you get worse performance in terms of accuracy, it costs you more, and it's slower. Good. So the takeaway here is really just, provide models with relevant tools. Like if you have something in mind, you want the model to do a particular task, it's numerically intensive, you can provide it with a tool, not a big deal. Matt.
Well, I can totally see how letting it use a tool like a calculator or Python, which in fact
quantum computer
as a calculator or a quantum computer, it would help it add up the numbers once it's identified which numbers to add and which to subtract and which division to do. But we saw a huge drop off in performance when it had to hunt for the numbers in the balance sheet as opposed to you just gave it the numbers. How does tool use solve that first stage problem? Seems like that first stage problem, I would expect the LLM to dominate most other tools at reading that balance sheet and saying, oh, these are the 8 numbers that I need to look at. And then it would screw up the math. And giving it a tool, it would get that, the second stage, right? How does it help with the first?
So when you give it a tool, basically all it has to do is copy paste the numbers as seen in the text into a format that the tool can do. So it's good at that. But as soon as you have additional irrelevant information in there and you start to have to do a calculation, what ends up happening, so I talked about this memory, right? We have to carry a 1 here and keep it in memory. The model doesn't inherently have that. And so what it ends up doing, we don't have theory for this, but what CS empiricists have seen is that in certain parts of the model, you'll have very high norm activations. And those high norm activations are effectively being used as memory. So the other tokens in the input space that aren't that important, the model ends up sort of overwriting those in later layers and storing stuff there. And then you end up having poor performance because it's getting distracted as it's trying to attend to those high norm tokens by the stuff that's around them. And so that's why there's this loss of performance. And so if you just ask it to use a tool, it just has to copy the numbers as is. It doesn't have to do a calculation. It doesn't have to, store anything in memory because all the as is numbers are already there in the input.
And so it's better at identifying the right numbers once it knows. And I don't even have to do anything with the numbers once I found them. Like I can divert everything towards identifying them.
Yep.
Let the tool handle.
Yeah, so if we jump back a little bit, so like right here, if we said, okay, the first thing you're supposed to spit out is profit margin, and it goes and looks at my instruction, says, okay, net profit divided by sales. So I need to come up with a little piece of Python code that does net profit divided by sales. As it's generating text, right, like it's just doing next token prediction, it can attend to the net profit number that it sees in the financial statement, copy that out, and says, okay, now I'm done with that. Now I need to do sales. It can attend to the sales thing and copy it out. It's not having to keep both of those things in memory, do the calculation itself. Yeah. Okay, so to sort of recap, I don't want this to be a negative paper. I want this to be a positive paper. We've seen that the model struggles oftentimes, with numerical reasoning, but that's okay. We can give it tools and it will do a really great job. And I would suggest, think about this like broadly. The tool use stuff is super cool. Some students in my class that did some agentic stuff with tools. They did all sorts of creative different things. A tool doesn't just have to be a calculator. It could be a model that's forecasting earnings, all sorts of things. So next, I want to think, Lucy.
Maybe going back to Christian's and Jeremy's point. So if we would apply your insights so far to the papers we have seen this morning, kind of mean that, to use LLMs for bookkeeping, in particular compiling a balance sheet, you really need to know how it works in order to apply it correctly, else the performance seems to be worse. And in terms of democratization, again, in order to apply it, you need some specific understanding, knowledge. So it might be actually have the opposite effect.
So I mean, I think there's two different ways to look at it. One is you could say, I'm going to just use a tool. I know that this is bad. So whenever I have a numerical problem, I'm going to tell the LLM to use a tool and tell it, hey, you have this Python environment. And you don't have to be super explicit. You can just say, hey, solve this problem for me. And whenever you get to a numerical step, never do the math yourself. Always use a tool.
You would assume that, oh, the average retail investor or the average account has that knowledge.
To program it that way. They've taken my class. No, I mean, I don't. I mean, at the same, I want to say probably not, particularly the average retail investor, but I do know a lot of accountants at EY and similar firms that are thinking about this stuff pretty deeply because they view it as like a huge disruptor potentially to their industry. And I think in those cases, like they've partnered with tech firms like Microsoft and said, hey, we agree to only use your models if you teach us how to use them in our applications. And so like, I would expect some firms that have deals like that to know what they're doing.
I agree, but again, if we talk about just in terms of applying of what we have seen so far, in terms of democratization, it seems to go the other way around.
That it's going to spread things apart. Yeah, I would say that that's plausible. Like I think in general, when you have a better tool, the people who have the capital and the sophistication to use that tool are the ones who benefit, not the, right? If we take this to the extreme, in fact, I think at the NDR conference in the fall, there were some people that looked at how AI is going to disrupt. And if you have the capital to invest in AI today and use that tool, then sure, you're going to continue to see growth, but everybody else is basically going to be forced to the bottom. Yeah, Rodrigo.
Risk of talking about the other paper more than about this paper, but in the other paper it was the text, wasn't the quantitative. So there you could be lowering in the lower bar, right? But if you're looking numerical, then it could make it worse. Yeah. With the implication, the kind of paper that we had before lunch, if you're looking speed calculations with numerical, maybe the retails would be worse off.
It could be worse.
You was using something incorrect.
It could be worse off. You know, they're deriving a trading signal using the model. And I think that's kind of a good segue into look-ahead bias, where you are going to have potentially look-ahead bias there. And if you're Citadel and you can invest in training a model, like I think someone threw around like billions of dollars or something, but like the DeepSeek R1 folks, like the DeepSeek is literally a hedge fund for anyone who doesn't know that. It's part of High Flyer, which is the hedge fund. And, you know, so clearly they're training their own LLMs. And it seems plausible that they would train one with a knowledge cutoff of, let's say, 2015 or something, so that they can avoid look-ahead bias, which might manifest in the text, which we'll talk about next.
Yes. Related to this, I mean, isn't just the simple solution not be to like have to force the user to do this, but to have this baked into the model itself? Because I know that they've bolted a bunch of stuff on themselves afterwards, but like where they don't want it to give you medical advice, they don't want it to say offensive things. It seems very easy for you to just email this paper to them and be like, hey, have it internally, never use the LLM to do calculations with that idea, and it costs you less money. And it seems like they do a lot of things to try to decrease their computing resources.
I'm tempted to like exit my presentation and go. So OpenAI, they do have a thing, they call it the model spec, and they talk about how the model should reply to certain questions. And so like when it talks about math, they do have some things in there where they train the model to respond to simple questions that they believe the model can now more or less solve, particularly, you know, these types of addition things, but not respond to more complex ones. But simultaneously, I mean, I think that there is, people love this idea of PhD level reasoning in the models, right? And it's good for fundraising. So.
PhDs, and I still use calculators, so it seems silly. I don't quite understand why not maximizing the LLM. to use other tools.
So are you saying like OpenAI should by default build in the tool?
Yeah.
Yeah, so I mean, they are starting to do that now.
I just quick follow up on some of the discussion. So like, fairly recently they released these two new models, O3 and O4, and exactly this feature, function calling, is now built in within the chain of thought reasoning, right? So when 3.5 came out, this was very, first was impossible, and then was very inconvenient to call the function, right? You need to code it up yourself. And now basically, exactly like, for these reasons, function calling is part of the process, right? Whenever you call the model, it will do the reasoning, it will call the right tool. You don't need to say anything about when to call the tool. We'll figure out what's the right tool to call.
I mean, it's still probabilistic. So what I tell my students, like, come up with an eval for your task and run the model on that eval, and it's not going to do it 100% of the time. It's going to be something strictly less than 100% accuracy.
I guess like one takeaway from what you presented is that you have to have the right tool for the task, task, right? Basically, there are tasks that are very well handled by algorithms, right? Like addition, multiplication, but algorithms cannot really handle textual tasks, right? And this is where you need.
I would disagree because an LLM is an algorithm, right? It's literally, we're running it on GPU, so it's literally numerical calculations.
Oh, you know what I'm talking about, right? There are these sort of algorithms that, like the classic, when you can hard code whatever the algorithm, right? Or you have this new kind of generation of right? All this machine learning stuff where you kind of learn from the data without specifying what the algorithm is, right? And this is what all that is tries to learn the algorithm or learn how the world works from a bunch of data.
Charlie,
can you just help us understand, given the limitations you're telling us about in terms of quantitative reasoning, how is it that these LLM models seem to do so well on like Putnam or the Math Olympiad, which seems like a typical KPI that we see these companies market, their newest and latest and greatest models?
Yeah.
It can't do addition and subtraction, but it can do much more complicated.
This is not how I would set this computer up, but whatever. Oh my gosh. They don't even have scrolling turned on. Okay. So, this is a philosophical question, but what intelligence even is? So if I could feed you everything in the world that we have, basically everything that Meta feeds Mala, it's like 1,400 lives of reading, basically, assuming you can start reading when you're born. You'd be able to regurgitate so many things, and you'd be able to solve so many problems and so many exams, the Putman, things like that. Do you actually have the ability to solve those or not? How would we test that? And if you don't have any out of sample data, how would you test it? The answer is it's very difficult. And so, Charlie, maybe this is where you were leading me towards. For those of you who are familiar, there's this competition called the US Math Olympiads. It's held each year. Every single year they come up with new questions. And so some researchers thought that, one way of trying to understand, like, do these models actually have PhD level reasoning or not, is to just, as soon as these questions come out, let's evaluate them, okay? And so the models that they're using, R1, I think a lot of people have heard of R1. It's one of the most prominent reasoning models. Flash Thinking, it's from Google, one of the most prominent reasoning models. O1 Pro, O3 Mini, models that Valeria is talking about, is having very strong reasoning capabilities. So the researchers, they evaluated these models on the 2025 questions within hours of their release, and the best performance of any of the models was under 5% accuracy or performance. And humans score way, way higher than that, multiples higher. So, my opinion on how the models can do it is, like, if you can memorize everything in the world, or if you can memorize everything that you might be evaluated on, then you can just regurgitate it, right? And it looks like you're smart, and maybe that is intelligence. Like, I think you could get by pretty far in life with that.
So part of what they're marketing is basically it's results based on look-ahead bias as well.
Yeah, so the referee, I don't know if you're here, but I loved your framing of like, this is all test set leakage, right? So the model has been trained on everything, including all the test sets. And even if it hasn't explicitly been trained on the test sets, like I'm willing to admit that like the people at OpenAI are way smarter than all of us. No offense, they're definitely smarter than me. So they are able to like anticipate, what might people ask? And let's come up with questions that look like that. Let's template them and create a ton of examples, and we'll incorporate them into the training data. And now we can claim PhD level reasoning, which is kind of sexy. Lisa?
Sorry, maybe I should have asked this a little bit earlier to help me understand a little bit on the motivation and contribution, because it's very clear that you also mentioned that in the computer science literature, LLM actually does a terrible job in terms of numerical reasoning. And then, so this is actually well established, almost the finding in that literature. So we are learning here is because, first of all, because it's so widely used by capital market participants. So they are not only using the narrative disclosure. I know that you, Anna, and Larry had this paper, but also they are relying on the data. So you'll want to caution all the participants. Second of all, maybe this is also related to artificial intelligence related to child's questions, and people have this expectation. It's not just the traditional machine learning or LLM model. It has this idea of intelligence. So that's why maybe something you are showing here, like it's contradicting to some people's expectations. Yeah, I'm just trying to understand if this is already well documented in the computer science literature.
Yeah, what is the contribution, right? Yeah. So I mean, I think the numerical reasoning stuff, frankly, is like an ongoing debate. So like up until the GPT-3 paper, OpenAI used to always evaluate how well the model could like multiply numbers between 1 and 10,000 or something. And then at some point they stopped doing that, probably because they realized that like there was some CS theory work that said, hey guys, like it can't. Stop trying to do this. And if it can do it, it's just memorization. But even as early as the fall, around when I posted my paper, there was a paper that came out of Apple that said, look, if you just change the proper nouns in word problems, the performance of O1 drops drastically. So I like on the one hand, I'm with you that I think a lot of computer scientists, they sort of know this, or they would chuckle when they see this. They'd be like, okay, I have more evidence that the things don't do well at numerical reasoning. But at the same time, I think it's good to try it in our field and disseminate it in our field. So I'm going to have to jump way back. Okay. So, yes, June.
First, this is super cool. Thank you. I'm stealing some of your early stuff for my class in the fall
Cool.
to show my students why they can't just put all their accounting homework into ChatGPT. But my question, kind of jumping off of Lisa, is from a contribution and impact standpoint, are you envisioning this more speaking to academics, to like us who use this for various measurement purposes, or to try to, or thinking about, how investors are using it in a mechanism standpoint? Or are you also thinking that there's a contribution to industry in the sense that, like, I just saw the news about some ex-banker like starting a startup to try to automate junior bankers. And I'm like, why in 2017 did I not do that idea? This is going into a PhD. But you would think that for these kinds of startups, you're automating a junior banker, you need to automate a bunch of valuation and like working with financial statements and forecasting and so on. If you were talking to this person, would you say like, oh, have you made sure that you built in these tools that the LLM wraps around, and and so on? Like, do you do you view the contribution more in terms of our field and how we're measuring things and how we're applying tools, or do you also see it speaking to these people making these startups, and maybe are some elements of how the technology works that maybe some people, like an ex-banker who is not CS trained, would maybe not automatically realize in terms of the mathematical reasoning?
Yeah, I think it's a blend of both. Like I've seen enough work that we're asked the models to do something kind of numerically intensive and doesn't explicitly say, hey, I evaluated this and it actually works, as desired as we want to be able to use it. And so I think from an academic standpoint, it is important to just, it's caution ahead. If you're going to do it in this way, be careful, think about it, maybe do some checks first, include those checks in the paper. From an industry perspective, if I influence industry, that's wonderful. I'm real big on impact. And so that'd be great. It's certainly a lot of folks have reached out to me to talk about more the look ahead bias part that I'm going to get to, but certainly could be some of the numerical reasoning as well. Okay. So next I want to talk about look ahead bias. And so, like I mentioned, there are studies out there that ask the models to do tasks that require a bunch of numerical reasoning. And so given that the models don't seem to be able to do numerical reasoning, it begs the question of why we observe the results we observe, meaning superhuman performance. Kind of gets to Christian's point about the mechanism, okay? So now I'm going to start digging into the mechanism of why we see the outperformance that we see. So one explanation here is look ahead bias. And the idea of look ahead bias is basically just that the model has seen the answers to the test. So it's seen examples of the Putnam exam before, and now it can do it pretty well. And so for me to try to explore this, I need a setting where there's a high likelihood of look ahead bias manifesting in the model. And so one thing that came to my mind was looking at earnings prediction. And if I go and look at common crawl data, which is basically web crawl data that's very often used to train these models, and I look at firms where I know from CapIQ that they had an earnings call, like there's a transcript available, I can actually find about 70% of those earnings calls in the common crawl data. So the conference call transcripts are quite prevalent in that data. So to me, that's suggests that this might be a setting where look ahead bias would manifest. In terms of the actual mechanism that I have in mind here, we can kind of walk through it. But basically, anybody who has read Beth, Ed, and Christina's papers on the Associated Press automated news articles, you'll probably be familiar with things like this. But firms, they often produce these short blurbs that talk about their earnings results. Schumann.
Yes, so how do you think about model without giving their ability to do the web crawling? How does that kind of affect results of applied? Because I think a lot of models are applied without allowing that.
Yep. So what I have in mind here is that OpenAI has gone and scraped everything that's on the web to get their training data. And so these conference call transcripts that I say I can find in Common Crawl are in the training data of the model. So it's not that the model is going out and crawling the web in real time. It's that the model's been trained on it.
Okay, then applying to the 3.5 turbo, in the pre-training data set, you said they're allowed to do but those training period, it wouldn't be able to crawl. Then how does that affect kind of the finding?
So the post-training process, for anyone who doesn't know, so you pre-train a model, which is where you're literally just training to predict the next token. That creates a model that frankly is not very useful. I don't know if anybody ever used the old like Babbage and Ada, Lovelace. Yeah, Richard is nodding. So these models, you would basically provide them with a bunch of examples, and then you'd ask them to fill in the final answer. So like you didn't ask it to do anything for you. You just sort of gave some examples and let it finish. After that, we got an instruction-tuned model. So when ChatGPT arrived, that was the first instruction-tuned model that we all kind of had access to. To get the instruction-tuned model, that's post-training. So the knowledge cutoff that people often quote, it's related to the pre-training data. But once you have that, you then have to do post-training. And so that involves humans in the loop that are potentially aware of current events. And so that's the knowledge that could leak into the model. Now, Rocky Mountain Chocolate Factory is the microcap that I always like to use, because when I was at Michigan, we put together a business plan to buy it. It was like $15 million or something. We didn't do it, but like Rocky Mountain Chocolate Factory, do the humans that are in the loop know the earnings result of that and are going to like influence the knowledge of the model? Probably not, but they might know Apple, right? So the bigger sort of Magnificent Seven, S&P 500 firms, information about those firms could leak via post-training, which is why I say, the ideal cutoff to use would be when the models get posted online, like the weights themselves get posted online. Okay. So you got that.
Alfred, just trying to understand what you said, because this is the part I find fascinating. When you say it could leak, what does that mean? Like it could not?
Some cups leak, some don't.
But is it like that? Is it like a cup that may leak or may not? I'm just trying to understand, like, your benefit from your examination.
So basically, we do the pre-training, and then to get from the pre-trained to the aligned model, we do this post-training phase. And what happens there is we now have a model that's been pre-trained. And so we have a prompt, and we want to improve the model's ability to follow instructions. So we'll prompt the model with this thing, and we generate maybe 4 different samples. And then we have humans rate what their preferences are. So let's say, it's the day before the election, and we ask who's going to win. Like the prompt is who's going to win the I'm terrible. I didn't vote for the longest time. 2024 election, I guess is what it would be. Around 50-50 would say Trump, Kamala. Kamala, excuse me. Yeah, no, I should know. That's who I voted for. But so like that'd be 50-50. The day after the election, let's say, it's still in this post-training phase because it takes a really long time. All of a sudden, the humans are going to rate those things differently, right? Instead of it being 50-50 Kamala, Trump, now everybody, for better or for worse, is going to say Trump. And so that's how the leakage could occur. But if it's something, that is not general knowledge.
If that were to happen, the leakage would occur. Like if the humans themselves are, it would occur every time.
Yeah. So
as long as the humans are giving the feedback.
Yeah. So like the whole, Rocky Mountain Chocolate Factory thing that most people probably don't know the earnings about, the leakage is probably not going to occur. But if it's Apple that, a lot of people are familiar with, then the leakage could occur. Mark?
In that kind of example, like the Rocky Mountain chocolate, would the leakage have to be like direct, or would knowing Apple's earnings or just knowing other macroeconomic factors potentially also look ahead bias the model, right?
Yep.
They knew kind of the model, they might not know what Rocky Mountain chocolate did, but they might know how the economy did in that quarter. And so having that knowledge in the model, would that potentially be another way that the look ahead bias would manifest? Like you observed, they didn't know that Trump won, but it knew a certain policy that got passed that was more consistent with Trump's policy than with Kamala's policy. Would that then be a way that it could leak without it having to have been directly fed the information?
100%. Like if people are tracking the cues and, they rate stuff based on how the cues are going up, and that's largely a function of, the Mag 7, then yeah, it could lead to look ahead bias there. Kalash?
So you can defer this because this is more of like an and what should we take away from this, but I've just read, I think it was a Bloomberg article from last week saying that AQR never used AI, and now they're using a lot of it after hiring Brian Kelly like in the last 7-8 years. So are we supposed to, when they say AI, they don't tell us what AI is, are we supposed to assume that they know like this? Do you have anecdotes for us on?
Oh, they definitely. So I know, like, since posting the paper online, I've given talks at several hedge funds, and they are 100% concerned.
Okay, so if people understand this and they're saying that they're using it, are we supposed to assume that they're just marketing, or are they using some other technique that we're just it's all under this umbrella of AI?
So I mean, the key thing to think about here, right, is this is going to bias your performance estimates. So we might think that a model is going to work well at a sample, but it won't actually work as well.
When you say that, you only mean these LLMs, right? There could be other techniques that.
I mean, this is true. I don't know if the referee's here. This is what I love about it. Like the referee is like, this is a standard problem with machine learning, right? Like if I take a boosted regression trees and I train up to today to predict returns, like it's going to look magical in sample, but at a sample, it's not going to do great. And so it's not really an LLM specific thing.
But the LLM specific thing is the fact that we think the cutoff date is this cutoff date when it's not actually the cutoff date.
Correct. Yeah, that's my nuance there that I hope people internalize, is that like use the date for when the thing's posted online, and don't like you can't fully trust OpenAI's dates because you don't know what they're doing behind the scenes. Like I having worked at a tech firm, I can tell you if we discovered an issue with the model, we're not going to sit on our hands because we want academics to have like a clean out of sample thing. We're going to fix the model. I think, Sean, you had your hand before.
Yeah, just on this last one, it's like one thing that I'm puzzled with, a lot of the hedge funds are doing stuff in real time, right? The thing that I can't reconcile, in the way you're saying, I mean, I think this is useful to know, and the leakage problem, as you said, is a known sort of issue. But at the same time, if these guys are using it heavily and they're getting like relative to 50% chance, an improvement to 53, for them, that's big, they take it, and they can do this in real time. So in the way look-ahead bias is not even an issue for them. It's only an issue if you want to sort of test certain ideas, and then you go back to old data. But in principle, they could do a lot of this stuff sort of for earnings prediction. I just do it on the next earnings announcement. I do it on the next one after that. And then just learn how well this thing is doing. Then I have look-ahead bias is not an issue at all.
Yeah, 100%. So if that's what you want to do and make predictions in real time, but the funds that I have talked to anyways, like before they completely, like they have hundreds of millions or billions of dollars of capital, right? They're already working strategies. They're not just going to throw away a strategy. So they want to know how's this going to work. And I mean, the serious ones are training a model from scratch that has a knowledge cutoff of like 2015.
I'm trying to jump in after that. This is building on the prior comment. I mean, I think look-ahead bias is a problem in any machine learning model, but I think your paper is rather unique to LLMs in that we all know that if you're going to use a random forest model or a neural network model, one, you train it yourself, and you're really conscious about the training period and the prediction period, and we're just like sort of very used to that. So I think the funds as well. I mean, they're back testing strategies they're aware of. I think what's unique about yours is, we're using somebody else's training with the large language model. So I'm a little worried that the title of the paper is AI, but people who don't read it carefully are your main problem is LLMs, and people who don't read the paper carefully are going to overgeneralize your results.
Okay, yeah. I mean, so when I was thinking of AI, I admittedly had a broader sense than just LLMs, but specifically like an LLM is a large language model, but we have, audio models that are transformer based, that are trained by large tech firms that are released now that have these exact same problems. We have image generation models that have these exact same problems. So like if you wanted to embed an image from the past and use that to predict returns, that could have look-ahead bias in it as well.
The crux is just, are you training it yourself or somebody else training it? Somebody else is training it, you really have to know how to
exactly. Yep.
I guess the term you said the problem is pre-trained model, right? Like if I train neural network from scratch, I can consciously control the timeline of the training sample. I don't have such issue. But whenever we use pre-trained model, so the data has been trained. So I guess the terminology here, I'm reading right. This is the problem with pre-trained model, not the problem with all AI. So and also yeah, that's one thing. I was also thinking about another question I want to ask. Like you have two components. One is numerical reasoning. Another one is forward-looking bias. You have two parts. And the way you combine them, saying the forward-looking bias is potential explanation for numerical reasoning. Is that how you put the two parts together, or I missed something else?
Yeah, in my mind, like unless you're using a reasoning model and you're asking it to do a really long calculation, if it happens to get it right, it's because it's basically seen that problem before.
I just want to make two comments on that. I feel like the reason, the why we don't get a good numerical reasoning, looking for bias is one, with many other reasons. So
yeah, the tokenization, for example.
Is one, and we can use knowledge graph. We can use many other technology to improve the numerical reasoning.
Calculator.
Yeah, a calculator. So what I'm saying is the numerical reasoning can disappear in the long term. Like once we improve the algorithm, once we increase the training sample, and we may not have any issue with numerical reasoning. But the forward-looking bias, I think, will. So
yeah, this is a general problem. I mean, my feeling on the numerical reasoning stuff is that saying that we shouldn't worry about it is sort of like saying fusion is going to provide us with cheap, clean power, and so we don't need to worry about burning coal today. Like I think it's worth trying to understand the problems that exist.
I guess people are talking about contribution here. I feel like a forward-looking bias has stronger contribution.
Okay.
Because it kind of influence how we use LLM, particularly for pre-trained model. But numerical reasoning, I guess, a couple of years, I will see people will fix the problem. You can see a lot of discussion here. You know, we improve algorithm, we improve the training sample, we add knowledge graph, and we have more advanced reasoning model come out. So I was wondering, like, when you put two parts together, I feel like the later part is like when people talk about contribution, the later part I feel more impactful for my research and for everyone's methodology. But I don't know. It's my personal opinion.
Yeah, no, I'm with you. I mean, from my perspective, the numerical reasoning is already solved. Like, give it a tool. We got to the moon with the tools we have. So, Matthias, because he hasn't had a chance to ask a question. Sorry, Charles.
Thanks. You're just building on some of this discussion also on how you think or what you think the paper is about, because I could see it clearly as it's an important instructional or educational resource for like our fields who are using these pre-trained things, who are not experts in this, who need someone to translate what's going on. But if that's it, I would kind of be even more on first, look, here are the basics, this is how it works, and then here are a couple of things to consider in applying this to your field, in our field, because I don't think it's necessarily then going to be this, we're helping that retail investor or that real world applications get better, because there, as you started out, you were saying the people have the right incentives and they're all building kind of the proper tools for the specific applications now. Because what happened with ChatGPT, which is what we're looking at now, or these LLMs, is this was just the big thing that brought it into everyone's attention, because everyone can easily use it, etc. But AI was already on the rise anyways in the back end, and the serious applications are being done anyways. So I don't think there's going to be so much of misapplication of it, because people have the proper incentives in their particular fields to work this out and build products around it. We just may have misapplied it because we rushed to do some of these things. So for our specific audience, I think, or the accounting researchers, I can see that.
The one pushback I would give a little bit is that, the very first headline I put up, that was Alejandro Lopez Lira, and his paper, I think, is downloaded like 100,000 times, and he wrote a book on like the prediction advantage and talked about how you should use ChatGPT or the like to forecast stock prices. A few days ago, he posted a paper online about how it's all memorization. So
that there's like, as soon as there's much attention, there's going to be this hype and there's going to be overclaiming. But it's not necessarily that this is like in the long run, this will work itself out. It's important that someone also points these things out, and you're pretty early in this timeline too, so that's good. But I do think it's primarily for this audience, and so if it's for this one, I would potentially make it more as really an instructional resource than kind of having these 2 points that are clear criticisms. But I think you can make it broader and then have more things that we should be looking out for, because otherwise dwelling so long on that they can't do math, I don't think that we need so much more kind of evidence to substantiate that. I think that's an important point to point out, especially with the models right now, but then move on other things that we need to be careful in applying this, because then it's a really helpful resource for this type of audience.
So I think the original submission was like 100 pages, and I'm sorry to the referee for that. But yeah, like the background related literature, it was like 40 pages of that, and Ralph Koijen has taken it, and it's now PhD notes. So yeah, if people want me to go down that direction, I know like many of my mentors like holding back the rabid technical Bradford, but I'm happy to do that translation. Yeah, Charlie.
In these last 2 comments to what Sugata asked, I wonder if the paper might be better served if the second part of the paper is really where the most impactful part is. Would it make sense for you to, instead of telling us, well, it might have leakage from post-training, tell us the nature of that. And it seems like there's something empirical you can do there, which is you can ask GPT to basically make predictions within that post-training period. And you have a hypothesis which says what might be the most attention-grabbing firms for which that leakage is most likely to happen. And then do the same kind of exercise after the kind of model completion period. You should see that the differences in predictive power across the salient versus non-salient firms should differ across those 2 windows. And that might just give us a little bit more information about where's the leakage most likely to happen.
Makes total sense. And the mechanism, right? Like, is it that the firms are in the training data? Is it that the post-training alignment folks know about it? Makes total sense. Nick.
Yeah, I know you're focused mostly on the leakage due to human in the loop during the post-training here, but I think there's an issue that's relevant for this crowd, especially. It's different, but slightly related in the pre-training. And it's that some of the economic agents we're studying, and a lot of the papers in the conference, for example, are providing the answers to the test. They're creating the training data. So like in Jung Ho and Chloe's paper, some of the experienced accountants a few years ago were doing the manual classification that ended up becoming the training data. So I think it's, and analysts, journalists might have their reports and news articles scraped and put into the model. And so I think it's important to realize that anytime you have some agents who either created the training data or have, like to one of Mark's points earlier, if they even have information or characteristics that are more correlated with the training data, that might partially explain some of the differences that we're seeing across economic participants, like retail versus short seller, or things like that.
Yeah, 100%. Yep. Yeah. I'm going to move on. So, one person, I think it was Sean, was talking about training models that have no look-ahead bias. So there is a portion of my paper where I do that. I train a time series of models that basically has no look-ahead bias relative to a particular year, and I run some tests with that. I show that look-ahead bias seems to manifest in these models. I'm not going to dive into that right now because it's a lot, and in the essence of time, I'm going to skip it. But basically what I'm going to do is I'm going to try to explore the task of predicting earnings, specifically giving annual financial statements to an LLM and asking it to predict an earnings change going forward. And I'm going to see how well this works, whether or not it's fragile, because if it is fragile, then it'd be evidence basically of the model just having memorized the data and it knows the answer. And so to give you a sense of my idea for the mechanism here and how I think it might work is that in the training data, there are these brief sentences that talk about performance. They say, whether the current period increased or decreased. They give the current period numbers, but they often also have the prior period. So, it says that net profit was up relative to this number from last year. And so even if we were to sort of mask and hide these firm identifiers to the LLM, it's all just vectors. And these numbers from the prior year, like 1.45 and 6.37, if we look at just CompuStat, whether or not these numbers uniquely identify firm year observations, what we see is that about 99.9% of them are uniquely identified. So if the model basically memorizes that in the context of earnings, whenever you see a 1.45 or the token string that's associated with that and 6.37, you should think net profit increased, then the model might exhibit predictive ability, even though it has none. And to give you a sense, we don't know exactly how big GPT-4 is, but the biggest kind of comparable models from Meta, they're trained on about 20 tokens per parameter. So this string right here is a little bit over 20 tokens. But so if you wanted to one hot encode and memorize a relationship like this that I'm sort of describing here, the model could totally do that in its memory. So it has enough parameters to memorize things like this. Okay. So the perturbation that I'm going to do to the financial statements, I basically randomize the least significant digit. So I pass the financial statements and just take the one to the farthest right and randomize it. Sorry. So I'm going to change it, just replace it with a different number. And what I see when I do this prediction task is that with no randomization, all of the models from OpenAI at the time that I ran this exhibited some predictive ability around 55 to 60% performance. As soon as we randomize, there's a big drop off. So we go from around 60% for GPT-4 down to around 50% for just one least significant digit. Scaling, so if we divide by 1,000, that shifts the decimal place and it can also break the tokenization. I see a similar, slightly different, but similar effect. Okay. So the sort of last thing, or my solution to this look-ahead bias in this particular setting anyways, is basically classic ML. So if we think about the gold standard in machine learning, that's basically boosting. So if you want to compare different algorithms, you want an algorithm that's fast, so it doesn't take very long and performs really well. So the optimal is down here, And what we can see is, kind of along the Pareto frontier, we have a lot of boosting models. So the cool thing about boosting models, I can train them exactly how I feed model to the LLMs, except I can do so in a rolling fashion, like Ed was alluding to make sure that there's no look-ahead bias. And this training, it takes minutes instead of many, many days with thousands of GPUs. And the predictions take well under a second, so you can make very fast predictions. So when I do this, the first takeaway is that the performance of the boosting models is much less sensitive to noise. So when I randomize just one digit, we see a drop from about 62.7% to 62.3. So less than 1 percentage point drop. In comparison, GPT-4, which is the best performing model, dropped 9%. So a huge drop, as you can see. The other takeaway is that boosting dominates LLMs. So if this is a task you're really interested in and you want to do well, then you'd be better off just using classic ML in the first place. So the accuracy here is about 63%. And when we're facing pure noise, so if I fully randomize the financial statements, there is a clear strategic action, which is to always predict an increase because the target, this earnings change indicator that I'm trying to predict, it increases on average. So if you don't know anything, you have absolutely no signal, the optimal action, if you know that prior probability, is to predict an increase. And that's exactly what the LLMs, or sorry, what the boosting models learn to do, and the LLMs do not. So in conclusion, if you're doing a numerical reasoning task, I would say think about offloading the tools like a calculator. If you're using AI-derived constructs in econometric models, just be aware of look-ahead bias. As Mark pointed out, it can be pretty insidious, like people might just be focusing on the cues, and that leads to look-ahead bias about how Apple's going to do. And notably, performance estimates of LLMs, they're likely to be biased when the answers to the test, if you will, are publicly available. OpenAI or Meta can scrape them. But I think as academics, we're in kind of a unique position to critique these things and actually provide less biased estimates of them. And just to give you kind of an idea of what I'm thinking about here, I don't know how many people have heard of Epic AI or Frontier Math. No wonder I don't have anything. So like Frontier Math, it's this crazy benchmark. It's abstract algebra, like the world's hardest math problems. And it's meant to test the limits of AI. And along these lines, the previous state of the art prior to December was about 2%. And 03, it wasn't actually publicly available, but OpenAI ran a benchmark on it. And they said, yo, we're crushing it at 25%. Okay, so huge, huge boost. And in January, there was a TechCrunch article that came out, said, hey, Epic AI, they actually got paid by OpenAI to develop that data set. And so, Epic AI, they added to their website this conflict of interest statement. They said, hey, everything's good here. Sure, OpenAI paid for the 300 questions in the training set, but we kept 50 from them. And so they haven't seen those 50. This 25.2% accuracy is basically 12 problems correct, maybe 13. Do we think OpenAI, the smart folks there, can come up with the problems that might be in that test set and anticipate like 1 in 4 of them correctly? Personally, I think so. And so we study incentives, we study what might be happening at these firms. I think we should just be a little more skeptical when we see their performance. So with that, thank you very much to everyone. Really had a good time.
Okay, welcome back for the last presentation of the day. Just one reminder, the room will be locked, so there's nobody else that's coming to the room. So if you want to leave unimportant stuff here, I wouldn't leave my computer or anything like that, but if you want to leave name tags or papers or anything like that, you can. We'll be in the same room. The room will be locked once we go out there. So without further ado, let me introduce the last paper. Frank is going to be presenting a paper with Shitong, Yilan, and Fan. And this time we're going to hear about stock market participation in China.
Thank you, Christian. Title of the paper, How Stock Market Participants Actually Use Generative AI. My co-authors, Yilan and Fan, are in the room. Shitong is not. I took the liberty to immediately rephrase the question. Well, it's my presentation. I can do whatever I want. Background in question, in terms of the initial studies we do see, and many authors here in the room, we have this generative AI as sort of this panacea. This is sort of a thing that has unlimited capabilities. But to us, the immediate question that follows from that is, there are hurdles involved in how, in particular, retail investors will be using this. And to us, that question has immediate tension because retail investors, they may lack awareness, they may lack the resources. We've seen some of those questions on the other papers. There may be cognitive constraints in terms of, do we really think how the typical researcher thinks about AI as a tool? And there may be trust issues. So honestly, I was sort of thinking of the perfect motivation. You never get to hear it. There was a lead article yesterday in one of the German newspapers that was talking about a lot of what you have been commenting on already. And what they did was they summarized an EU survey of high school teachers. And what they were particularly worried about is, at the end of the day, something, here's a word I've learned, de-skilling. It's actually the weak students that use AI to such an extent that they trust this, they over-trust this, if you want, and their skills are actually becoming worse through the use of AI. So it's not even level, it's just becoming worse, and it opens the gap to the good students to quite an extent. Now, what are we trying to do? We are trying to be extremely descriptive and extremely exploratory. So if you're one of the 130 people in this room that are looking for an exogenous shock, that are asking themselves now for the next 70 minutes, where on earth is my diff and diff, it's not going to happen. Okay, I hate to disappoint right from the start, it's not going to happen. It's very descriptive, yet my goals with this presentation are high. We want to inform, for sure, about actual usage, and we want to be relevant. Not the least, we want to be relevant to you as researchers who may be able to build on this. So I'm looking forward to your questions, to your comments, to your suggestions on how to sort of make this broader, which is particularly funny because I think the slide deck is something like 100 slides. What are we building this on? At the end of the day, we have a data set of query answer pairs. It's about 1.7 million of those query answer pairs. And we can start subdividing this. Descriptively, to us at least, already interesting. First foray into, hey, what do they actually care about? So we can divvy those up into the topics, such as business outlook, production, competition. We can further divvy this up also into tasks. Out of all these capabilities that we as researchers can think about, how are they actually being put to use? And we can also, and this is where Frank becomes warm, we can also sort of look at answer attributes, including, and I think that is a really cool part, feedback that is given basically upon reading. So it's positive confirmation of, if you want, information acquisition. So we're trying to put this under a header, in particular when it comes to the task, we're categorizing them into those information processing steps, information awareness, acquisition, and integration. And as I said, at the end of the day, I think we want to be relevant and speak to a whole lot of people, but given that this is a presentation at the JAR conference, mostly to you. I'm not going to do justice on prior literature. Looking around, so many people have contributed to this literature. I don't even want to try necessarily to sort of summarize this. What is of interest to me from reading all of this is, at the end of the day, there's value in particular structures. But the immediate hurdle when it comes to the retail investor and how a retail investor would look at this is, well, in order for her to use Gen AI in sort of a meaningful way, you got to be proactive about this. Meaning to say, you also need to know what you're doing. Otherwise, there's not a whole lot of good coming out of this. And so what are the capabilities that people have documented? Again, including people here in this room. We can use an investment score to predict CapEx, and also upon arrival of the next news, we have some sort of short-term returns. correlations. We can summarize bloated filings. We can element out, so to speak, the narrative in corporate filings and try to see what are the surprise elements in these corporate narratives. Then there's also mixed evidence, Jeremy's paper and others, about ChatGPT outages, ChatGPT bans in Italy, and there's a little bit of mixed evidence going on, in particular when it comes to the liquidity effects of these outages or this ban. Now, again, what is important for the context of our paper is that out of all these cool capabilities, how are they actually using this, right? So in principle, there is overall, if you zoom out a little bit, we can do real-time interactions, sure, on any number, bless you, of topics, including being a very low-cost individualized support. So in other words, we can feed in private information, we get private information out. And now about the first cool part, let's talk about the data. So China for us, to some extent sounds like an ideal setting. So think of this as tongs, so there's two prongs here. The first reason is the Gen AI adoption is relatively high compared to the global average. Right? So there's a Reuters survey, and about 83 of the Chinese respondents said we're using Gen AI to some extent already. There's also a particular feature here in that China's AI platforms are walled off, so to speak. So we get to sort of see a whole lot. There's a lot of providers there for sure, but those providers, again, typically cater to those Chinese survey respondents that we have here. In other words, we get to see a large proportion, and we also, so there's critical mass, if you want, and there's also the potential of a good bit of cross-sectional variation in those queries that we see. Then focusing on retail investors, that's sort of the second good argument for looking at a Chinese setting here. 80% of the daily trading volume is usually done by retail investors. That, all else equal, makes it a whole lot more likely that any sort of market outcome tests that we will do, these associations that we will see, are actually traceable to retail investors as opposed to others. A little bit of institutional detail on the platform itself, even though I shouldn't be disclosing all that much. In a way, I have a screenshot later, it will look and feel and smell very much like ChatGPT to you. Okay. It's launched in 23, but during the middle of our sample period, we're talking about 10 million users per month. They operate on a freemium model, that is to say, there's sort of a time varying limitation on how many queries you can do in a given session or even in a given day. That actually can't be backtraced. There seems to be a random factor a little bit, but it's a very low number. The cool part is, for the vast majority of our query answer pairs that we identify as stock market related, those are actually coming from registered users. We can ID them. We can check sort of what they do over time as they prompt this the second time, but also the 10th time, and so on. Last but not least, we try to hone in on this retail investor feature already from the start by actually getting our sample data from web-based or from app-based queries only. There is no API traffic in the queries that we are looking at. So in that sense, we're trying to rule out that there's an enterprise, that there is a corporate, a hedge fund in the background that uses this platform. Take your glasses off here as researchers. This is what the typical user will see. All right? So it's not about going through billions and billions of filings. It's all about this. There is a prompt box. You hit it. I do not know, but I blame my co-authors for giving me an alcohol example here. What's Motai's financial performance? And that is what's being spit out to us. Now, it looks, it feels, as I said before, very much like ChatGPT to me. There's a couple of features that we will later use. And those are those feedback features, those reactions I was talking about. And I guess that again, is a really cool part. At least, we can copy this answer out. We can give it a thumbs up, a thumbs down, or we can share it via a link. Okay. Why is that later, at least to me, becoming important? To me, again, that is sort of positive evidence of this information acquisition. It's sort of, to me, the cleanest shot we can get at this. I would personally not give it a thumbs down if I hadn't read this. Okay. So we start out from a total, I'm going to call it universe, but what I mean is this is a total of 480 million valid query answer pairs. And the first thing that we need to do is, through some keyword searching, feed it into a Chinese BERT model that simply tries to answer the question whether this is now a stock market related query or not. And so if it's a no, we'll sort it out. If it's a yes, it feeds directly into the outer set of our query answer database of 1.7 million plus. This is not our sample. This is a random sample that the platform took. And they also categorized this for us, so to speak, at least for this particular slide. And I want to give you a little bit of a sense of for what this platform is used, because the fraction of what they traced it to economics, finance, and markets is just 1% of that random sample that they drew. Now, when we do our categorization, we're a whole lot more strict, because implicitly we're also requiring either the query or the answer to at least reference a single A-listed Chinese stock. So we're more strict than this general conceptual questions about economics, finance, and markets. So therefore, not surprisingly, our yield when we do our restrictions is about 1/3 of what they classify as belonging into that category. But so one of the things that is a little bit of a dark matter in the universe is all of these other topic areas that we're basically not exploring, not exploiting in any which way. So to me, at least, what that translates into is, well, wait a second. When we see users, as we will, having a relatively low count of queries, then that may very well be that they'll continue using the platform for other purposes, just not stock research. Okay, so in that sense, the sort of versatility of the platform comes at a huge cost, because it sort of turns into dark matter for us when it's not stock related anymore. Further on in our sort of analysis, we're then basically trickling this down and trying to separate out the 1.7 into where exactly is the A-listed Chinese stock mentioned. If I'm a very specific user and I already ask about Motai in the query, then I'll be over on the, then I'll be over on the right. That's a specific stock already mentioned. And if I'm not, if I just want a general stock recommendation, hey, what's a good stock to buy? Or name 3 stocks to buy today. Then I'm over in the left-hand side, I'm in a general query. But again, one or the other, the answer or the query need to be referencing an A-listed Chinese stock. So these are our, if you want, 3 levels of data. The 1.7 query answer I've kept yammering on about, out of which 1.6 are from registered users that we can ID up, that we can sort of trace over the half year of our sample period. And then 127,000 queries are not. Now, for some of our tests, as you will have seen, we simply leave them out altogether when we need to do the ID tracing. But sometimes we just treat them as being from 127,000 individual users. Okay, the truth is somewhere in the middle. Could be just one user who comes to this 127,000 times. Sounded a little unrealistic. So we went with the other extreme. We condensed this down to about 600,000 firm days for our event studies and also our stock market outcome variables. And then we have one big cross-section of firms of about 5,278 firms, where we simply do some linking, some association tests with firm characteristics, including, of course, fundamental data. So what drives query volume? 1 second. Before I leave this slide, actually before I come to you, just to be absolutely clear, as these are sort of the outer sets, maximum sample sizes for some of the tests as we sort of trickle down in the paper, when we require more data to do independent variables and what have not, these will shrink. sometimes dramatically. Okay, but these are the outer sets. Please.
So if we were to, let's say, use Google Trends on topics about a specific stock, and then kind of correlated that with a measure of retail trading activity, would we learn something different from your study relative? Like the data seems really cool, but is there something different that you could tell us about trends in searches? Because also from Google Trends, I could ask it, like if I was advertising on Google, I could ask it for common words that people are searching for within a category. So maybe that search, like how is this stock is worth investing in, that might be a frequency of these things. So I'm trying to get a sense of why AI might be in particular different from other technologies.
I'm not an expert user on Google Trends at all. And so I have in terms of institutional knowledge, why don't we discuss it with Bradford later? Having said that, you probably in that thing need to know what you want. Here, there is sort of a two-dimensional thing going on where AI has the potential to, let's say, go over and beyond what you have asked for. Actually, three. The first one is, I don't need to know the stock. I can ask a general question and it will make up the stock for me under whatever criteria. So there's that potential in terms of, is the cross-section there? The other thing I mentioned earlier is I get totally different topics. It's also much more versatile in sort of the tasks that I want to get out of this. And as we've heard multiple times also today, there is the potential of what I called trust earlier, but what others have called error. Right? So this is not necessarily totally fact-based. In fact, I'll show you some evidence later on where I have severe doubts simply because the vocabulary that we're using in the queries is not necessarily one-to-one mapping into the vocabulary that the AI tool sort of spits out as an answer. I think that was 4 dimensions. I only announced 3. Sorry.
Kind of on Chris's point, that paper has been written with Google search and trading outcome.
That's the 4th point.
There's been one on Edgar.
I'm not suggesting it. I'm saying, how does this differ?
Because it's been done. You know, the search patterns are very, very similar here, right? Like the events that trigger search, earnings, news, these kind of things are very, very similar. What's very different is the liquidity relation. You find the opposite effect in prior studies. And then I'm kind of wondering in your response to him about what's different about this, how does that lead to those differential liquidity effects, right? Like that was kind of what I was.
None of what I have mentioned. I was sort of not even going down to the results and trying to backtrace it. I was more on the conceptual, on the input level.
Right.
None of this I mentioned here was done.
So what does explain the difference?
What do you have in mind? That liquidity is going down?
Yeah, so like the Google papers, the Edgar papers, they find the same pattern of search, but the opposite effects on liquidity. And then even some of the other Gen AI papers, they find different stuff with liquidity. So I'm just trying to see what you say is different about Gen AI. How does that lead to differential liquidity effects?
I've never thought about your question in terms of trying to backtrace it to sort of the, let's say, characteristics of the tool. What I can say, and this is maybe my fallback now to him, is there's usually a good bit of cross-sectional variation that when I come to it, you will tell me later I'm under-exploiting as of now. But the average result is, as you say, is what that is. Remember though, and I hope that I made that caveat very clear earlier, associations, right? Links. No causal inference.
Just on this, I think I disagree a little bit with Stephen or where Chris was going in the following sense. I think where you have something very unique is that you actually have the queries. So in a way, you have like an immediate measure of demand for information, which
Yes.
in the other papers, we have that too, but it tends to be, I don't think people had Google queries. They had sort of just the average or aggregated Google queries, but you have individual investor queries. And in my mind, that is a very unique thing. And then the other thing that I liked about some of the tests you do where you do management put out a forecast, or you could do this in my mind actually also with other disclosures. Management puts out this disclosure. And then there's immediately questions or queries pertaining to this. So you look at
Yes.
interaction of what the firm put out and what investors were asking for. In my mind, this has nothing to do with AI per se, but it's something that you get to see through the AI
Granularity.
that we never otherwise get to see.
Yep.
So in my mind, that's something you should play out with and think a little bit about, because I think it's very unique. And that's, I think Chris was sort of pushing you to sort of articulate what is unique. And I think that is a unique aspect of the study.
I did say Google Trends, not my thing. I did say that.
Just a clarification, thank you. ChatGPT 3.5, right? It did not search the internet, right? It had a certain database of information. I presume yours searches the internet. Okay, that's one. Yes. The second question then is if it searches the internet, do you know if there's another, if the platform allows you to search, this is the tool that they provide you can use for search, I think the result would be different if simultaneously they also had an internet search. Like if could I choose, am I choosing to use Gen AI?
Oh, I'm gonna say flat out yes. I think if I did an internet search, I do not think that the answer would have looked like that. And so this is sort of an element of what my answer to him was as well.
What I'm getting at is a user's demand for Gen AI versus an internet search. Can you like benchmark those two to get a sense for?
Okay, I actually like where you're going a whole lot. Can I make it a little bit more extreme? Imagine the Google search just returned the filing to you. The first hit is actually just it's not that, but the 10Q, right? And instead, so I think the product here is very, very different.
I agree that the products are clearly different. There's similarities, but the products are different. And I can appreciate that as a user, there are many instances where I prefer to search on ChatGPT style system rather than Google. What I'm trying to get at is see if there's a way for you to benchmark the incremental value of the Gen AI part relative to information. That's
right.
part of what I'm trying to get at. If it's possible, I mean, there's a lot to like, regardless.
I'm going to give you an answer because it's sort of my presentation, and it will probably not fit your question, but it would be nice if you nodded anyway. So later, okay, fact disclaimer, we do not necessarily at all observe the other search activities of these users, right? Fact disclaimer right over here. We do have sort of the aggregate search volume standard, yada, yada, that people use. We do have that. And we also, in some of our tests later in the regression analysis, we're sort of trying to also control for things like analyst reports or media outlets as yet another alternative source of information. That's sort of the best I can do. When I'm just sort of, you're asking me, at least in my head, it sounds a little bit like you're asking me to sort of swim in the ocean because I wouldn't know necessarily what a Google search returns for those 1.7 million queries.
Yeah, that's what I'm not asking you to benchmark the output, right? What I'm trying to see is has demand shifted from is this a substitution and
I see
incremental usage?
I see. I like it. I like it. It's something we can relatively easily do, actually. I have it already mapped out in this side of my head.
So I would build on Christian's point here, which is you not only have query level data, you have user specific,
yes,
which to me is very unique to your paper. So to the extent you can exploit that even more, I like that you're looking, across time. But if you look at, for example, figure 4, there's a lot of variation. A lot of your users have one query, and then you have this some use greater than 20. So to the extent you can extract, these are different types of users and what types of queries those different groups are submitting, and learn more about even within the set of retail traders, there's heterogeneity.
Yes.
And exploit that more. I think that's an angle you could play up a little bit.
I like it, and I do, yet another caveat, I think we're totally scratching on the surface of this only. In at least just one way. I told you about those processing categories that we're trying to, awareness and acquisition and integration that we're trying to put these in. And so to some extent, given that we do have these IDs by these people, we can sort of trace these over, let's say, instances of use, not over time necessarily. But honestly, I think that that's an aspect we're still totally underutilizing. We could do a whole lot more with that. Yeah, learning, sure. While we're at it, Anna was already giving me that cue to go here. Figure 4 basically has, to us at least, a somewhat shocking message. But then on the other hand, maybe not. But we have 40% plus of the users in our sample period are only using this platform exactly once. And of course, to some extent, this is driven by the sharp cutoff at sample end, June 24. Sure, but a large fraction of these users were actually doing during the entire sample period that just never returned. Right? And then we have a very, very quick and steep decline in these instances that these users are actually using the platform for. So to some extent, this is what I tried to hedge actually against to some extent earlier. There is a couple of papers out there that, and this is really almost standard dated literature, that basically says in the passage of time, then more recent adopters, from their perspective, this was end of the 90s, they have far less patience, patience being my word. I can only imagine if we're extrapolating this to now, then more recent adopters, that I also think is actually very cool, they actually stop using the tool more or less because of what they call disenchantment, as opposed to finding a better service. And again, in the context of our versatile AI platform, I showed you the list of tasks, of topical areas, so to speak, that these users are using that platform for earlier. What we sort of call sample attrition is it turns dark matter because it's just a query that is no longer stock related. Whatever those categories were, translations, daily life, fact retrieval, but not in a stock sense. So overall, I'll show you a couple of graphs in this first part before I turn to some regression associations. So this is sort of the first foray into this categorization that we've tried. And these are all densities over the course of the week. So 7 weekdays. I know that this graph looks like there's a dramatic shift somehow on a Saturday from the Wednesday. To me, honestly, I mean, look at the scale. That actually looks pretty flat to me. All right, so overall, we see this usage bouncing from about 15.5 down to something like 12, sure, but that platform basically gets used throughout the week. Then, if you have never seen a map of China, here it is. I do not know how much surprise there is in usage when it's most concentrated in the coastal areas in Beijing as opposed to Tibet. I would have said that too. Here's where it sort of starts getting interesting because we're trying to categorize out the topics. Here's what we've tried to do. Oh, please, Lisa.
Yeah, so now we are on this topic. So first I thought your paper super interesting and a very nice data, like everything is great.
Thank you. Can I convince you to stop there?
Really just a small suggestion comment, not a question actually, because it's really related to the setting, because on the topic, we know that in China, actually, example, the government support and guidance is actually super important for the industry development for performance. But then because your data actually has the user ID is actually registered. So it's kind of like accented, they know that maybe their identity information later could be used later by the government. So they may be very careful when they ask a certain person. So all of this, I think, makes sense from the financial accounting perspective. But I think they would be very careful to ask about questions related to the government or political risk. And then at the same time, those factors are very important.
Okay, I don't disagree with you. In that sense, the 1% on the random sample I showed you, and even our sort of 0.33% may actually be wrong because there are these other areas, political questions and so on, that we simply do not observe at all in the 480 million. I agree with you. Doesn't harm me because I'm sort of honing in on the 1.7 stock market related. And unless sort of you're making me an argument that there's sort of interference in those, and those look from sort of random inspection of a few, they look relatively harmless. Okay, so I don't think that there's a whole lot of, let's say, communism when I ask about Motai and its performance.
Right, it used to be one of the most important alcohol for the government, like the meal dinner.
Mm-hmm. Yes.
Now, because the corruption, anti-corruption, and they actually multi-performance significantly. Sorry, it's a just small caveat. I don't think it's there.
Okay. It's easy to also go through and see if that, okay, if there is a relatively low likelihood of that happening, surprisingly low, I should say. Appendix D of the paper tries to lay out sort of the steps that we follow in order to define these topics. So we basically have an unsupervised model running through this first to identify an initial set. Then there's a manual review that sort of tries to disentangle the topics. But then after we've sort of identified the topics in all of the 1.7 some million, then we actually get to, of course, I'm going to say, of course, non-mutually exclusive categorization of those queries into these topics. And the reason for why I said, of course, is because, of course, the prompts are in no way constrained, right? They're not constrained in sort of the topics that they're touching on. Again, all stock market related, but it could be any number of topics out of the ones that we've identified. And at the same time, it could be no constraint overall when it comes to the tasks that this thing is put to use. So these are the most frequent topics in at least our sample that we see. So they range from business outlook, which about 26% of our queries will touch upon, all the way to competition, 18. And then there's a very sharp drop before it comes to other topics. And so we focus on those 6. And again, let me stress, if you later tell me that results look so similar, maybe even across topics, that is by design. They're not mutually exclusive. Okay, please.
Just looking at these topics and, you know, based on some of the experience that I had with topics modeling, like LDA, often, you know, you kind of get these topics that are not particularly sensible or very correlated along the lines you're saying now. So, I mean, I think there are a couple of things you can try, including you know, like using embeddings of the queries and agents clustering. But that, you know, that type of approach also, I mean, it's worth trying. But you know, something that we ended up doing, which actually produced a really nice set of topics, which we intuitive, is basically to kind of rely on AI itself, right? And feed it some sample of documents, right? And basically ask it to develop a classification based on this sample. What kind of topics are covered?
And then feed it again.
And, you know, start with high-level topics, say, you know, you can identify, you know, say 10, 12, 15 topics. And then ask it to go into each topic and identify subtopics. And then, you know, if you kind of do this process on, say, 1,000 documents or something like this, you get a really nice and long, like 100 topics or something list, which can be quite informative.
Okay.
So, you know, it's worthwhile that type of approach.
It's probably fair to say that I'm a little bit scared when you say 1,000 topics.
No, not topics, 1,000 or
documents. Okay. So that we can try.
But, you know, I mean, you could get somewhere between, say, 50 and 100 topics. I mean, easily, like, given how much data you have, right?
And then later aggregate it again.
Granular, right? Like, what exactly they are talking about when they talk about ecology, right? Yeah.
I'm going to say yes, absolutely.
That's a great number.
I have very high hopes that this step number 2 is sort of hopefully doing what you mean anyway. There may be overlap in that task, but I like the suggestion. first one. This is a table. Tell you the truth, we sort of right now hide it in the online appendix, and Frank doesn't like that it's hidden in the online appendix. I sort of feel like there's something in it, and I'm going to be talking to you about it, even though I'm pretty sure that I will not find the right words. There's something in this that basically says, well, if this is sort of the vocabulary that the users use in their queries, and this over here is the vocabulary that sort of the AI tool spits out. And those frequencies are, of course, the denominator is the same, so those frequencies are comparable across the two columns. And there's something in it here, and I don't want to call it an error. I would want to call it a flavor. There's something in it that sort of rings an alarm in my head when I see about, what is the sum of this? 1.5% of the queries using sales, or something like that. But 13% of the answers contain the word sales. Why is that? Not all of those tasks that the AI tool, and this is of course part of the explanation, not all of them are phrased so generically that, oh, analyze the statements, or what's the financial performance of Motai. Not all of them are like this. As you can see, there's actually a whole lot very specific terminology also in the queries. So I keep wondering to what extent this is either a form of standardization or a form of at least giving directions, giving attention to the user on certain line items. That would be, to me at least, fascinating to explore.
Can I ask a question on that?
Absolutely.
That's the slide, which.
I'm sorry.
It's okay. So, I mean, when you say a whole lot, I mean, there's a whole lot of different terms being used on the left, but there's a whole lot of aggregate percentage use of any. I mean, let's.
All right. Oh, the list goes on and on. Yes.
Oh, so it does add up, but none of them. I mean, like sort of like 10 times as. I mean, I know you're making the point that it's much higher per. But it's odd that. I mean, if there's a whole. So it's just that they don't. Although they use a whole bunch of different terms, they don't use them as often somehow in the queries, right? Like it doesn't.
Right. But that's why I sort of greened the sales related things.
Yeah.
Because I would have expected.
Sounds to me, I mean, maybe I missed that. It looks like if I don't, I mean, I guess we're not getting such complete information here, but it seems like that it appears from the information you're providing here that probably the queries are much more often phrasing things in more generalizable terms. And it's just that in the answer, it's useful to say something about the specific aspects of the financial space.
Correct. And my question, that is literally a question, I do not have the answer, is whether this is in any which way, I don't want to call it a bias, but it's giving the answer a direction that may to some extent be justified, to some extent not.
Let me ask you a related thing that I don't think I'll have time to get to it later. You might not. When you're talking, you know, at some points you have this nice demarcation of, is this a certain type of thing? Like, is it information integration versus, you know, awareness versus. From all this incredible amount of data you have and the fact that you can track specific users, think you'd be able to ever assess whether some of the information integration is actually learning, that they're actually learning how to do something better, or is that too hard because of you had someone 10 times, I know you don't have a lot of, you know, if they ask you, would you be able to see if they're doing something differently the 10th time they ask than the first time they ask?
Yeah. So you mentioned the categories, and this is a very imperfect answer to what you're asking in particular, because what I think I hear you ask is whether we can even sort of almost hold the topic constant and see whether within that topic there is learning as the user sort of prompts more often. I don't have that. I have second best only. So zoom back out. These are sort of the user's nth query on the X, and it's sort of densities or frequencies again, if you want, and they're split into these three processing tasks, high-level processing tasks. Right now, we're not making a whole lot out of this, but if you just look at sort of the integration tasks, which are sort of logically last, so to speak, there doesn't seem to be a whole lot going on. That basically remains flat. When it comes to awareness tasks, however, those seem to be a relatively high density at first, but it comes down relatively quickly. And that sort of gets a little bit to learning in the sense of I now know what I want, and I can more directly ask for things that I want to acquire. Okay, it is not holding the topic constant here at all. So it's at a higher level than what I hear you ask me to do. Absolutely.
Kind of on that same topic, just curious if we can think about them replacing sell-side analysts with these interactions. So if you think about, like, if I were to ask a sell-side analyst, is Modi a good investment? I noticed I didn't use operating revenues or anything like that. The analyst may very well respond in like terms.
Yes. You're back here. Yes.
Yeah, so I'm just curious, I don't have any idea if you can catalog, if anybody's catalog, Brad, should I'm looking in the direction of how we use analysts in those interactions, but it'd be kind of cool to see if you map this relative to how those interactions go, and they're using them in the same, the dialogue works in the same way in some sense.
Interaction in sort of a conference call?
Well, I mean, I wouldn't think, I'm not talking about between analysts and CEOs.
Oh, sorry.
I'm talking about like a buy-sider calling a sell-sider saying, is Modi a good investment? And they say something about operating revenues and profits. and so
Okay.
forth. In other words, how is the user of this using it? And if you were to look at and catalog these same interactions, Q&A with an actual analyst and a retail investor, do they look similar to what you're mapping here?
Yeah.
In the same sense.
So here's my limitation and sort of help me think through that. So if we're making the assumption the retail investor has access to the analyst's report, and we can sort of look at the language that's being used in the report, it sort of gets me to this column here. I'm trying, though, with that slide to also say, well, this on its own is less informative than in comparison to what the user is actually asking for. So how would I sort of, in that setting, I love the idea of that benchmarking. I just don't know how to get to my left column.
I don't know either. I'm just, it would be cool if you could actually measure it. I guess in some sense, it's a conceptual benchmark of, do you think this, like, I'm trying to think about how to frame this. I also agree with you. I think this is a cool table. I'm not sure what to do or think about it in that same sense, but I was just thinking about your original Modi question.
Yeah.
And if your question is, how do they actually use generative AI? Is it a substitute for these analysts? And I'm just asking the same side of questions that.
So let's call it abnormal narrative. Bear with me for a second. So imagine we can still sort of observe what we're observing in terms of query, but we're sort of objectivizing, we form a model, so to speak. We're objectivizing the answer by using an analyst report. Is that what you're asking me to do? And then compare those frequencies to what the typical analyst report for that very firm that we're asking for would now say at this point in time. Is that a benchmarking exercise that would?
Yeah.
I take the yes.
Go for it.
Frank, in the interest of time, since we're not going to 5:15 as printed in the program.
We're not?
No, we're not.
But we've been discussing this.
I know. So you might want to just.
One more.
Yeah, well, I was just wondering, like, how often they're just asking unsophisticated big things. If my mom were to ask this, she'd be like, how much money does Apple make?
Yes.
And that's not an accounting term, right? Like, I mean,
Right.
like money, that's not on the balance.
And it would come up with a sales number.
Yeah.
Right? Or something like that. Yes.
Just wondering if that is part of the disconnect there.
It may very well be. And I hope I said that it's a very generic query and it gives a specific answer. The question is all of that specificity warranted?
I guess I'm just wondering if you can search for those terms and look and quantify them. Like, I don't know how
I
you
can
say
put
that
them,
in Chinese, like what those kind of, like, how much money did they make?
Neither do I.
It would be pretty interesting. Yeah.
All right, so let me move on through a couple of more task identification. I think it works slightly differently, but at the end of the day, we also get, and that's again important for the interpretation later, we get to queries that are not mutually exclusive in terms of how we categorize them into tasks. And those tasks, we further subcategorize Phil's question into awareness acquisition and integration of information. This is giving you a flavor, yet again, for what those tasks and what those categories contain. And this is an example query into each of those, but I've sort of took the liberty to shorten it, to abbreviate this a little bit, right? But it gives you a flavor of, okay, on average, not the chart that I've shown you earlier, sorry, but the awareness tasks, roughly 45% in acquisition tasks, and about 78% in integration tasks, so a good bit higher. Which is in a way not surprising, given that if you're sophisticated enough, so to speak, to use an AI tool for your stock investment, then you probably have a better sense of what you're doing compared to others. This is, sorry?
Can I ask a question on this slide?
Yes.
Okay. So one, I mean, I love the awareness acquisition integration.
Why?
But I'm curious if you can bring in a different perspective as well, and this might speak a little bit to the separation of where your questions don't have as many specific comments as the answers do. And what I would guess is that many of these are general and many of them are very specific. And could that be related to the situation of task or user?
Yes.
So is there a way to even see split in terms of queries that show that they have very specific knowledge, specific goals? It's along the lines of these tasks.
Yes.
Specific, versus those that are more general, and that gets a little bit at what is their original sophistication? Does that have any relation to future querying activities or depth of focus on
Yes.
companies? So that might be another separation that would be.
Yes, and I like it. The only thing I cannot do is sort of contemporaneously, because you're basically forcing me to sort of align those two numbers at the same time, right? So, but I agree with you. I can do this once. We can do this once, and then we can move out and see what happens later during a user's life on that platform. Absolutely. All right, so this is how we're using those tasks. And of course, one of the descriptively most interesting things that we can do is highlighted here in yellow. We can simply actually go and take a look at sort of what's going on in our tests when we split the cross-section. When we use that variation we have in terms of topics that they're using the AI platform for, and in terms of tasks. And then there's a couple of other things that, honestly, to me at least, we're still underutilizing, and that is this dichotomy of there's a general query, a specific answer, versus there's a specific query and a specific answer. There's also some other things that I think are really cool. As I said, feedback. We're going to see a little bit of an association model there for that as well. So one of the items that I think are pretty consistent also with my answer to Phil from earlier, that is, if we forget the processing task and the sequencing underlying this, this is simply basically just trying to plot what is the incidence rate of general questions, and then again, specific answer versus a specific question right away. And you see that there is a little bit of, wow, learning is such a strong word here, but there's a little bit of a progression going on in that the likelihood of having a user at his very first prompt asking something like, oh, give me a recommendation for a stock is a whole lot higher as compared to a user that has been using the platform 20 times. Plot during the day. I think this is all relatively normal, but it's also sort of intraday, so to speak, a little bit consistent with what I have just said. And that is, again, I'm not going to make too much of those densities, but overall, you see the general questions coming a little bit earlier in the day. At least there's a higher likelihood of that happening. And then it sort of flips, and the specific ones come during sort of the course of the day. And sort of a very similar pattern comes out when we're looking at these awareness tasks. Right? Awareness tasks, all else equal, scanning for news, things like that. That comes relatively early during the day and not so much after trading has ceased. All right, so let me walk you through a couple of the associations before I yet again turn to the things that I like more. Poisson regression that simply says, what are the specific queries, count them up, that's the dependent variable, and we simply use the cross-section of firms and do effectively something like a determinants model. This is how this would look like. I tried to color code it up for us a little bit. Some of the variables that we're feeding in, some of those proxies seem to come out relatively consistently. However, let me start from the leftmost column. That's sort of the main thing, right? Where we feed the entire sample in. We're just counting up indiscriminately. We're counting up the number of queries as the dependent variable. What you see towards the right is then already splitting it up in topics. So think of this as main result on the far left, and then topic-specific results, topic-specific dependent variables, so to speak, come further to the right. There's a little bit of a, let's say, weird association with the sales volatility when it comes to production. But other than this, those 4 variables that you see highlighted in green, they seem to stack up relatively normally. Having said that, one of the things that we also here try to do later becomes even more important is when we try to control for sort of media in particular. Here, as I said, no, relatively harmless. This will become a whole lot, let's say, more influential for our regression results in one of the next tables. All right, and then here we try to simply use the variation in tasks where we have a whole lot more, let's say, causal analysis or summarization tasks for firms with relatively high leverage, and so on and so forth, right? So this is sort of our, if you want, almost quasi-forensic exercise into the data. Then we do these event-driven designs, where we effectively just do this on a firm day basis, and we dummy out these important events. There's a little bit of an institutional hiccup, if you want, when it comes to these earnings announcements. The Chinese setting, the earnings announcement, and we try to verify this also empirically. Think of what we call an earnings announcement, which sort of seems to be the standard term, but think of this as a 10Q filing. Okay, so this is commonly the first instance where we learn about the earnings. Everything else, like what we call an earnings announcement in the US or an earnings call, that would be a voluntary exercise whose incidence rate is less than 1/3 of what we're finding here, also compared to prior literature. Then we dummy up days of management forecasts. Key feature here, those would be voluntary. The others are not. And then we control out analyst reports and media incidences as well. So here's where media plays a much, much bigger role. So let me start from the left again, where we have the indiscriminate sum of all of the query numbers as a dependent variable. And so one of the things that I want you to get out from just looking at columns 1 and 2 is, as soon as we put media in as a control, coverage if you want, then those coefficients on the dummy variables for our disclosure events become a whole lot weaker, which is of course not very surprising at all, because we're not controlling for the content of that media coverage at all, right? So they may very well cover the exact same events. Very likely they will. So we're trying to sort of get to a notion of, if you want, I do not like the word abnormal, but be above and beyond query volume. Okay. Oh, sorry. Please.
Yeah, so Frank, I was thinking about, it's good to know what kind of question you must ask, but can we inform them what type of question they should ask? Like it's going back to a learning perspective. So I was going back to Lisa's example. So let's say I ask about multi, and the GPT tell me, or the general AI tell me it's about government, regulation, blah, blah. And then my second question is related to the answer from AI. And I ask a third question, and the question is related to the answer from AI. So can you see this kind of content similarity between the following question and the answer provided by AI to measure the informativeness of this?
That's similar to Phil's question also, right? Sort of try to see, let's say, what did you say, learning within a given topic.
You said, can you redo the test to show if you ask more informative question, you have a learning and you have a more of a, you know, around this earnings announcement, blah, blah, blah. So
I like it. So we are sophisticated. We become sophisticated. Sure. Please.
Justin, I was wondering whether you can do the following, maybe helpful a little bit. So here is actually condition on the firm event. You look at the DC retail investor query. Have you looked at the opposite to see the abnormal search query actually predicted some events? Because I was thinking like most of these a lot of these retail investors, then they may have some private information collected wisdom. Right, so I remember like Mark Lamb presented this paper like shadow breaches to look at the abnormal search activity to predict certain things.
Okay.
Yeah, so I was wondering.
So still not controlling for content. You're not asking me to do that, right? Because I wouldn't know how to do that. But you're asking me for basically just create a model that sort of like a benchmark, creates a benchmark for how much query volume is normal.
Or just to look at, for example, here you are saying that what we learn from this retail investor search activity. I was trying to say whether it can provide some implication to the capital market or some to predict some firm events from their abnormal search queries.
I'm going to say yes. All right, so here's a sort of already a first foray into what Christian was talking about, and that is to say,
question.
Absolutely.
Why is this descriptive? Go back to table 4.
Sorry?
You couch your results as being incredibly descriptive.
Yes.
You go back to table 4.
Yes.
Why is this descriptive? Why aren't you like conducting the ideal experiment where you ask whether or not users are going to ask questions in response to management forecasts so that we understand whether or not.
So as an event?
Yeah.
And then basically see what the queries are all about?
Yeah, why is this descriptive?
Well, the way that this is set up is descriptive. I think you're asking me to do something totally different.
No, I'm not. I'm saying that you're over, I mean, basically what you're doing is you're providing people with information events, and then you're recording sort of how they respond to those information events. Your research question is sort of how do users, articulate, use Gen AI to try and better understand information.
Right.
And providing pretty strong evidence on that point. And I think a lot of these things are, a lot of these things could be
tighter.
You could just describe them more like, I find that people look for financial information. I find that people look for business outlook information. I think that this is, in a lot of ways, what you're doing here is, fits into what you would do in a laboratory, setting much more. Essentially what I'm saying is, I'm trying to be a little bit funny. I think you're underselling.
Yes. I heard that. I'm a conservative nature.
I sort of thought you would pick up on it because you're like responding to every comment with a joke. So I thought
You might as well throw that at me too.
I thought that this was, sort of very interesting. And then the one thought that I had was that, and you talk a little about this in the paper, but your management forecast results are generally sort of larger in magnitude than your earnings announcement results. Situations, they're insignificant. You could sort of tighten your fixed effect structure, like where you use a firm of fixed effect times quarter, because I think that would, give you much tighter standard errors and potentially enable you, because it can be a little bit awkward to sort of discuss, like, I have a 0.285 coefficient that's insignificant, and I have a 0.1 significant. But so just a thought.
Okay. Two earnings announcements in our sample period per firm, right?
Yeah. Okay.
So Christian already pointed to this, that we are sort of trying to take a slightly closer look at these management forecasts. And the reason for that is not necessarily in the differential coefficient magnitude. The reason for that is that those are voluntary and there's a whole lot more degrees of freedom of what they are talking about, right? So the firm designs this disclosure, has a lot more degrees of freedom in this design. And then it's a question a little bit about how this is then associated with query volume. And so first, if of course there is a management forecast coming out that is positive, we see a higher incidence of specific queries about this firm. Maybe not too surprising. What was surprising then is that this is to some extent then hollowed out. So I come out with positive news, but my management forecasts, and in this case, it's sort of a relative measure, covers actually more topics than the sample median. So we have about 7, at least in the mean, topics being covered. If I cover more than that and think about it this way, then query volume is actually, if at all, conditionally decreasing. The same goes for if I use more words, more than the 358 on average. If I make my management forecast longer, that again sort of decreases the query volume on my firm on that day. And then down to topics, right? So what do I need to talk about, so to speak? In particular, what do I need to talk about quite specifically in my management forecast in order to, I don't want to say preempt, but in order to inform my investors better? And so here's basically a topics matching going on where we have the same topics on the management forecast versus on the queries and answers. And we basically just see out of those 4 that are left over, because 6, there's basically no variation in those other 2, business outlook, production, product and technology, and competition. What we see is, at least in 3 out of those 4, it seems to be the case that if I talk specifically about, let's say, my production more in my management forecast, then effectively there's nothing special about query volume anymore on that day. So in other words, a firm can structure the disclosures in such a way that for these types of users, at least, they will not make special inquiries about this very topic on the AI platform. Then when it comes to sort of the answer level, a little bit of background, this JQFA paper, Jones et al., they're sort of doing this, couching this in terms of also within retail investors. Large retail investors seem to be capable of predicting future returns. Small retail investors do not. And some of their tests are trying to trace this failure of small investors to them effectively being agnostic about public information. So this is sort of where we try to come in as well. We have the signal alignment variable where we match basically the signal embedded in the AI answer with a future 7-day stock return. And so think of this as all categorized in 3 categories. This will not come out in sort of tercile way. It's not ranked. We only do within industry rank on the return, but the classification on the AI answer is not in any which way. So it's just basically given by the LLM. And then the alignment would basically equal to 1 if sort of the signal content would equal the return tercile. So we're using this as one of the, let's say, main variables in this, where we basically try to say, is the feedback, again, answer level now, right? Is the feedback that I give to the answer right away, and the feedback could be thumbs up, thumbs down. It could be that I'm sharing this answer via a link, or that I'm copying this answer. Is that in any which way aligned with this, associated with this signal alignment variable, right? So in other words, how good is my immediately after reading the answer assessment of sort of how, basically it's perceived usefulness, if you want, okay? And then we also throw in a bunch of language attributes and some answer informativeness controls as well. So this is just the raw incidences, if you want. I wanted to show them simply because I don't want to overclaim things again. All of those incidences you see in table 7a, those means for the thumbs up, thumbs down, share, copy for those feedbacks is all times 100. And the vast majority is we're copying the answer. So when we later aggregate this to positive feedback, copying is the by far dominant force. So what we see when we have sort of the disaggregation of the 4 types of reactions is that for some of them at least, the signal alignment comes out significantly positive, as we thought it would. But the rest of those variables seem to be very much a mixed bag, if you ask me.
Right?
Please.
So, did you check whether signal alignment predicts the propensity of a user to come back?
No.
That seems like very positive feedback. Because most of your users are tried it once but didn't like it.
The
40% of the users?
Sorry?
Go ahead.
So not exactly in the sense that you said. So my no stance, I'm going to soften the blow a little bit for you. And that would be when we split our user base into users that do come back. So conditional on that, we see a positive coefficient with the number of future queries that those continuing users will have. Okay? But again, it's not a 0-1 that you were asking me to do, because the 0-1 is effectively modeling which panel of table 8 are you falling into. These are all the ones. They're conditional on their coming back for a second or third or whatever time. The ones that don't come back look a whole lot different. Okay, the ones that don't come back, for them, to us at least, they just seem to be curious, right? They're curious, they're trying it out, they'll never come back. Because there's effectively, forget the little bit of green here, there is effectively no association, no discernible association. Please, John.
Frank, I find these tests 7 and 8, table 7 and 8 to be really interesting, capturing the usefulness. So basically showing these variables have some explanatory power for perceived usefulness. The question that leads me to next ask is, what drives these answer attributes? Now, I know you have some variance decomposition to the paper. I wonder if you thought about doing more on that front to explain what's driving the variation of these attributes. In particular, is it variation or attributes of the queries that are driving them? Because if so, then you can almost give like a manual to like, here's how.
I like it.
Okay, great.
How to query better.
Yeah.
Yes.
So, okay.
Full stop. I like it. Full stop. Yes, thank you. I've shown you this already, and really for 8B, 8B is sort of the benchmark, right? If I were a reader of this paper, I would start reading 8B first, look at that first, and then look at 8A and be surprised that nothing loads, right? But here we see a whole lot that for us makes sense. If the sentiment is good, we're more likely to come back. In terms of future queries, numbers is higher. If we don't like the answer too much simply because it comes across as lengthy, as not very, let's say, digestible, then we're less likely to come back. The number of future queries is lower. Stock market associations. So one of the first things that we try to do is then to say, okay, what is the overall effect of this query volume about a specific firm on certain trading outcomes? And for now, trading outcomes in the sense of liquidity. I'll show you some returns test in a second as well. And two caveats already marked red, so to speak. This is association of aggregate query activity over on the right versus aggregate trading outcomes over on the left. I told you, Chinese setting, one of the advantages is more likely that the outcomes are driven by retail, given their high proportion of trades on this given day. But more likely doesn't mean we can be sure. We have no data on individual investors' trades. We have no data on the AI users' individual trades. And also, to be fair, some of our control variables, which include sort of the question activity on the platforms that I've mentioned earlier, or some investor search activity in the aggregate, they're control variables, but we do not know what they're learning through these other search activities. Okay, absolutely not. So this is sort of the first foray into this piece.
Over here.
A little bit more intuition.
Oh my.
Oh, sorry, can you hear me? Hi. So I loved informed trading. I guess I don't really understand why asking about a firm's sales manifests in any sort of adverse selection. The measures that we're using, like VPIN, that essentially capturing like order flow toxicity. Like, why would that be the case? And what side of liquidity provision are your users supporting?
Why are you making a specific assumption about what the query is about as opposed to a generic signal of interest in the stock?
I suppose my takeaway with how the paper's written is that the AI usage with the platform and asking about these firms is associated with increasing form trading.
Mm-hmm.
And I guess I'm asking, what is how does that happen?
I think you're, I don't know whether I should say this, I'm going to do it anyway. I think you're thinking too deeply. My first answer early was see this as a generic signal of interest where there's basically private information augmented by the information spat out by the AI tool. All else equal, I would say there should be more informed trading than with a lower query volume. But what you have in mind is I ask a very specific question about something that I could look up even somewhere else. Why is that making me more informed? So it's a channel question and it's a topic question, and I cannot answer it.
Oh, wait, I think this might be a setting where you really do want to stick with the descriptor. There is like a, that an unsophisticated user asking this question is correlated with a sophisticated user doing something else.
He wobbles.
Just on, you showed earlier that like most traffic, this all occurs when there's some attention drawn to this because there was more returns, there's some announcement, etc. So it seems a lot that retail investors go by, there's a big attention event. So I go there and then I look for information, but that information is all public. So it's really not clear that they, and we heard it before, like they should actually trade less typically. So it's not clear that any of that activity is so much in the interest. But in that sense, I was wondering whether you could exploit the answers a little bit more, because I do think some of the LLMs are trained to not give a direct answer to your question of so should I buy or not?
Yes.
So looking into this a little bit more, what does this align with? Is this really trained more on all the stock talk that you have on the internet? Because there's lots of text on that, and there's fewer textbooks like the few papers by Pharma, which would say if it's trained on that, better just invest into the S&P.
Or in line even with the earlier suggestion, right? Conditional on the event, what is it exactly that they're asking for?
Yeah, and then in your case, this time also, because you don't just have the questions, as Christian pointed out, you also have the answers. And so that's a nice one where you could see what do they actually say, and what does that align with? Do they get very specific? Do they give, like, similar to Mike's question or suggestion before, do they give you just a rundown of those are typical proxies to look or ratios to look for? So how specific do they get? Because if from our theory and from what we know about the market, we should know, like, the more specific it goes with, like, yeah, you should definitely buy it. You should be very careful about that. And so it's a question on what it's trained on and whether there is actually boundaries to this. So that just descriptively, because you can look into the text, and then maybe you could even do what you had before with your alignment, just as a simple trading strategy. Do we on average actually get something out of this when they ask about it or not? Typically, we would expect they're underperforming as a portfolio if you sort by that sentiment relative to just holding the market. So going for the specific stocks versus holding the market. If you can do anything along those lines, that's not clear, but definitely you can look at the answers. And so seeing what type of knowledge it confirms with the stuff we see on Reddit or the stuff we teach in the finance courses. And so that would be quite interesting.
Thank you.
Thank you. 2 minutes.
Yes. All right. So then let me show you 2 more results because I made the slides and I want you to take them home with you. The first one is there is a good bit stronger effect if we immediately give positive feedback ratio. If we give more positive feedback on the answers in the aggregate, then there is a stronger effect on those liquidity measures that we have. And then last but not least, I want to show you a graph that basically says these are what we call the simulated returns, where we naively just do what the AI platform tells us to do. So these are the overall indiscriminate all answers, so to speak. What are sort of the cumulative abnormal returns? And those are event-based, right? So they're leading up to the next earnings announcement. If we do this 4 weeks ahead of time, we're querying about this firm, and we now listen to the AI and do follow their recommendation. We buy it when they say you buy, we sell it when they say you sell. we're getting to this return that you see over here as the first data point. So basically, you make money, but only if you do the exact opposite of what the thing tells you to do. However, and this is where it becomes really interesting over the course of time, but also across tasks. If you know what you're doing, and some of you have already alluded to this, if I ask this thing to specifically do something along the lines of FSA, a financial statement analysis, those returns look a whole lot different. So we can split those returns on these simulated trading strategies relatively easily by task. And so this is the last picture I will show you on this. If you sort of try to do any sort of trend prediction with that, and it may very well be because it's not trained to do this properly, then the returns are actually abysmally bad. Okay. Last but not least, this is the last chart that I wanted to show you, and it's sort of consistent a little bit with sort of an incremental effect of feedback on the liquidity measures. So here we also see, in my world at least, a totally different abnormal return on answers that received a positive feedback. And by positive, it's copy, share, or thumbs up. Okay, very different picture. Last but not least, I know I couldn't satisfy everybody, and still, this is what we try to do. Descriptive exploratory evidence. We got a lot of feedback in terms of what else we could do to enrich this, hopefully also to make this a little bit more relevant for your own work going forward. I hope what you got out of this is not exactly this long list of items, but what you got out of this is hopefully an idea how you could advance your research here based on these results. And with that, thank you very much for all of your interest, your comments, your suggestions. Thank you. Thank you.